this in developed markets. Why isn't this actually the cure to a lot of those problems?
It could be. I don't think 3% inflation is disastrous for the economy, and I don't think 4.5% policy rates are disastrous for the economy either. It's just that the two go hand in hand.
Do the threats to independence right now make it harder to reduce interest rates?
That could be the case. I think most of the Fed is probably just focused on its job. And again, I mean, instead of thinking about that, I think it's easier to just think about the fundamentals. And I don't see the fundamentals on inflation right now supporting rate cuts. So the idea would be, okay, we had these April tariffs. There's views from the Fed, like New York Fed President Williams, saying just the April tariffs could continue to affect inflation into early next year. Now you have this additional round in August. When does that fully play out in prices? Is that the middle of next year? At what point do we stop saying this is a
more concerned about the inflation aspect, and that's something that they should combat more. I'm talking about the Federal Reserve. I just wonder what you're looking at in particular. Is it the ramification from the One Big Beautiful Bill and the stimulus effects of that? Is it the Industrial Revolution 2.0, where you're seeing a huge capital expenditure influx in corporate America? What exactly gives you that faith that there will be that strength on an ongoing basis, even in the face of inflation?
Right, so I should clarify what I said about the labor market. Our view is that job growth is slowing down, but we see that more as a supply story rather than a demand story. So there is some slowdown there, and that'll affect labor income as well. But what makes us feel better just in the last few weeks is the pickup in consumer spending, because ultimately there's this chicken and egg relationship between job growth and spending. So if you look at the July data, well, June retail sales were somewhat strong. Maybe a lot of that was inflation. You look at July, you had a very good Prime Day, and air travel has really picked up in July as well. So the consumer seems to have rebounded a bit going into the third quarter.
You said something about the supply side of the story,
Yep.
and I thought that it was really interesting. Pantheon Macroeconomics put out a piece challenging the idea that there was this huge exodus of immigrants, particularly illegal immigrants in this country. And they said the actual state-by-state data does not back this up. And in fact, in a lot of the areas that are most sensitive to this workforce, you are not seeing declines in the labor market. Are you seeing more evidence that there is actually that exodus that some people talk about, that really everyone's been surprised that the market's held up as well as it has?
So two things to say about that. I haven't seen the notes, so I can't comment on the details. But again, if you look at the bigger picture data, the best indicators of the balance between supply and demand in the labor market are the unemployment rate and the V by U ratios, vacancies to unemployed workers. And both of those have been flat for a year, even though job growth has been somewhat tepid. So that suggests a supply story, right? And then the other thing to keep track of is that some of these measures have recently been green-lighted by the court. So you could see a bigger slowdown starting even in the next jobs report.
This is the call for 25.
Yep.
No cuts.
Yep.
Have you established one for 26 yet?
Yes.
What is it now?
We think they'll cut by about 100 basis points next year, but there's a lot of risk around that number.
Just help me
right?
understand the 100.
Yep.
Where does the 100 come from? Is that because there's a new Fed chair?
That's part of the story.
So you believe it's just the individual. That's what matters here, not the economic backdrop.
It's part of the story, but I think by late 26, you're also going to have a little more confidence on inflation, right? So right now, the Fed is sitting there and thinking, okay, we really don't know. I mean, what they said in April was, let's get some clarity on the tariff picture, and then we can move. Going into the July meeting, they're not going to have that clarity because the April 1st deadline is 2 days later. I don't even know if they'll have clarity on the economic impact by the end of this year. But presumably in the second half of next year, they'll know more.
So transitory is 12 months.
You
cleared that up eventually.
I think that we have a good understanding. Transitory is the end of 2026, and then they can make a judgment.
Aditya, good to see you. Aditya Bava there, Bank of America. This is part of the call for next year. It's not just about the economics, it's about the politics. It's the individual that's chosen to lead the Federal Reserve.
So at this point, you could say that there is a political sheen to the Federal Reserve. You can make the argument there always has been. This isn't new, but it really shows how this is moving markets in a significant way and expectations even before Fed Chair Jay Powell departs.
I wonder if the president's conditioned by his last pick, which was Chairman Powell. That was the sensible pick at the time, go with someone on the committee, elevate them, and whether that holds back the president from selecting Governor Waller at a time when a lot of people on Wall Street would like to see Governor Waller become the next Fed chair.
Well, evidently he's got some regional Fed presidents to choose
are
from.
they?
So, let's get our trees out and start thinking about that.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Coming up in the next 30 minutes or so, don't miss this conversation. Anne-Marie catching up with the Commerce Secretary, Howard Lutnick, in Washington, D.C., following a trade agreement between the United States and China. A deal struck overnight that's unleashed quite a rally in Japan and a decent rally stateside too. From New York City this morning, good morning and welcome to the program. Equity futures positive by 0.4%, a 2-day winning streak into Wednesday, all-time highs. On the Nasdaq, up 0.1%. The next stop for this market, Alphabet and Tesla, after the closing bell. Check out fixed income, 2-year, 10-year, 30-year, 10-year bond yields falling for 5 consecutive sessions coming into today. Yields rising today by 2 basis points, 4.36 on a 30-year, up by a basis point or 2 to 4.93. Dragged higher by this, Japan. Japanese bond yields higher by 5 basis points at the long end of the curve, make it 8 basis points at the ultra long end of the curve. The conversation about Japanese debt, this isn't about the trade agreement, it's about the future of the Prime Minister, and a messy debt auction.
There is a rumor, it has been reported by local media, that Prime Minister Shiba is going to resign, is going to step down after the disastrous election for him and his loss of popularity. Who gets in that seat? Is it somebody who wants to cut taxes in the face of higher debt spending and concerns about a slowdown? That is not what bond vigilantes want to hear, and they are protesting this morning.
Protesting this morning, and maybe that bleeds over to the United States at exactly the wrong time.
Well, this to me is really the question. Do we have a bond vigilante issue on our hand, or don't we? Are they on the sidelines, or do people, actually really like the income and they're going to come into these developed markets regardless? And that is one of the big conundrums heading into 2026, the remainder of this year, simply because yields are high, but then people say, okay, but we want them. And we hear that from Bob Michael all the time.
I was thinking of Bob, exactly.
Exactly.
That's who was in my mind earlier this week. Bob Michael of JP Morgan Asset Management, who just talked about this wall of money coming into fixed income. That's the global debt market. With 60 minutes until the opening bell, let's get you some morning movers. We can catch up with Yahara for that. Hey, Yahara.
Hi, John. We start with the toy and game maker Hasbro. Shares are now down 4.4% because apparently good is not good enough. The company gave a strong second quarter and said that it's boosting its full year's outlook. The company cited ongoing cost cuts and saying that it had record results in its Wizards of the Coast unit, which I just learned makes the games like Dungeons and Dragons. Analysts say that the quarter beat even bullish expectations, with JP Morgan calling the updated forecast conservative, yet shares are still lower. Next up, we have the auto stocks. They are having a bit of a relief rally here after the U.S., of course, struck a trade deal with Japan, with tariffs not as bad at 15%. But the reason Stellantis is rising so much, 6.5%, is it imports a significant portion of the vehicles it sells in the U.S. from overseas. And what this U.S.-Japan trade deal does is it provides some clarity for the automakers, and some analysts say it could be a blueprint for any EU-U.S. deal. And we're starting to see the knock-on effects from Texas Instruments' weak outlook. Take a look at ON Semiconductor, NXP, all falling since, like Texas Instruments, they make chips for the auto and industrial sectors. The worry here is what Texas Instruments has to say, that it still sees no signs of recovery in the auto sector, and it doesn't know how much of a pull forward, as we've been talking about, due to tariffs contributed to those strong results it saw in the second quarter and what it means moving forward. John?
Yahara, thank you. I think a question this morning for the equity market. What do you believe in more? The sell-off in Texas Instruments or the rally in global automakers?
Put perfectly. Do you sort of hinge your bets on the ability to plan for the future, or the reality that in the near term, we've already brought forward so much of that demand? So it's going to be maybe tepid for the next 6 months.
Some interesting movers for you this morning. More interesting ones after the closing bell. We'll hear from Alphabet and we'll hear from Tesla. Let's turn back to fixed income. The US 10-year Treasury yield rising on weaker safe haven demand as US strikes a trade deal with Japan. Joining us now is Lisa Hornby of Schroders, who writes the following: the curve has moved a long way and could be due for a pause. Lisa, good morning.
Hi.
It's good to see you. That trade agreement with the US and Japan, is that good or bad for bonds?
That's an interesting question. By itself, I guess you could say it potentially maybe is bad for bonds. I mean, yields are moving up higher. I think the bigger picture is that yields in Japan are moving higher. And so we're in a global world. And I think you have to think about, if yields elsewhere are moving higher, that potentially reduces the demand from overseas investors for U.S. fixed income. Now, I'll note, everybody was super bearish on demand for U.S. fixed income a few months back. Nobody wanted anything in the U.S. We'd see a buyer strike. The tick data has showed, and other data has showed, that that's not happening. But sure, higher yields abroad potentially reduces some incremental demand for the U.S.
You took it to Japan, so let's stay there.
You took it to Japan.
The move in Japan, is that because of what we've seen with the trade agreement, or is that because of what might happen with the Japanese Prime Minister and what happened with the debt auction?
I think it's a combination of things. I think it also potentially moves policy back towards maybe a more hawkish position than it would have been outside of a trade deal. So I think the confluence of factors suggests bond yields in Japan can continue the rise that they were doing previous to this last couple of months.
There is this dynamic that seems to be evolving where investors are getting skittish about the unwillingness of governments to pay their debts. Mm-hmm. And we've seen this in the United Kingdom, we've seen this on the margins in the United States, and we certainly are seeing that in Japan. How far does that go, right? Because at a certain point, if people are getting income that they haven't gotten in the past decade, they're going to like it, akin to what Bob Michael of JP Morgan Asset Management keeps saying.
I mean, I was listening to your comments before, and I think this is an amazing time in bond markets, right? It's probably the first time, maybe not the first, the last couple of years, it's been exciting to be a fixed income manager because we have income, we have yield. You know, you can buy relatively safe, high quality assets and produce a significant amount of income over the next several years. You also have the potential for capital appreciation. Eventually, we'll enter a cutting cycle. I heard your previous guest, you know, maybe it's next year, maybe it's at the end of this year, but at some point, rates will be coming down, and then you have capital appreciation. So I think it's an amazing environment. I'm less concerned about the inability to pay debts. I do think curves generally, longer term, are biased towards steepeners because there does need to be more term premium. And I think a good degree of that is reflected in the immediate present. I think a lot of people are positioned in curve steepeners. I think we've had a lot of the bad news with regards to deficits and how big they are. So I do think there could be a tactical pause there. But longer term, yes, I think you need to embed some higher inflation risk premium. I think you need to embed some higher, you need to demand a little bit more yield to buy the long end. And I think broadly, that's what we've seen in markets.
You know, I remember 2 years ago, people would have said that when we got yields at this level, there would be people who would say, why should I own stocks? I'm going to go into bonds. I'm going to get that income. You're not hearing that as much anymore. Now people are saying it's an inflationary environment. You're pegged to this sort of industrial revolution, the AI outcropping. I mean, at what point do you start to see stock investors go into bond investors, or is that relationship just totally broken down?
I think it's broken for the moment until we have some sort of correction. And corrections are natural. We forget that they exist, but they will exist again. And I think it's at that point that we see this rotation into bonds. I mean, look, we're saying bonds are unloved, and yet every corporate deal that comes to market recently is multiple times oversubscribed, you know, 5, 6, 7 times oversubscribed. Compare that to history, it's probably closer to 3. So we're seeing a lot of demand, even, you know, as people are saying, oh, we're worried about bonds. Certainly the retail market might be worried about bonds, and we're seeing that in the municipal bond market. But I think broadly, there's a ton of demand out there, and that's what's supporting credit spreads, for example, at the very, very tight end of their historical range.
High yield spreads 280 right now, south of 300 basis points, super, super tight.
Yeah, but people see further spread tightening going forward just because companies are doing really well, they're adapting and adjusting, and consumers are still spending. So there you go.
We're moving on, Lisa. It's all over. Moving on to 26 and 27. I find that amazing when 25 is still not settled, that we're moving on to 26 and 27.
Well, it raises the prospect that we've priced in certainty and we've priced in strength before it's happened. And so at what point, again, do you buy the rumor, sell the news? How much are we creating tops that look pretty perilous where they are? And that's, I think, what Julian Emanuel was talking about for a moment that he wants to buy.
Buying the recovery to the slowdown we haven't had yet, which is always a confusing one anyway. Lisa Hornby, it's good to see you.
It's great to see you.
Thanks for dropping by. I appreciate it. Lisa Hornby there of Schroders. Let's get you an update on stories worldwide. We can do that with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. President Trump announced a trade deal with Japan. The agreement imposes a 15% tariff on imports and creates a $550 billion fund to make investments in the U.S. Japan also agreed to buy 100 Boeing aircraft, boost rice purchases, and increase defense spending with U.S. firms. Meanwhile, Microsoft is accusing Chinese state-sponsored hackers of exploiting flaws in its SharePoint software in a hacking campaign. China responding, saying the country opposes cybercrime, but also opposes smearing others without solid evidence. And Morgan Stanley is being investigated by the Financial Industry Regulatory Authority, known as FINRA, over its vetting of clients for the risk of money laundering. The Wall Street Journal reporting the investigation is focused on clients, risk ranking, and other practices. The bank has been working on fixing its client screening practices after the Federal Reserve for years raised concerns. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. So up next on the programme, a must-watch conversation. The US Commerce Secretary Howard Lutnick sitting down with Anne-Marie following an agreement between the United States and Japan, unleashing a big rally worldwide.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
For Japan for reciprocal tariffs for autos. That is a different kind of deal, but because the Japanese proposed a very innovative solution. We've been working with them for months, the trade team, myself, Ambassador Greer, Secretary Lutnick, and they came to us with the idea of a Japan-U.S. partnership.
Some good news. We're making some progress. That was the Treasury Secretary Scott Bessent speaking to Bloomberg Surveillance a little bit earlier on this morning. Signs of progress are moving this market. Equity futures positive by 1/3 on the S&P. On the Nasdaq, up by 1/10%. It's our top story so far this morning. President Donald Trump reaching a deal with Japan, imposing 15% tariffs on imports. Trump also saying Japan will invest $550 billion into the U.S. Anne-Marie joins us now with a special guest. Hey, Anne-Marie.
Good morning, Jonathan. That's right. I'm with another negotiator that was at that table with the president last night, Commerce Secretary Howard Lutnick. I want to pick up on this idea, and good morning. Thanks for joining us. I want to pick up this idea of innovative financing mechanisms and this $550 billion fund the Japanese are going to be investing into. What exactly is that fund going to look like?
So the Japanese are going to give America the ability to choose the projects, decide the projects, and execute the projects. So let's say we want to build generic pharmaceuticals, right? We don't make antibiotics in America. So the president says, let's go make antibiotics in America. The Japanese will finance the project. They will finance the project, and then we'll give it to an operator who'll run it, and the profits will be split 90% to the taxpayers of the United States of America and 10% to the Japanese. So they basically bought down their tariff rate by this commitment of we will back what you, the president, want, and you, America, want to build in America that are key to national security concerns. We'll back that.
I've got the NQ chart up for now.
Prime Minister Ishiba says these are loan
If anyone wants to see the EES, just punch it in chat and I'll move it over.
Equity, loans,
for news,
they have to deliver the project. So we say, let's build
we don't have any news till 10 o'clock, and that's existing home sales. So we're pretty clear to the open.
In America, the Japanese will finance that whole project. They've got to put down equity, loans, whatever they want to do. They have to deliver the $100 billion.
Or Japanese companies.
And then oil inventories at 10:30, and that's about it for today. I mean, you've got later in the
Japanese companies. So what people get confused, this isn't like a Japanese company.
You
like,
got the big
like
companies showing their
Toyota
earnings
coming in and
after
building a factory.
close,
No, that's Toyota. This is
after the
literally
market closes.
America
Hey,
saying we
Letty
wanna
off.
build,
How you doing, my friend?
generic
Good morning.
pharmaceuticals, semiconductors, critical minerals here.
How'd you do yesterday?
Like, what could we think
course
of and
not.
model after this?
That's why you have someone like me who joins the government. I mean, this was my idea in January. So I started, because the Japanese are never going to really open their market the way Donald Trump wants them to open it. I mean, open it. You know, so what happens is they had to come up with another way to really make it work and the tariff model work.
Long trade.
I suggested to them a $400 billion fund where they would give to the president and they would give to America.
Are you still in it?
To go build out your, whatever you think for national security, go build it. We'll back you. And that's the model.
The reports the prime minister, though, may be resigning. Could this deal transcend domestic politics in Japan?
Of course. I mean, it's vital. You saw what happened to their car companies. They were all up more than 10% today. So a 25% tariff delivers what Donald Trump said. Build it in America. A 15% is right on the edge. It's right on the edge. So the Japanese car manufacturers can still produce in Japan. And that's what the Japanese wanted to buy. They wanted to buy that line where they could stay in Japan for some cars, build, of course, huge amounts here, but also what they did is they'll invest and give Donald Trump the tools to invest in America.
That 15% tariff on autos is huge for Japan. Do you see the entire auto tariff, that sectoral tariff, coming down from 25% to 15%? Because for some inputs, this would mean Toyota has a 15% rate, but GM still has a 25% rate.
Well, GM doesn't have a 25%
Looks like we're starting to
rate
lift
unless they
off
build
now.
something
Stochastics are
like
rolling
South
up.
Korea
All right, I'm going to go get some coffee. I got some stuff to set up for work. I'll talk to you in a little bit.
And if you're importing from South Korea, that's a South Korea thing. So Europe is now paying 25%. South Korea is paying 25%. The Japanese have bought, if you will, by giving a huge investment to Donald Trump in America. They bought the ability to be down to 15%, and Donald Trump can then really invest in America on the projects that he thinks are the most important for America. And we'll see what happens with Europe. We'll see what happens with South Korea. But right now, Donald Trump has put the pressure on them. Let's be clear.
Well, is this
He's
a model?
put the pressure on them.
Is this a model for Brussels?
It could be. I mean, that's up to them to negotiate, right? Are they willing to open their market? I don't think anybody. Europe's not going to go and give us $1 trillion to
But can they
invest
get
in
below
America.
15%, or is 15% now the floor?
For autos, I would.
No, for a reciprocal tariff for the European Union.
I don't think
at one
big
point they were willing to
countries-
accept.
I don't
for
think
10%.
big countries can get low like that. I think small countries have a possibility of being low, and that's up to the president to decide. But larger countries will have a hard time with that. They will have a hard time.
So to be clear, with the European Union right now, and the trade negotiations are in Washington, I know you're talking to them every single day, the rate, the floor that they would have to accept is 15%, what Japan accepted.
I think what everybody in the world has seen is Donald Trump. So I'm the table setter, if you will, right? I set the table, right? I organize things, I structure things. There was a picture that the president posted over his shoulder with the big board that, of course, I created the big board and put it there. But the answer is the negotiator-in-chief of the United States of America is sitting behind the desk.
Right.
Donald Trump was sitting there negotiating the deal.
You also created the board on Liberation Day, and we saw the sky-high tariffs. You created last night's board. I'm trying to understand from you what the European board is going to look like. So if, say it's a 15% across-the-board rate, what could the Europeans be buying that can assuage the concerns of the president? Are you talking about LNG purchases? Is there agricultural purchases?
The Europeans have a $20 trillion economy, right? We have just under $30 trillion, and the Chinese and the Europeans are similar in size at about $20 trillion. So if they say to the president, we will open our market to you, and I mean really open it, meaning we will take U.S. cars, think of what the Japanese did. They said, we will take U.S. cars based on U.S. standards. So you don't have to make a different car. You can take the car you make in Detroit, put it on a boat, and send it. If the Europeans will accept that, and they will accept really, really accepting U.S. products in Europe, that's a giant. That's hundreds of billions of dollars of export opportunity for Americans. That's going to move the president because he's going to say that opportunity for Americans is so great.
Do you
That's
think you get there next week?
Well, we've been talking about it for months. I mean, holy moly, I can't count.
They're saying they're going to retaliate if they don't get a deal by August 1st.
I understand. Then the president wrote them a letter saying, if you don't get a deal done, we're charging you 30%.
This is all negotiating tactics out in public.
Well, of course it is. I mean, Donald Trump writes a letter and says, if you don't make a deal, it's 30%. And the thing about Donald Trump is he's dead serious. If you don't make a deal, it's 30%. Now, that puts the pressure on them, right, to say, okay, that's my alternative. They want to get a deal done. For sure they want to get a deal done. But does Donald Trump want to get a deal done? How much does he value the fact that they open their market? Do they completely open their market? Because that's what he's looking for. I think they will. I think they will really, really open their market. And I mean open it, which is something the United States of America has never had. The idea that Donald Trump is opening the world's markets for Americans, the ranchers, the fishermen, right, our farmers. I mean, these are amazing opportunities that no one in the world has ever seen. We have Stockholm Syndrome, right? The world has so held us off for so long. We can't even imagine a world where we can export freely the way everybody else exports to us. And that world is coming. That's what Donald Trump calls the golden age. That's what he calls it. Our ability to export to the world the way they treat us, we can now finally treat them.
You're going to have to step away from the Europeans, though, potentially for a moment next week, because I believe you're going to be headed to the Stockholm talks with China.
Yes.
So what we saw with China in this administration, Jensen Huang had a conversation with the president. I imagine you were there when it comes to NVIDIA H20 chips. What did Jensen Huang say to you and the president that gave him the green light to start selling those H20s back into China?
Well, the H20s were open during Biden. So Biden said, really,
well, they
no
were developed during Biden because
but they were sold to China.
Compliant.
They were actually sold to China. And then we came in and we said, whoa, 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 that's a pretty powerful chip. And
April.
And we held that back. And that was then held back. And now we had the whole magnet thing, which is very exciting. We're trying to make sure that magnets are being delivered to our producers, which was the deal. And these have export controls on them. And they'll come off as the Chinese deliver their magnets, then the H20s will come off. But it is logical, since they were free to sell last time, it seems reasonable that we'll get to that point.
But you said they were a powerful chip. Are you concerned about national security issues when it comes to allowing the Chinese now to get their hands on the H20?
Well, the H20 was the third best chip in the world, and now it's the fourth best, right? Because the Blackwell is the best. There's an H200 and H100, so an H20 is the fourth best chip. And I think the president has decided that if things are going well with China, that they can buy them. So I think that decision's been made. We are putting on the licensing mechanism, and we are getting that going. But the president has decided that the Chinese can buy them, but that's in a balanced way, with the Chinese delivering on the deal that we made with them, and they're delivering rare earths to American manufacturers.
So when you sit across from your Chinese counterparts next week, what do you plan to discuss with them? Is loosening export controls, more export controls on the table?
I think what we talk about is there's a line, right? Below the line, we are giant economies. We should trade with each other, right? They want to buy our produce. They want to buy our vegetables, right? They don't grow everything. They don't have the breadbasket of America that we have. So they want to buy those products. And you know what? There's lots of things that they make that we want to buy, that we want inexpensive things on our shelves. So let's talk below the line. Let's open the market better in China and let us sell more things in China. And then at the line where we're competitive, you know, where is that line where above that line, they're not going to sell us their hypersonic missiles, and we're not selling them our best chips. Those two things are not happening because they're a competitor. They are a competitor. And what we're really going to discuss is where's that line? Are the H20s above the line or below the line? That's really nuance, and that's discussion. But of course, would we like to buy baby clothes that are inexpensive? Of course we would. That makes perfect sense. So let's open the market down here, right? We're never opening the market up here. And what do we discuss? We discuss that line of what's over it and what's under it. But do we want more of this? Them selling it to us and us selling it to them? The president and President Xi from China agreed that they would like to do more business there. So we're going to talk about opening their market more for things that make sense to open it, and we're really going to discuss the areas that maybe we should really be addressing. Is that yes or is that no?
One area, I just want to finish on this. I'm curious if you're going to address directly, because it's the Commerce Department. An employee of yours is facing an exit ban right now from China. Do you have any update on this?
It's unbelievable, right? So he has, there was an employee of ours who's a Chinese national who was working in the patent office, and he went home and he was arrested, and they're holding his passport. I mean, so I give that to the State Department, and the State Department deals with that, but it is outrageous behavior. It's just outrageous behavior.
Secretary Lutnick, thank you so much for your time this morning. Of course, Jonathan, Lisa, Commerce Secretary Howard Lutnick has been integral on all these trade deals, especially when it comes to Japan. He says this was his vision, $550 billion when it comes to that fund.
Anne-Marie, appreciate the update. Great work this morning. Fantastic conversations. We've made some progress. The market, as always, wants to see more. How much progress can we make? And next up are the Europeans.
Yeah, and this becomes a very fraught conversation. Is this a template? Well, this is innovative financing. Well, can the Europeans come up with innovative financing, or is the bar going to be higher? I think the most interesting takeaway from this week has been that 15% is the new 10%, and 50% is very well adjusted by the market, adapted to, simply because certainty is better than really dealing just even with tariffs at this level.
We don't like policy volatility. We saw that through April. Don't like these self-imposed deadlines either. They're all over the place. And I think for the time being, they're not that important either. For the Chinese at the moment, mid-August is the next line in the sand. Secretary Besson's already told us that doesn't matter anymore. He basically came on the programme again and doubled down on that. They're going to meet in Stockholm next week. Kick the can just a little bit further down the road, and I think the market's comfortable with that idea too.
Yeah, so the question is just, does that really go for the other countries as well, and the other regions? For the European Union, is that August 1st deadline ultimately fungible if you have some ongoing progress? Sort of the will they, won't they, the taco kind of question. It seems like this market's moved on. They're looking at 2026. And I think that increasingly we're going to have to try to understand how well companies really can map out consumers' response to this, the inflationary response to this, how their supply chains will adapt and adjust as we do face off with tariffs that are at their highest levels going back to the 1930s.
How many times have you said the economy's not the market's not the economy? Later, we've got a big name, Alphabet. Once you kick off Mag 7 earnings, we're talking about something very different. Microsoft, Amazon, Google, Apple, very different trends.
There has been a secular shift with investment in technology that some people say will be more revolutionary than the internet. And this has been fueling the optimism in equity markets. Have people been conflating that optimism that really is specific to a technological advancement with broader economic strength? And that, I think, is one of the key debates on Wall Street.
A fantastic lineup of conversations found only on Bloomberg Surveillance with Anne-Marie down in Washington, D.C. Thanks for watching this morning. Coming up tomorrow, Andrew Sheets of Morgan Stanley, Dan Ives of Wedbush, Libby Cantrell of PIMCO, and Pooja Kumra of TD Securities. From New York City, thank you for choosing Bloomberg TV. For our audience worldwide, this was Bloomberg Surveillance.
Good morning. Another record today on more deals. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, one more deal. Tokyo and Washington strike a trade agreement imposing 15% tariffs on Japanese imports. Meanwhile, Tesla prepares to report results following a turbulent quarter for the stock and its CEO, Elon Musk. And Alphabet, also in the earnings spotlight today, shares nearing their longest winning streak ever ahead of those results. A lot of movement in stocks today. Katie, what are you watching?
I'm watching the meme stocks because apparently it's 2021 again. You have the meme era back in full force with stocks like GoPro, Krispy Kreme, and Beyond Meat moving not really on fundamentals this morning. This just seems to be good old-fashioned retail exuberance. Take a look at some of these pre-market numbers, Matt Miller.
Wall Street bets. All right, auto sales also climbing on the auto stocks climbing on the U.S.-Japan trade deal, which sets tariffs at 15%. Japan also agreed to buy 100 Boeing jets, and maybe some U.S. automakers will be able to sell into China. Right now, Stellantis is the only U.S. automaker that has any real sales there. Its shares are up 6 0.3%. Toyota gaining more than 12%. Huge gains in Subaru as well, for example, today. And then Boeing right now up 1.2%, Katie.
And you can see that enthusiasm in the individual stocks, but also at the index level as well. Markets rallying this morning on that news of a trade deal between the U.S. and Japan. Treasury Secretary Scott Bessent joined Surveillance earlier this morning.
When President Trump tells me what his goals are, I think about what is the best way for me to give good framing to market participants for them to understand what he's doing, because he always has a plan. It's not always obvious.
All right, automakers are surging on that trade deal. For context, Japan exported nearly 1.4 million cars to the U.S. in 2024. The deal comes as Tesla reports earnings after the bell. Bloomberg Global Autos editor Craig Trudell is in London right now. So, Craig, it's mostly the automakers over there that sell cars over here that are doing well, because U.S. automakers don't sell a heck of a lot of cars in Japan.
Yeah, that's right, Matt. And, Trump may want that to change. I think he's going to really have a hard time doing that, right? The Japanese market is very different. K cars, obviously, you don't have any, Fords or Chevys in that segment. The sort of line that you hear out of Japan that, look, it's not so much that we're closed to you, it's that you're not making the cars that our consumers want to buy. There is very much validity to that. And so, any sort of on paper agreement to try and open up that market is really just, kind of window dressing in terms of, this deal that was reached between the U.S. and Japan.
Well, you're seeing the reaction in shares of Stellantis and shares of Toyota. We also showed Tesla up on the board, Craig, which isn't reacting to this news. Of course, earnings after the bell tonight. And we think about the global stance of tariffs. Tesla, at least, has been positioning itself as kind of insulated from all of that noise.
Yeah, I think, in terms of at least relatively speaking, in a better position, the fact that the vehicles that they sell in the U.S. are made there. But this is also a company that has its share of tariff impact. Just last week, reports on the idea that graphite, tariffs for Chinese imports of graphite will go up to 160%. So, even for the relief in certain aspects on the trade front, you also have some real sort of tensions that are ongoing. And, the company did flag last quarter that, on the energy side of their business, the batteries that go into their storage systems that they sell, which has been, a hot business as the car side has struggled, that's really going to be affected by tariffs as well.
All right, Craig, thanks very much. Bloomberg's Craig Trudell covers global autos for us. Let's head back to Washington right now, where Bloomberg's chief political correspondent, Anne-Marie Hordern, has had a slew of high-level interviews this morning. Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and now she's standing by with former U.S. Ambassador to Japan, Senator Bill Hagerty. Anne-Marie?
That's right, Senator Bill Hagerty of Tennessee, also the former U.S. ambassador to Japan, so really understands both sides of this negotiation, with the president last night announcing this trade agreement with Japan at a 15% tariff level, reciprocal and for autos. Thank you so much for joining us, Senator.
Certainly, I'm glad to be with you, Anne-Marie, and it is a very big day today.
So when it comes to this trade agreement, what I'm interested in is the politics in Japan, because you really understand that. And Prime Minister Ishiba, there's reports that he may be stepping down. Do you think this deal, I was asking Howard Lutnick this, the Commerce Secretary, do you think this deal could transcend the domestic politics taking place right now in Tokyo?
I think clearly it has. I think this is putting us on a completely new playing field with our allies in Japan. I look forward to what we do with South Korea as well. But if we think about where this is headed, Japan's going to become a major financier of projects that support all of our national security. Our economic security and our national security are aligned. When I was ambassador to Japan, we negotiated 2 trade deals with the Japanese at that point in time. These are not easy to do, and my hat's off to the team, Secretary Bessent, Secretary Lutnick, Ambassador Greer. They have done a fantastic job and delivered really a terrific deal.
In the President's Truth Social post last night, he talked about Japan opening up for U.S. autos. And we know that Japan has very strict and stringent regulations when it comes to U.S. autos coming in, the safety precautions, as well as agriculture, like maybe rice. These are two very politically vulnerable sectors. Do you think we'll actually see that?
Well, I think the Japanese are difficult to negotiate with, but they keep their word once a deal has been made. I know that's not true every place in the world, but the Japanese certainly do. I know the negotiations have been tough. I've been in rice negotiations with the Japanese in the past. It's almost a sacred area in the agricultural sector, but rice has had an incredible run in terms of its price in Japan, creating a lot of inflation and a lot of pain domestically. So I think this is going to be welcomed by the Japanese public to see more rice imported. Will take some of the pressure off of the supply constraints that they have right now in the country.
What do you think this all means in terms of doing a deal with China? The president seems to want to get allies on board before he gets potentially a meeting with Xi Jinping. Do you think having Japan on side is going to help him
Absolutely.
going into even trade negotiations in Stockholm next week?
Certainly. I think it absolutely makes a huge difference with respect to China, because what China can observe is the fact that our allies are working with us. And we're doing this in a way that maximizes economic opportunity here in the United States, makes our nation stronger, and a stronger America means that all of our allies benefit from this. It's a good deal for Japan. Their stock market is up. Our stock market is up. I mean, everybody's loving this.
When it comes to the auto sector, do you now think that, you say the stock market's up, do you now think that even U.S. autos and European autos are starting to look at maybe 15% is going to be the new rate instead of this 25% that is on right now for all the sectoral tariffs?
I think that's a fair assumption. I'm sure that people will jump to that assumption, but they don't know the specifics of the deal. And I think that's going to get down to the hard tax, and we'll see how the negotiations go. I know that Ambassador Greer and Secretaries Bessent and Lutnick have spent a tremendous amount of time on this deal, and every deal is going to be unique. So I think it's going to be hard to superimpose that, but I'm certain that that's where the industry will sort of target now that they see this come out with Japan.
You talk to the White House a lot. Do you think they're going to wrap up all these agreements by August 1st?
Not every single agreement, but the ones that matter. And Emery, I think they've been very focused on delivering agreements with those countries with which we have significant trade deficits. And Secretary Bessent sums it up, I think, fairly often, saying there are about 18 countries that really matter. I talk often with Ambassador Greer. He's got term sheets. He's really been working through a very structured, very disciplined process. And I'm very optimistic that they're going to have the terms set. I'm not saying they'll have the final agreements papered, but that the broad terms will be set, sort of a letter of intent style, if you use a business parlance. But that's where I expect us to be.
And just finally, do you plan on going home to Tennessee for a recess this August, or are you going to be sticking around in Washington?
I think that's up to Chuck Schumer. We've had maximum resistance from the Democrat side. They've not allowed a single one of our nominees to go through without putting us through maximum procedural hoops, even though they know the answer. So what that has done is it created a backlog. Every president needs to have their team on the ground and ready to go. I think Chuck Schumer is going to have to ask himself, is he going to continue this resistance movement, kowtowing to the far left like AOC, or is he going to actually stand up and say, look, here's what's good for America, let's get it done. But we're here I'm ready to work through the weekend, the recess, whatever it takes to get these appointees done.
If you all do stay, besides getting the president's secretaries and ambassadors through, what else do you plan on working on in August?
Well, an important thing that we never worked on when Chuck Schumer was the leader is putting appropriations bills on the floor. That's happening this week. So we're looking at the September 30th deadline responsibly. We're trying to put our appropriation bills on the floor so we don't wind up with an 11th hour negotiation that winds up, with the government teetering on a shutdown. I don't think we'll shut down, but again, that gets back to Chuck Schumer and the resistance movement.
Do you think potentially we could see a government shutdown if there is a recess and you go home? We should note, though, it's not just Chuck Schumer. Some of your Republican colleagues also want to make sure they have their recess to go talk to constituents.
I think it's important to talk to constituents. I think they elected us. Many of us are in cycle right now. I am myself. But at the same time, we have an obligation and a duty to our constituents to make certain the government is functioning. And this resistance movement that tries to deprive the president of the team that he needs to execute is really harmful to the economy. It's harmful to our national security. So we have to address it. I hope that we'll be able to come to terms with the Democrats. They have not been willing to negotiate so far. Again, as we move on our appropriations bills, I think that really narrows the space that we've got to deal with as we come to the September 30th deadline. So it's all possible to get appointees taken care of. We don't need to shut the government down, but it requires cooperation.
The president gave you a very long shout out last week when it comes to the Genius Act.
Yes.
And I know you're looking forward to the next crypto bill. But there's a lot that's on your plate right now. Are we going to see that before the end of the year, the market structure?
We're working very hard. We just put a discussion draft out this week on market structure. Very proud of my legislation, the Genius Act. That basically opens the door for digital assets in America. If you think about where we are today, Anne-Marie, versus where we were a year ago, it's a sea change. Now the U.S. markets are open to digital currencies. The U.S. markets are going to be open to innovation on the blockchain. I'm really excited about where we're going, and our goal is to have this market structure bill move through expeditiously, get it done this fall.
This fall,
Yeah.
so before the end of the year.
That's the goal.
Senator Bill Hagerty, and of course the former ambassador to Japan, thank you so much for joining us this morning. Matt and Katie, of course, he has a very interesting perspective when it comes to this trade deal. He's been at the table with Japan a number of times as the U.S. ambassador, especially when it comes to these very politically vulnerable sectors like autos and rice.
Absolutely. And as a result of that deal being signed, that's why you're seeing some of those sectors rally this morning. A great conversation between Senator Bill Hagerty with our own Anne-Marie Hordern in Washington. We will bring you more from Anne-Marie's interviews with Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick throughout this show. That deal that we were talking about between Japan and the U.S. giving a lift to the broader market as we really enter the heart of earnings season. So let's go there now, because Texas Instrument shares, they're actually plunging right now after its forecast failed to impress due to tariff costs on the business. Bloomberg Tech co-host Caroline Hyde has the details. And Caroline, it's interesting. You actually heard from the company that they're not sure how much of the 16% jump that they saw in revenue was due to tariff-related pull-in. So even on the numbers that are being reported and the look ahead, there's a lot of uncertainty here.
Because this company's posting growth. It's saying, look, revenue, the midpoint in the next quarter is going to be about 11% growth. It was, as you say, 16% growth for their fiscal second quarter. But they said, look, we've got 100,000 customers. We don't know if they did a pull forward, if they stocked up their inventory ahead of the tariffs, or whether or not that was just normal business. They did say, the CEO really articulated that China was running hot. We thought that that might dial back. Remember, that's important when China is about 20% of their overall revenue. So this is a company that is hugely exposed to global tariffs and also has so many customers and a very broad reach of product. This is about analog chips. This is turning sound and audio into electronic signals. And this, therefore, is exposed to every single industry group. So there just wasn't enough clarity, as we saw with NXP yesterday and the plunge that we saw there, because they couldn't signal enough bullishness going forward. Same thing happening at Texas Instruments. If we hold these losses, if we see 10% losses, that's the worst day since about March 2020.
It could wipe out almost all of the gains that they made this year. They're up 15% year to date. They're a $200 billion company, so nothing to sneeze at. But we have a $2.4 trillion company, I should say, with a T, coming out with earnings after the bell. Alphabet, Google. What do you expect?
Actually, things have got a lot brighter in terms of optimism for this company. As you were saying yesterday on the show, look, 10 straight days of gains for Alphabet could be put on a pause just today, but 10 straight days would be the longest winning streak for Alphabet since 2010. Maybe we could push forward to an 11th day. And the optimism is that, look, for now there is resilience in the search business. For now they can shake off the anxiety around ChatGPT and other generative AI competition and actually be lucrative in this moment. They're managing to pass on costs, make advertising ever more promising, particularly in the YouTube space. Remember, they're dominant in TV now. Yes, there is worry, particularly around antitrust. That's what they've got to shake off, because come August, we get that view from Judge Mehta as to what they have to do to push back on the idea that we're a monopoly in search. Will they have to break apart? Will they have to sell off Chrome? Will they have to start sharing more of their data with competitors? This is the anxiety that has held back, I think, the valuation on the stock. Look, it trades at what, about 18 times future earnings. Now, this is far below its average over the last 10 years and far below other competitors in the space. But we're just starting to see a break positive for year-to-date in performance on the shares.
That's the thing, that even with that winning streak, 10 straight days of gains, it's only higher by about 1.3% year-to-date. So it really tells you about some of the questions that are plaguing this stock. Hopefully going to get some more answers after the bell. That is Caroline Hyde. She is the co-anchor of Bloomberg Tech. You can catch her at 11 a.m. But coming up on Open Interest, Wendy's just joining the 2025 meme stock party, suddenly spiking. Krispy Kreme and Beyond Meat also there as well. So what a meal. We'll take a look at the names that the retail traders can't get enough of next. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Let's get now to high interest and look at what's making headlines around the world. AT&T is reporting second quarter results that beat Wall Street estimates, including faster than expected growth in cell phone subscribers. More than 100,000 more than Wall Street expected. And yet the shares are down 3.4% because maybe investors are worried they're not taking advantage of the changes in tax rules enough to gain, like rival Verizon. Hilton is lowering expectations for net income this year as demand for U.S. hotel bookings declined in the second quarter. The CEO said lower government spending, a decline in international travel to the U.S., and broader economic uncertainty are weighing on demand. That makes sense, a down arrow story with a down arrow trade this morning. And Capital One reporting adjusted earnings per share for the second quarter that beat estimates as the firm completed its long-awaited acquisition of Discover Financial Services. That's a good news story, and so the shares are up 5%. Katie?
Yeah, another 5% for Capital One. This is a stock that has been outperforming year to date, so Capital One continuing to rake it in. But let's get to the silly stuff because meme stock mania is back. Yesterday, it was Kohl's, which spiked over 100% at one point, and Opendoor. Now, fast forward to this morning, we have GoPro, Krispy Kreme, and Wendy's all spiking pre-market. Let's take a look at the action with Bloomberg Equities reporter Alex Semenova. So, okay, what a motley crew of names here. What is the common denominator to the meme stock frenzy that we're seeing right now?
Well, it's that they're all terrible businesses that aren't trading on fundamentals and are all, across Wall Street Bets forums, across Reddit that people are talking about. And it's an effort to get rich quick, to capitalize on these really big swings in these companies. This is stretching into second day today with all of these companies that you mentioned, GoPro, Krispy Kreme, Wendy's, amateur traders piling in once again. This comes, of course, at a time of broader market euphoria with stocks trading at record highs. So it's unsurprising that these animal spirits are kind of moving into more speculative quarters of the market. JP Morgan's trading desk this morning actually flagged that its internal basket of meme stocks is up 7.9% month to date versus the S&P 500, which is up 1.7%. So really a testament to this euphoria that is once again back in markets. And if you look at Kohl's yesterday, that was at the forefront of all of this. It has a float of 48% rather. This is according to data from S3 Partners, meaning that these are, bets against the company. By comparison, GameStop has a float interest of 20%. So really
Short
a testament.
interest.
Exactly.
Yeah. Is this exactly like what we were seeing in 2021? I don't remember that far back, but I'm sure you've done the reporting. So what's the difference between now and then?
So the enthusiasm is really similar, but the backdrop in markets is really different. Obviously, at the time in 2021, traders were, their finances were being propped up by stimulus checks. We were at zero interest rates. There was so much enthusiasm in markets. And this time around, there's a lot of uncertainty around the macroeconomic outlook. Interest rates are elevated with the Fed saying they won't cut anytime soon. We have trade uncertainty. So less favorable backdrop for this risk-taking, but also, interestingly, more investment products that cater to this type of enthusiasm. Wall Street's casino has so many options. You have levered ETFs. You have all these companies. You have so many crypto investment options.
I have to say, it's wild. I think back to 2021, and what an interesting time it was. But when we would have these conversations, it was all, the conversation was very much, this is a product of ZIRP. This is because we have interest rates at zero, that once we raise rates up, that'll sort of drain all of this out of the market. That obviously has not happened.
Yet. The president is screaming for another 3 percentage points to be cut.
I know. And
that gets us close. It's NERP.
Well, that's the thing. You have to wonder, will that just, if we're having this sort of activity when we're at 4.5% or close to it, what happens if we go back down to 1%? I shudder to think. But let's talk about how people, normal people, not retail traders who are sort of jockeying around on Wall Street Bets, how do you position around some of the mechanics of what's going on with the meme stocks?
So Barclays head of derivatives, Stefano Pasquale, has actually been flagging this frothiness for the entire summer pretty much. And he says that a way to hedge this euphoria is to use a popular hedge fund strategy called a dispersion trade, where you bet on single stock options and also contracts on broader indexes like the S&P 500. Basically, you're betting that a basket of meme stocks will be more volatile than the S&P 500. But also, alternatively, if you want to take a more directional bet, you can just buy puts on these meme stocks. I don't know if that will pay off quite well given how they're doing. But he also flags one important point, is that even though we are seeing this euphoria in these speculative names, it's not necessarily an indication of something nefarious for the broader market.
So buying a put, I guess that would be safer than outright shorting some of these names, theoretically.
Perhaps. Exactly.
Perhaps.
Still seems pretty risky,
Seems
given
quite
what
dangerous.
Gabe Plotkin and the rest learned
Exactly.
in 2021. Alex, great story, great reporting. Thanks so much for joining us. Alex Semenova there from our BN Equities team. Now, tech stocks are going to lead the way as U.S. equities shrug off tariff risks and get a boost from this round of earnings reports. That's at least according to the MLive Pulse survey, which drew over 100 respondents in a poll conducted earlier this month. For more, we're joined by Bloomberg Markets Today managing editor Christine Aquino. So, Christine, what else did we learn from the survey that I guess favors tech stocks pretty highly?
Yeah, Matt. I mean, there's a lot of faith still in tech stocks leading the way for this earnings season. Very interesting, though, the divergence in expectations when it comes to profit growth for tech versus the rest of the S&P 500. We note that while there's about a 15% profit growth expected out of the Magnificent Seven this earnings season, we're seeing basically no growth for the profit of the S&P 493. And this is still very much the issue, right? That divergence between the Magnificent Seven, which has really taken the bulk of profit growth in the S&P 500, and really in terms of the share gains as well, versus the rest of the S&P 500. We note as well that consumer discretionary is being pinpointed as the most vulnerable sector to tariffs. That's the biggest risk that people see when it comes to earnings outlooks this season. And consumer discretionary stocks, more than a quarter of respondents saying will take the brunt of the pain from tariffs if they ever come to pass.
And really quickly, Christine, before we let you go, what did we learn about how folks are thinking about hedging here? We were just having that conversation a little bit with Alex Semenova.
Yeah, very interesting, Katie. I think there's very little appetite for anyone to change their exposure to the S&P 500. I think that, like we're saying, there's still a lot of froth in markets. There's still a lot of speculation in markets, and you really don't have a lot of willingness from investors to let go of their bets on U.S. equities, even though maybe it's starting
season, and that is what we are firmly in. But you take a look at what futures are doing ahead of the bell. It's all about trade this morning, boosting the S&P 500 by about 0.4%. Big tech lagging that, and the Russell 2000, those small caps out in front. That's your setup as we count down to that opening bell. Less than 4 minutes to go. We're back at the open up next. This is Open Interest.
A cidade estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
All right, we are moments away from the start of trading and what looks set to be another intraday record high on the S&P 500. You can see futures right now 0.4%. So higher and gaining steam into the bell. The NASDAQ up only 0.1%, which is a little bit puzzling because it's the tech stocks we just heard from MLive that should be leading the way. And we do have, obviously, Alphabet earnings coming out after the bell. You hear and see the closing bell on the New York Stock Exchange with NIQ, the full view of consumer buying behavior. I didn't look at that up beforehand. And Carlsmed down on the NASDAQ. The important point today is that we have a deal, at least a framework of a deal or a concept and framework of a deal with Japan, and that lowers tariffs to 15% for the import of those goods. And so stocks are rising once again.
Maybe that's why these stocks are rising. Just kidding. These are meme stocks. Let's take a look at them. We're taking a look at GoPro, Krispy Kreme, Beyond Meat, Wendy's, some of the favored retail names of the moment in this meme era as it comes roaring back. I know there's no rhyme or reason necessarily to why we're seeing these moves, certainly no fundamental news coming out on these names, but I do want to point out that Krispy Kreme, Beyond Meat, and Wendy's, those are all food items, Matt Miller, so I don't know, something to chew on.
Yeah, but you can't eat a GoPro, no. I want to point out, as someone
you can film yourself.
Once told Ben Bernanke, or something similar to that. Auto stocks are climbing on the U.S.-Japan trade deal, which sets tariffs at 15%. Japan also agreed to buy 100 Boeing jets and invest $550 billion, at least finance that, and lower tariffs on its auto imports as well. Let's bring in North Star Asset Management Chief Investment Officer Nimrit Kang. And Nimrit, I'm kind of wading through some murky details here because we don't know the full picture, but is it enough to make you want to buy stocks?
Matt, the market has rallied very significantly over the last few months based on three major things. One is that the trade war that we got started with the announcement of the Liberation Day, that gets resolved. We get a big stimulus investment back into the U.S. here from the big, beautiful bill, the tax incentives for the corporates. And the third is the inflation and employment picture is such that it allows the Fed to start cutting. Any news that supports any of those three helps the market retain its momentum. And that's what you're seeing. That's what you're seeing today. Another big confirmation that, yes, the trade war is not going to escalate into something more ominous. And that's all a good setup.
I want to talk a little bit about what we're seeing in these meme stocks, as we've been calling them. I'm not going to ask you whether or not you're buying into the hype, but what do you think this says about where we stand in markets, what this says about sentiments? It's kind of puzzling that, okay, you think back to the last really big episode in 2021, we were at 0 interest rates. It's a much different setup right now.
Katie, first of all, I like that they're all the food stocks, can kind of relate to that. But I think you're right. What it does signify is this interest of the retail investor back into the market. You know, it's the animal spirits back into the market. That's what we're seeing. We've seen a lot of buying the dip that's happened with the retail investors, and that's continuing on and manifesting into some of those meme stocks as well now.
In terms of what you do want to buy right now, I mean, what would you invest in, Nimrit, right now?
Yes. So, you know, not all sectors are created equal. I think one of the big things that we see is the growth, and the biggest beneficiary of the artificial intelligence trend is really the technology companies. Now, the benefits from AI are going to be broad-based, felt by lots of different companies in lots of different sectors. One of the things we would say is, even when we look at how well S&P has done, not every stock, not all the sectors have benefited equally. So even if you take a look at the industrials, you know, the industrial production has been stuck in a lull over the last several years, really. And so many of those industrial stocks, take transport, rail companies, haven't participated. But if we think there's legs to the investment back here in the US, industrials is a great play for the longer term investor to participate in that reinvestment back into the US here.
Okay, so industrials for the longer term horizon. I want to talk a little bit more about tech and earnings after all, given that we're heading into some pretty big names after the bell, Alphabet and Tesla among them. You think about the reaction function that we're seeing so far. You've had companies coming out missing and being punished, but you're even having companies reporting pretty good numbers and still seeing that negative reaction. So Nimrod, as you're trying to navigate through this season, does that give you pause?
It's always tricky, right, Katie? But I think especially if you look at this earnings season, and again, the run-up that we've seen coming into this earnings season, the market is expecting that the companies are going to beat the earnings, raise guidance, and to the extent we don't get that, we don't get support that there's continued momentum, positive momentum in the business, that's been met with a disappointment. You know, that's what we heard out of Texas Instrument, for example, last night, that the recovery is still very fragile and we're not seeing it to the broad base. So I think that's the expectation that's built in. But again, it's going to depend very much earnings company by company specific. But overall, investors are looking for a bit more positivity than that's already baked into the estimates here.
So do you expect that? I mean, we've had earnings estimates come down. Now they're bouncing back up a little bit. How much do you have to beat by to get your stock bid up?
Yes. You know, again, it depends, but we are looking for that positive momentum, an inflection positive, more than what's baked in. I'm not sure if there's a number I can give you, but for example, the first quarter earnings, S&P earnings grew 13%. This quarter, we're looking at about 3%. I think companies that can really beat well ahead of that can guide positively to the momentum through the end of the year is good. The tricky part is that, you know, the companies are reporting on a quarter that ended at June. A lot of the news related to the trade deals, related to the stimulus from the budget bill, are going to unfold over the second half, and that cadence is going to look you know, much more uneven. So we actually think that you're not going to get a big kind of bump up coming out of this earnings season. Rather, this is a time where the market maybe settles down, consolidates, and then going into the second half, we'll probably have some more momentum.
It's a good point that, of course, this earnings season, this reporting period ended at the end of June, and we certainly know a lot has happened since then. Nimrod, great to get some time with you. That is Nimrod Kang. She is Northstar Asset Management CIO. Let's check in on the stock market right now. We're about 7 minutes into the session. You can see the S&P 500 about 0.4% higher. We are in record territory, and the breadth looks pretty good right now. You have 350 names just about in the green, just about 150 in the red. So a good setup there. You take a look at what's leading. You have NVIDIA up there. That, of course, is a huge company. And as such, that little gain that it's seeing on a percent basis translates into a whole lot of points. Then you have GE, Vernova, Thermo Fisher, Meta Platforms, and Berkshire down there as well. So a good mix of different sectors represented. Take a look at losses, though. We are in earnings season, and that is what you're seeing in Texas Instruments, that punishment that we've been talking about. Texas Instruments down 11.5%. That's your biggest loser. Then you have Microsoft, Broadcom. You go down the list. Alphabet there as well. Alphabet reporting after the bell, so keep an eye on that name. Let's take a look at the sector level and what this breakdown looks like. As we mentioned, good breadth. You have 10 of 11 sectors in the green right now. Healthcare is leading you higher, followed by industrials, which Nimrod Kang likes, utilities, energy. The lone loser right now is communication services, but even that, just 0.1% lower right now, Matt Miller.
Yeah, obviously AT&T not helping out there at all, and I think it's doing exactly the same kind of thing that you saw at Texas Instruments, right? They beat expectations. They reaffirmed their guidance. They added more subscribers than had been anticipated, and yet they're being punished because the outlook just wasn't strong enough. It's a very high bar for Alphabet as well, with analysts expecting a strong profit. We'll discuss what that means exactly with the analyst Michael Nathanson of MoffettNathanson next. This is Open Interest.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate. Put that name down in your books.
What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to Open Interest. It's time now for our top calls from the analyst action in focus this morning. And first up, Boot Barn getting downgraded over at Jefferies because of its elevated valuation. However, the firm remains confident in the company's fundamentals, shares down 1.5%. Next up, Toll Brothers getting upgraded to a buy over at Seaport Research. The analyst expects that the bad news in the home building sector to lessen, or it will lessen rather, with declining new supply and margin stability. And finally, we end with drug maker Sarepta continuing its downward spiral. Bank of America is adding to a spate of Wall Street downgrades. Sarepta, for its part, said it will temporarily pause its treatment for muscular dystrophy following a request from the FDA. The company, remember, had initially refused to, which then drew backlash. Shares only down 1.3%, which looks pretty tame compared to some of the movement that we've seen in this stock.
Yeah, absolutely. And some of the movers that we're seeing in general in this market. Alphabet earnings have a high bar to hit after the bell today. Investors are bullish, though, on the stock. Shares are on course for a record 11th consecutive session of gains, the stock's longest winning streak ever. MoffettNathanson senior research analyst Michael Nathanson has a buy rating on Alphabet with the $225 price target. He joins us now. Michael, thanks so much for joining us. I'm just getting a message here from a trader saying chances are you need to more than crush it on a forecast when the S&P is trading at 23 times forward PEs. Is Google going to do that today?
Yeah, I would take the other side of that. And good morning, Matt. This stock trades below the market multiple, right? The market's at 23.5 times. We think Google's at 19.5 times, right? I did not know, and thanks for telling me that it's been so strong the past, 11 days. I didn't realize it was a record. It felt like people were really underweight Google. They were afraid of search results, which are going to be okay, strong, and they're afraid of the court case, which is a month away from being resolved. So I look at this going, the stock has been a laggard for the past year. I don't think the bar is extremely high. I just think, search has to come in as expected, double digits yet again. They have to talk about the innovations they're seeing with their own AI development. And I think that the momentum should continue because it's been such a laggard up to this date, and it's cheap relative to the market. So I take the other side, whatever that trader's telling you.
So are you saying then that sentiment is pretty low when it comes to Google? Basically that the bar is so low that their likelihood of actually exceeding it is kind of good here?
Yeah, I would say the 11-day action you talk about is an indication that people had left this one for dead, even though it's a Mag 7. It had been one of the laggards. And I think as people started thinking about the second quarter, potentially some of the data points you're getting out of their AI trends, people started to either cover or start getting excited about the second quarter. And
spending that they're going to have to do to stay ahead in this AI race. One of the concerns for investors, are they not doing well enough in this AI race? Is that a concern for investors? What's the problem?
I don't think it's spending because they've been doing this for a long time. They've been investing in their own technology, their own chips, their own data centers for more than a decade. They don't have the catch up on the platform technology side. The worry is that AI-driven search, either through ChatGPT, Grok, Perplexity, even AI overviews, will take share from Google's search monetization, right? So there's a fear, and it's legitimate, that Google's 90% share of search traffic will go down as more people use AI or as new competitors enter the field. Yeah. That's legitimate. It's a question of speed to which that happens, and whether or not Alphabet's sleeping at the wheel, which I think they're not now. They've got more aggressive by rolling out some new products.
That's certainly still the narrative that's haunting the stock price, though, that maybe that they've been, as you say, left for dead, sleeping at the wheel, and that's certainly an existential threat that you identified. But I want to talk a little bit about their other bets division. That houses Waymo, and certainly robo-taxis have been taking up a large share of the conversation recently. Less so around Alphabet, more around Google. But, I mean, how much does this matter for Alphabet, success in Waymo?
Well, it's interesting. So Alphabet, call it a $2 trillion market cap. Waymo's, I think, valued about $100 billion as of late. So it's about 5% of the enterprise value. But to your point, Waymo plus cloud plus YouTube shows that there's more in the portfolio at Alphabet than just simply search, right? So things like Waymo help people get a little more comfort that it's not all about one business fading into the into the future. So success from Waymo is actually really important to kind of reaffirm the company's technology is working. They have other innovation across the enterprise, and in itself, it's nice to have, but it doesn't move the needle. It's more of a reflection of, this company has a ton of assets and a ton of strengths, and Waymo is just one of them.
I know that your partner, Craig Moffett, covers Telephone. He's got a neutral rating on the shares. But to me, it seemed like they knocked the cover off the ball today. I mean, we were only expecting them to add 300,000 wireless subscribers, and they added 400,000, going the other way of their now bigger rival, Verizon. Why do you think the market reacts so poorly to, beating expectations, reaffirming your profit forecast, adding subscribers? Like, what's the problem at Telephone?
Well, how has T done this year relative to Google, right? So, T is, most of Craig's stocks have been strong because they're tariff proof, right? And they're, domestically focused. I just think it could be more a broader trade of, look, we're getting through the tariff wars. The dollar is getting weaker. Maybe we want some exposure now to more global companies that have the benefit of maybe having the tariff headwinds start to dissipate. So that could be it, because they've been very strong havens the past 6 months.
Yeah, you can see that sell-off lessening a little bit right
True.
now. AT&T down about 1% as we get deeper into the trading session. Michael, it's great to get some time with you ahead of Alphabet earnings after the bell today. That is MoffettNathanson, Senior Research Analyst Michael Nathanson. Now, coming up, another big one after the bell, Tesla. Shares poised to move 6% in either direction following earnings, according to the options market. Can it defy the recent slump in sales? We'll discuss next. This is Open Interest.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks today. We're looking at a new intraday, no, not an intraday record yet. 63.23 is the level here, and I think 63.36 is the intraday record that we reached earlier this week. Still, if we close here, it'll be a closing record. NASDAQ 100 actually down on the day, off about 0.1%. Obviously, very early in the trading session, we'll look to see if these numbers change throughout the day, very likely as we expect Alphabet earnings after the bell. NVIDIA coming, gaining 1.25% right now, but it had been higher earlier, so coming down a little bit from the highs that it hit earlier in the session. That's why we see the S&P doing that as well. Texas Instruments down more than 12% after it gave a positive earnings report, but concerned investors and saying that some customers may be pulling forward in terms of their orders. You can see these meme stocks here that Katie was talking about. Google over here right now off 0.5%, and it had been gaining actually 10 days in a row, but it looks like that's reversed into the earnings report this afternoon. And then Tesla right now pretty much unchanged, but you would think there's more action in Tesla, right? You would think, Katie, that Tesla sells a lot of cars in Japan, but it doesn't.
You might think that, and we'll see if it moves after hours when we get those numbers, because the options market is suggesting a 6% move in either direction. So let's preview now with Bloomberg's Detroit Bureau Chief David Welch. An interesting comment from Nick Colas over at DataTrek Research saying that Tesla, more than any other large cap stock, relies on investor confidence in the company's long-term vision of the future. David, is that long-term vision enough to overwhelm what's expected to be the sharpest drop in revenues in more than a decade for Tesla?
Look, that's the big question. I think that's why you're seeing a potential 6% swing either way. You have another year where sales are going to be down. Analysts are expecting that Tesla may even revise their goal for the year downward. That's not good. So do they have enough good news on Robotaxi, which, you know, that was a pretty small sample of vehicles in a small geographic area that they started with. Do they have enough good news on that to overshadow that? And then, look, there's another variable here. Does Elon Musk say anything about his budding political career and whether or not that's still going to be in the center stage for him, or if he's going to focus on Tesla? So, you know, three different things here, and I think investors will be looking for news on all of that. And you do have, you know, will they come up with an affordable EV? What's the latest on that? When is that going to be out? And do they have any sort of forecast on what the sales will look like for that vehicle?
David, I know we're focused on so many other things besides car sales since we're talking about Tesla, but just to get back to that business, I was surprised when I looked it up this morning and saw that they didn't even sell 5,000 units in Japan last year. Is this agreement with President Trump going to help any U.S. automakers? Because it looks like Jeep is the only brand that has a significant number of sales.
It's really tough to see that happening. I mean, the U.S. car companies have never really had a very good presence exporting vehicles to Japan. They don't build them there. And, so you'll still see vehicles coming in from Japan. I think the net impact of this with a 15% tariff could be a company like Toyota, which imports half the vehicles it sells here. They could end up adding more production here, which they've been doing for years anyways. But, seeing General Motors exporting vehicles to Japan, or Ford, they don't really make the small vehicles that, in big numbers, that Japanese motorists are going to want to drive around congested cities like Tokyo. It's, you're not going to drive a Tahoe or a Ford F-150 in Japanese cities.
They do apparently make a couple of hundred right-hand drive Corvettes, David Welch. I was looking into it.
A couple hundred.
Few hundred very lucky Japanese.
That's not going to erase the trade deficit.
No, but still, it's awesome if you have one. David Welch there in Detroit. He's our bureau chief, covers cars for us. Coming up in the next hour, Anastasia Amoroso explains why she is bullish second half of 2025. This is Bloomberg.
Building another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. One president is accusing another of treason. A National Intelligence Director, Tulsi Gabbard, is piling on this morning. Correspondent Michael Wallace has our top story.
In a thread on X, Gabbard says she has declassified a report that exposes how the Obama administration manufactured the 2017 intelligence community assessment that Vladimir Putin and the Russian government helped President Trump win the 2016 election. She claims the Obama administration knew it was false and promoted the lie with its partners in the media to undermine Trump's legitimacy.
Former President Obama's office calls the allegations, quote, bizarre, ridiculous, and a weak attempt at distraction. President Trump's announced a new trade agreement with Japan that lowers a proposed 25% tariff to 15%. CBS's Kelly O'Grady.
The 15% tariff means prices could go up for U.S. consumers. Note, though, Japan already imposes tariffs on U.S. goods entering their country. So the president says this new deal will provide a win for American farmers and automakers to more easily sell to Japan.
The president also says there's a trade deal with Indonesia where we get things like palm oil, furniture, and clothing. The world courts begun handing down a landmark opinion on climate.
What do we want? Climate justice! When do we want it? Now!
Protesters at The Hague demanding climate justice as the International Court of Justice gets set to read a non-binding opinion about countries' obligations to tackle climate change and the consequences if they don't. Almost 3.5 years into the war, the Kremlin says it expects negotiations with Ukraine and Istanbul to be difficult. Correspondent Ramy Inocencio at the Foreign Desk.
Don't hold your breath, apparently. Vladimir Zelensky on Monday said that talks were scheduled for today. We are still waiting for confirmation on whether those talks will actually happen. Yesterday, the Kremlin did pour cold water on any expectations if those talks happen.
A new report says Trump administration deportations are threatening democracy. Dara Lind with the American Immigration Council.
There's this tremendous seismic shift in the entire federal government being turned into an immigration enforcement machine.
A big win for 45-year-old Venus Williams. Her victory at the D.C. Open last night. Her victory at the D.C. Open last night on Tennis Channel, making her the oldest woman to win on tour since Martina Navratilova in 2004. It was Williams' first official singles match since 2023. And Venus is confirming, by the way, she's engaged to actor and formal model Andrea Preti. This is CBS News. One flamboyant rock star is paying tribute to another a day after his death at the age of 76.
Gene Simmons of KISS says Ozzy Osbourne laid the groundwork for heavy metal performers.
Extraordinary individual. I mean, a giant. When he stepped up on that stage, you saw somebody who completely took over.
He spoke to CBS Mornings.
The Prince of Darkness on stage, and just a heartfelt, wonderful person.
Simmons says his friend will be missed.
Ozzy was always just plain wonderful, non-judgmental, no airs about him.
And for those in mourning, some advice.
Go to your room and put on some Sabbath.
Steve Kathan, CBS News.
The speculation proves Fleetwood Mac, Stevie Nicks, and Lindsey Buckingham's just announcing the reissue of Buckingham Nicks after more than 50 years of the original release. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are also streaming live on YouTube. Head over to youtube.com and search Bloomberg Live Radio. That's where you'll find us. Isabel Lee, Paul Sweeney with you here this morning. We've got the stocks a little bit mixed out there. Coming up, we're going to check in with Brendan Murray, Bloomberg Global Trade Editor, to get the latest on the tariffs. I think got to deal with Japan. I think the European Union might be next, and they might be up for a little bit of a tussle there. We'll get the latest reporting. Lindsay Dutch, Bloomberg Intelligence and Consumer Hardlines reporter. Hasbro, let's talk toys. Why not? Hasbro reported some numbers. We'll get a sense of what's going on in the toy business. Tatiana Derrier, strategist for Markets Live, on the latest Markets Pulse survey. What are people saying out there about where these markets are going to go? And then Mandeep Singh, he's our senior tech analyst at Bloomberg Intelligence. We're going to talk about all things tech. We got Google after the close going to report earnings. This is going to be the first big tech name, so we'll get a sense of what we can expect from Google and from our good friends out there in Silicon Valley. So a lot coming up over the next couple of hours. Let's kick it all off with John Tucker in a Bloomberg Business Watch. John.
All right, mixed right now for the major averages. S&P 500 is adding to its record close yesterday, 12 points higher right now. That's up 0.2%, 63.22 on the index. The Dow Jones Industrial Average up 202 points. Tech is under pressure today. NASDAQ 100 right now, 48 points lower, but is down 0.2%. By the way, the S&P 500 up close to 27% from its April low. That trade deal with Japan helping fan the flames today. Meme stocks back again. Retail traders are flooding into some of the low-price shares. A cohort of new names joining yesterday's action. We have right now GoPro. That's the latest. Those shares 52% higher. AT&T shares, they're down. The company delivering an earnings report that investors saw as a kind of mixed. Right now, down just about 0.5%. Asima Shah at Principal Global Investors, meantime, says the backdrop for investors does remain positive.
The economy is continuing to power ahead. So the key thing going forward is, how are earnings performing? How are companies, what is their forward guidance with regards to how they're navigating all of this noise? But generally speaking, it's still a fairly constructive environment, which should mean continued gains for risk assets.
And ahead of their earnings report, the number of new Tesla vehicles registered in California fell once again. The company continues to lose ground in the largest market for electric vehicles in the U.S. There was a total of just over 41,000 Teslas registered in the state last quarter. That's actually a 21% drop year over year. And also, as you mentioned, Paul, Google parent Alphabet reports also after the close of regular trading today. And this Bloomberg Business Flash brought to you by IBKR. Will the U.S. Consumer Sentiment Index exceed 56 in July 2025? At IBKR Forecast Trader, the yes was recently at 24%. Start predicting today at ibkr.com/forecast. Last trading day for this contract, July 31st. That is your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that, as John was just reporting there. Mixed tape out there. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee, and we're joined by Bloomberg's Red Brown. Red, what are you looking at today?
First thing on my radar is Hasbro. The ticker for that one is HAS. The company was trading a little bit up pre-market, but now has slid at the open by around 3%. They raised their full-year outlook in their earnings report today, actually beat analyst expectations. I think some of the positivity probably pre-market or how the rest of the year will play out for Hasbro.
Well, stock's up 34% year-to-date, so that's pretty interesting.
Yeah, I mean, a lot of that is coming from after a negative April, so it's all pretty much all been through May.
Oh, really?
I think as they've been able to get out the fact that they are going to be mitigating tariff impact, things like that. So still doing quite well. All things considered, and I think it is some of these new products. They had this game called Magic: The Gathering launch, $412 million in sales last quarter for a board game. So.
What about Texas Instruments? This is a key chip maker for producers of cars and factory equipment. What are you seeing there?
Yeah, Texas Instruments really struggling today after their report this morning. They're falling right now as much as 12%. That's the biggest intraday move since 2008. It's pretty much erasing the gains for the year. Last night, the company issued an outlook for the third quarter that came in line with expectations. But I think given kind of the backdrop, all the worries around tariffs, it was a little more conservative than what investors were hoping to see. In general, the feeling is kind of like more questions and answers, especially during the call. Analysts were really trying to push the management, saying, you know, if you really have a more negative tone on things, where is that coming from? And we just didn't really get, I think, satisfactory answers from the group, who are trying to say, you know, things are looking up, things are looking up. But I guess analysts and obviously the market today just really not convinced. And last time I checked, I believe right now Texas Instruments, the second worst performing stock in the S&P 500 at the moment.
What is Enphase Energy? What's going on there?
Enphase Energy, yeah, the ticker on that one, ENPH. That is a residential solar company. So solar panels on your roof, things like that. Yeah, oh boy is right. The stock today is down right now around 11%.
Yeah, wow.
Company's really having a tough year, and it's, you know, largely coming off the back of the demand destruction that's coming from the unwillingness of the federal government to really support this industry going forward. The company today said that it expects the U.S. residential solar market to shrink by 20% next year. You know, so this has been a really difficult year, not just for Enphase, but for this market in general. We've already seen some bankruptcies from companies that help people finance these projects and things like that. So yeah, you know, coupled with high interest rates, it's just really not a good time to be in residential solar, unfortunately.
Okay. Excellent stuff. Red Brown, earnings reporter, Bloomberg News, joining us here in our studio. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It is trade front and center. It looks like we got a deal with Japan. Okay, that's great for Japan. I think the European Union is probably the next big trading partner up. So let's get the latest reporting there. We can do that with Brendan Murray, Bloomberg Global Trade Editor. Brendan, where do we stand with the European Union here? I'm hearing some reports that maybe they're looking to be a little tough negotiator here. What do we know?
Yeah, exactly. So the talks are ongoing. Some of the principals are speaking today, as a matter of fact, and they're pretty much speaking almost every day now. The EU has sort of ratcheted up the pressure and said they're going to deploy their toughest tool in a trade conflict if the President Trump puts these 30% tariffs on European goods, as he's threatened to do so. So Scott Bessent, the Treasury Secretary, saw that story that we broke earlier today and said, yeah, that's just a negotiating tactic, and I don't blame them for doing it. So there's a lot of posturing going on at the moment. The bottom line is, does the European Union have a deal that's acceptable to President Trump? And so far they don't. But things can change rather quickly, as we saw with this surprise announcement late yesterday of the Japan deal, which those talks were dragging on for weeks and weeks and going nowhere ahead of the upper house election in Japan over this past weekend, and something broke free in recent days for them to be able to announce that. So the European Union, though, is really the big economy that matters from here forward into the August 1st deadline. The European Union's trade with the U.S. is bigger than China or Canada and Mexico. So it's really, when you add those 27 countries together, it's much more economically significant than these other smaller deals are. Japan's not a small economy. It's the number 5 U.S. trading partner. But the real big fish here is a deal with the European Union.
And so could this trigger a broader slowdown in transatlantic trade? And what kind of sectors will be affected? Is it autos, aviation, or agriculture?
Yeah, it's all of those industries that you mentioned are sticking points. The U.S. wants greater access to for American imports of agriculture goods and things like farm goods that go into European countries. That's been one of the big sticking points on the U.S.'s side. The Europeans, are also being asked to, free up some of their markets for critical minerals, that they can cooperate with the U.S. against China on critical minerals. So there's a lot of issues, and a lot of these are it gets down to the granular detail. So that's why these talks take so long. They've been going on for 3 or 4 months now. But Secretary Bessent sounded this morning on Bloomberg Television like he thought that they were headed in an optimistic direction. So we'll have to see if they can put that together over the next 10 days.
Brendan, is August 1st a key date for these discussions with the EU?
Yeah, I mean, the White House has said pretty firmly that if you don't have a deal with us by August 1st, you're going to get the higher tariffs, the 30% in the case of the European Union. Now, they have shown flexibility on these deadlines before, so it would not be a huge shock to see them postpone that again if they think the Europeans are negotiating in good faith. There's a separate deadline for China, and that's August 12th. And Treasury Secretary Bessent said that that's going to be pushed back another 3 months or so. So there seems to be some flexibility built in, but the White House is eager to get those tariffs into place. They're excited about the revenue it's bringing into the Treasury Department.
What kind of retaliation should U.S. companies be preparing for if the EU follows through? I'm just thinking of major U.S. exporters like Boeing, Ford, and alcohol like whiskey.
Yeah, exactly. Those are the kinds of things, products that the European Union was targeting. Boeing aircraft, bourbon is another sort of iconic American export that that they could hit. All told, it's about 100 billion euros worth of American products. The European Union is ready to retaliate against if they decide that's the route they're going to go. That's about a third of all American exports to Europe. So it's a significant amount of business that they could strike back against. Of course, President Trump just says, if you retaliate against me, I'm going to re-retaliate against you. So that's where we get into this spiral of a tit-for-tat trade war that just keeps escalating and escalating.
Brendan Murray, thank you so much. Appreciate the update there. Brendan Murray, Global Trade Editor for Bloomberg News, just joining us from London. And again, I guess, Isabel, the deal with Japan, maybe that's going to serve as a little bit of a template, maybe for a deal with the European Union. I'm not sure.
Maybe, but stocks are gaining fresh fuel after that trade agreement, so investors are kind of cheery on that.
Yeah, that's kind of the thing. And one of the questions I always have is, like, how united is the European Union? Like, how much of a union are they in negotiations? Hopefully they can get something done. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Right now, the major stock average is mixed. It's technology bringing down the NASDAQ 100 to 31 points lower right now, down 0.1%. The S&P 500 up 15 points. That's a rise of 0.25%, adding to yesterday's record close, 63.24 on the index. And the Dow Jones Industrial Average 208 points higher. That is up of just about 0.5%. Let's start off with the data that we got at the top of the hour. Sales of used U.S. homes sliding for the month of June to a 9-month low. Existing home sales falling 2.7%. The national median sales price also hitting an all-time high. Okay, you've got to put on your thinking caps.
Go.
Give me a guess as to what the average, the home price is right now, the all-time high.
$400,000.
Very close. 435. 435.
Okay.
Anyway, if you need help
That
on
sounds
your
a
first
lot.
house, Isabel, Paul and I are here to help.
I've accepted I'm a renter forever. So.
Okay. Communication services, information technology, biggest drags on the S&P 500 right now. A couple of members of the Mag 7 cohort report after the close of regular trading. We're here from Tesla as well as Alphabet. And Lamb Weston Holdings, this is the French fry supplier. It's actually the best performing stock in the index. It's up 19%. That's because they're restructuring and cutting 4% of their global workforce. This Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
1993, trying to buy a house in Summit, New Jersey. The cheapest thing I could find is $250,000. Couldn't afford it. Bought a house, brand new, 4-bedroom colonial in Richmond, Virginia, $150,000. So we moved there, and then I looked for a job, and that's how we did it. And so that's how you did it.
Reverse
That's
engineering.
Exactly. All right, John Tucker, thank you so much. Isabel Lee, Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio, streaming live on YouTube here. Right smack in the middle of earnings season, let's talk toys. That sounds kind of fun. Hasbro reported numbers that look solid to me. They beat, they raised their guidance, yet the stock's down 3%. I just don't get this whole stock thing. Lindsay Dutch, she's the pro. She understands what's going on here. She's a consumer hardlines analyst at Bloomberg Intelligence. Lindsay, talk to us about what we learned from Hasbro in the toy market.
Yeah, hi, Paul. Hi, Isabel. Thanks for having me. So yes, Paul, just like as you said, strong quarter, really a continuation from the first quarter where all of the strength is really coming from Magic the Gathering, Monopoly Go, and Hasbro's digital gaming business. What we did not learn from the release is really about the consumer and what the outlook is for toys in the second half. And that's causing a lot of uncertainty, what that back half might look like.
I was going to ask, how exposed is Hasbro to current consumer spending trends, like especially in the toys and entertainment area? Do we see more middle-income shoppers buying Hasbro, or what kind of consumers are you seeing?
Yeah, so the toy business typically grows with GDP. It has been, coming down a bit challenged over the past couple of years after the peak during COVID when everyone was stuck at home buying a lot of toys. This year was supposed to be a turnaround year for toys. And then early this year, we got hit with the tariff news, which created a lot of uncertainty in the business. One is, we don't know how the consumer is going to react to broader price increases, and we do expect increases on toys very specifically. So companies like Hasbro and Mattel, some of the biggest toy makers in the globe, are really faced with that challenge. in second quarter, normally retailers already start buying their holiday inventory. That didn't happen this year. Those retailers, Walmart, Target, took a pause. So normally by now we would sort of get a sense of holiday, but because of that pullback, you know, Hasbro saw their consumer products segment see a 16% decline in second quarter revenue because of that hold on those orders.
I would have thought they would have tried to front run the tariffs here. What's the company saying about when they expect some of these retailers to place their orders?
So they expect the orders to be sort of made up in the third quarter. And the challenge with that is, you know, some of those hotter toys that do sell out, maybe in the early holiday shopping season, there will be very little time to sort of replenish on that end. So Hasbro did continue their production, which, you know, they do still make about 50% of their toy products in China. They continued in May. You know, they took some of that inventory on their books in the second quarter. That's why we saw the inventory come up there. You know, they're hoping that the retailers, you know, place more of their orders in the third quarter, you know, ahead of holiday. You know, the risk is they just don't really know what those pre-order will be, and there will be limited time for additional orders like in that fourth quarter right before holiday.
To your point, in April, the company warned that tariffs could impact profits by as much as 60 million to 180 million this year, and they did reduce their Chinese manufacturing output to less than 40%, or at least plan to by 2026. If they do that, will they pass on the cost to consumers, and do you think consumers will bear the brunt of that burden?
Yes, so Hasbro is using multiple mitigation strategies. You know, they have been very focused on cutting costs. You know, prior to tariffs, they sort of accelerated some cost cutting at the corporate level. They will be raising prices, I think, selectively on toys. They are also just going to not sell certain toys in the
Hey,
US.
Hazard Matt. Still looking for a trade, doing some work.
So if they can't raise the price,
Too much volume right now to do anything. I'm just waiting for it to settle
they're sort of
in.
using a mixed strategy.
Had
They
news
had
at
predicted
10:30.
Tariffs to cost 60 million to 180 million on an annual basis.
Oh,
You know,
news
3
is
months
coming
ago,
up
they sort
now.
of dropped that impact closer to the 60 million side.
That's what I was waiting for,
because
the
of
news.
the
Let's see
lower
how the
rate
news
on
goes.
the
I'll be
Chinese
right back.
imports. They are working to diversify the supply chain, but that will take time. The goal of less than 40%, that's really by 2027. So in terms of this year, you know, where their supply chain is, they're sort of locked in with that at the moment, and they kind of have to work with the price increases and sort of balancing where do I increase price and not hurt the demand even more.
All right, Lindsay, thank you so much. We appreciate your analysis there. Lindsay Dutch, she's a consumer hardlines senior retail analyst for Bloomberg Intelligence, based down there in our Princeton, New Jersey campus. Talk to us about Hasbro, the toy maker. Had some really good numbers, had some good guidance, but there's still tariff concerns out there surrounding this industry as well as other stock trading off a little bit. Let's break out and talk to the markets broadly defined. We want to go to Tatiana Darrier, strategist for Markets Live. Tatiana, thanks for joining us here. I know you guys do what you guys call a Markets Pulse survey. Tell us what that survey is and what's it telling you these days?
Yeah, so we try to survey investors out there just to get their thoughts and a sense check on the market, you know, from time to time. Sometimes we do it instantly or every other week or two. So this time we asked about earnings, and the takeaway is that investors expect that earnings will still boost stocks despite all the tariff concern. Wow. And that points to sort of two big themes, right? That tech is still the only game in town. If you look at earnings projections, there's a huge gap between the Magnificent Seven and the rest, which are expected to see really about no growth, 0.4% EPS growth here. And that the second theme is that investors and analysts expect that the impact will really be confined to the consumer sector. You were talking about Hasbro. Yep. So companies that sell consumer goods, and they're not seeing yet signs that this is going to be sort of a market, broad market reset, but rather just confined to this sort of consumer discretionary sector.
What did the participants say when it comes to holding U.S. equities? Did they plan to add more exposure, keep it the same, or will they reduce those?
Yeah, so that's a great question because it's a recurring question for us. And so far, investors are still signaling they want to hold on to the stocks. And this is very interesting, right? They pointed tariffs as being the one single biggest concern when it comes to earnings, but few are acting on this. Few are actually reducing their positions. So investors think that stocks will have better returns than bonds over the next few weeks, and so far are holding onto their stocks because, I mean, you know, when NVIDIA reports earnings that grow over 40%, who cares about the tariffs? Those take a backseat to the tariff concerns.
So in terms of sectors here, you know, information technology, the Mag 7, even and financials have been seen as a part of a positive Trump trade starting out the year. Is that still the case?
Yes. So financials, you know, set a solid tone for the earnings season. We've seen sort of those estimates rise a little bit. I mean, to be honest, the consensus was very low heading into this. So it was a very low bar to clear. It's going up a little bit, but still for the X Magnificent 7 is going to be a tough one, which will only reinforce, I think, tech's dominance in the stock market.
So you mentioned that tariffs were a big concern, but they kind of disregarded that because they're really bullish on earnings.
Yeah.
What do they think will be the headwinds to earnings?
Well, tariffs, you know, tariffs again for everybody. It's just that when you look at the entirety of the stock market, you know, right now earnings are driven by these big tech companies who have a lot of leeways to mitigate some of this concerns. And, you know, some companies will do it better than others. You know, we've learned that companies are trying to offset tariff costs via various strategies like pricing power or supplier negotiation or supply chain diversification. So I think this season will actually offer a lot of answers. Who's paying the tariffs? Is it U.S. companies, the consumer, or is it foreign companies? So then we will get to see, is it spreading beyond the consumer sector, or is it really going to be a confined issue? The market right now thinks it's pretty confined. Let's see if that changes and how that impacts investors' view on the market broadly.
Well, in your note, 58% of your respondents say the earnings season will give the market a boost, but that means 42% thinks that it might push the market down. That's a big number.
Yes, I mean, it was pretty close, but you know, the bullish views still were higher than those. I mean, you know, jitters are there. There's the sense that markets have gotten too complacent because yes, sort of, you know, those tariffs, reciprocal tariffs have been paused where we've talked about a July deadline, now an August deadline, which is still unclear and likely to be postponed, the consensus thinks. But tariffs are slowly creeping higher. Sort of the baseline is sort of creeping higher. I mean, we're now talking to something closer to 15%, which if we go back to April, that would have been close to the worst case scenario, 20. So we're sort of in the middle now, but, you know, times are such that the market is happy with this rate and is taking it as something that is manageable.
All right, I'm going to Europe in the fall. If I have an extra day, where do I go in Romania?
Well, you should go to Constanța, which is the sea resorts, and yeah, and the mountains, Brașov.
All right, very cool, very cool. Romania, it's not on my bingo card, but you never know. Tatiana Darie, strategist for Markets Live, joining us live here in our Bloomberg Interactive Brokers studio. Looking at the market here, still a little bit mixed here. We've got a little bit of a lift here to the Dow and the S&P, but the NASDAQ's just off fractionally as the market digests earnings, certainly first and foremost, but then, of course, the tariff situation. So we will stay on top of that for you. Coming up, we're going to talk to Mandeep Singh, Bloomberg Intelligence Senior Tech Analyst. What's going on in the world of technology? This is Bloomberg.
He was earlier. He stopped in. He was here earlier. Let me see. Yeah, he's in here. I don't know if he's taking a nap or whatever, but he's here. Quality office here. Trying to get my printer to work. I gotta scan some stuff in. I'll be back in a little bit.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Another day, another record. The trade deal with Japan pushing the S&P 500 to another fresh record. Earnings continue and kind of mixed results. Capital One advancing, the credit card company. They reported results that analysts viewed as promising. Texas Instruments delivering an underwhelming forecast. Could see some fireworks later today. That's when we get the first set of the Mag 7 earnings this season with Google parent Alphabet and Tesla earnings. Again, that comes after the close of regular trading. Right now, the S&P 500 13 points higher. That's up 0.2%. 63.23 on the index. The Dow Jones Industrial Average up 220 points. The Nasdaq 100, that is down 50 points. That's down about to 0.2%. Alan Bond at Jensen Investment Management says, you know what, there's more good news than bad for investors.
Nothing really scary yet, and it's allowed investors to latch onto other themes. And the theme that's really driving the market still is the business performance and the earnings from the big tech companies, and the theme of AI and investment. And that theme still seems to be very alive, and we think that's what's driving the stock market.
Still time to change careers, kids. Boeing out with its 2025 pilot and technician outlook. The report says commercial carriers are going to need substantial hiring and training to sustain the global commercial fleet, including 660,000 pilots and 1 million cabin crew members. South Asia and Southeast Asia are the fastest growing regions for personnel.
We need air traffic controllers, dude.
We need all sorts of things.
Yeah.
But, you know, that's a career to think about. I tried my hand at piloting.
How'd that go?
I'm going to fly commercial from now on.
Okay.
So,
Noted.
anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
John, you and I are probably too old for a career change, but Isabel, I mean, if she wanted to, she could just drop this whole journalism thing and become a pilot.
She could do anything, really.
At her, everything's in front of you. Isabel Lee, Paul Sweeney.
Your whole
live
world is out there.
Is
Your whole
out there.
future, Isabel.
Thank
What is
you.
this, like a pep talk?
And you're stuck with us. You're in the Bloomberg Interactive Broker Studio. Isabel Lee and Paul Sweeney. As John was just reporting, we got Google reporting numbers after the close. I tell you, this stock, folks, literally has done 0% up or down this year to date. The stock's done nothing here. So people are going to be paying attention to what Google has to say after the close. One of those listeners will be Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence. Mandeep, all right, as someone who has a faint knowledge of Google, I think their fundamental well-being and essence is at risk here from AI. Tell me I'm wrong.
Well, I would disagree with you simply because when people think about Google, they think they just have search, and it still drives the bulk of their free cash flow. But now they have incubated 3 more businesses that I would argue, when you look at it, as just separate entities, they are right up there in terms of, businesses that could be worth $500 billion or more. Oof. And so YouTube is one of them. Cloud, which is an enterprise-focused business compared to everything else that Google does on the consumer side, that's another one. I would argue that's another $500 billion plus business. And then Waymo now. That's the third big one, which, again, $500 billion may be an exaggeration, but it has the potential. That is where, they could really hit the jackpot. So I think Alphabet as an entity, clearly search is what subsidizes everything. But when it comes to the future, I would bet on these 3 pockets, and search will continue to be a cash cow. I don't think they're losing their market share in a big way. Clearly, they've got, headwinds when it comes to protecting their market share vis-a-vis the competition from, OpenAI and other players that have emerged on the LLM side. But still, that business could grow high single digit.
Really? Okay.
How is Alphabet positioned in the ongoing AI race compared to Microsoft, Amazon, Meta, never mind OpenAI's ChatGPT?
Well, so their models have caught up in the leaderboards. When you compare Gemini to OpenAI's leading models, I mean, there is this Olympiad that's going on where both OpenAI and Gemini are leading the pack in terms of solving the most complex questions. And from that perspective, I feel Google is the one who has to protect their share. And the fact that they're right up there with OpenAI, which is leading the pack, to me, that sends a message that, they're not disadvantaged. Obviously, they'll still lose some market share because they are 90% plus share. So when you have got another company that's got, the leading models, they will take some share, but they don't have an ads business. And that's where, Google monetizes far better than anyone else in the LLM space because of their ad stack. They've built this over last 25 years. It's the most sophisticated ad stack that you can think of in the world.
All right. So the good news is I like Gemini, Google Gemini. I find it very helpful to me. The bad news is I don't click anymore. So those number of clicks times the revenue per click, that has to impact their business. How do you account for that?
Yeah. So look, their share of volume, search query volume, will go down. And it's visible in the numbers. Last quarter, their ads clicks growth were like 2%. That was the lowest in the last, I would say, 4 or 5 years. And so from that perspective, they're making up in the ad pricing, which was high single digit grower. So that's the lever that Google has, is when they see the volume going down, they'll make your ad even more targeted, that advertisers will be willing to pay for the fewer slots that are available. And I feel this quarter will be no different. So there will be pressure in terms of ad volume, but ad pricing should come out to be strong.
When it comes to macro conditions like inflation, foreign exchange, the volatility in tariffs, how much of that is impacting Alphabet's top line and bottom line?
I mean, Alphabet is a company with over 50% plus international revenue exposure. So clearly a lower dollar is good news. And from that perspective, currency will be a slight tailwind this quarter. But look, at the end of the day, when we are thinking about LLMs and the impact, it's cloud where they will see the biggest lift. I mean, Microsoft has actually quantified the AI contribution to their cloud segment, which is almost 16% growth last quarter, and it's expected to probably cross 20% this quarter. In the case of Google and Amazon, they haven't quantified the AI contribution, but my guess is they would be along similar percentages in terms of, at least 10 to 15% contribution to growth. And so from that perspective, cloud expectations are around 28% for this quarter. I would say it should at least exceed 30%, if not mid 30%. So there could be big upside in that cloud revenue for Google.
All right, Facebook, which you analyst types call Meta Platforms, but those of us who actually brought the company public, we call it Facebook.
Yeah.
Stock's up 20% this year. What's the story behind Facebook these days? What's the thesis?
I mean, the thesis is they will be able to apply a lot of this LLM tools in their core ad business, so the ad targeting will get better. At the same time, they're really going big when it comes to spending on AI, the acqui-hires. So I can't explain why market is so positive on them catching up, because they clearly are behind when it comes to the leading models. I talked about how OpenAI and Gemini are neck and neck. Yep. Meta is way behind, and that's what they're trying to catch up on. But the bet is on Mark Zuckerberg that he will rally the troops and their model will get better. And given it's open source, and open source will help them develop an ecosystem. So it's more futuristic, but clearly the core business is very strong, and there is application of AI which will translate into better revenue growth.
Yeah, that's an application I can really buy off on, making the ads more targeted by using AI.
But it's the same for Google.
I know.
Google will also benefit there.
Yep, I know. And that just, my boys at like CBS Television, I don't know, that's not good for them. So, and we saw YouTube, overtake everybody else in terms of total viewing. That is just, that's generational. Even John Tucker paid attention to that. All right, Mandeep Singh, thank you so much. We appreciate that. Mandeep Singh, Senior Tech Analyst, Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. There's no mailing it in from Nantucket or Vail for this guy. He comes into the studio like an adult. So we'll take a look at this market here. The S&P up 14, the Dow up 180, the NASDAQ up 7. So a little bit of green on the screen here. We're going to have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Isabel Lee, Paul Sweeney, live here with you in the Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Go over to youtube.com and search Bloomberg Live Radio, and that's where you will find us. Today, U.S. Treasury Secretary Scott Bessent, he joined Bloomberg Television anchor Anne-Marie Horton for a wide-ranging conversation on trade and candidates to replace Fed Chair Jay Powell. The portion of the conversation began with Anne-Marie asking Bessent if he's playing good cop, bad cop when it comes to talking about the Fed and the markets. Let's take a listen.
To the extent I'm able to calm the markets, and that doesn't always happen. I was in the investment business for 35, 40 years, but I think more importantly than that, I understand what President Trump is doing. And a lot of times he's 1, 2, 3 steps ahead of the market. And as you know better than anyone, the market wants instant explanations. They want clarity. They want immediate gratification. So I think that I am able to, as a former practitioner, I think about when President Trump tells me what his goals are, I think about what is the best way for me to give good framing to market participants, for them to understand what he's doing, because he always has a plan. It's not always obvious.
So you are communicating almost the strategic ambiguity that he likes to operate from.
Well, and I'm also trying to explain that there is a plan, because look, these letters went out. Everyone was, oh my gosh, these are high rates. And I think the president created maximum negotiating leverage, and the market actually took it pretty well, took it pretty well.
Just to finish on that final point then, do you think he's more emboldened to go for higher rates with trading partners now, given the market is not pushing back?
Well, I think he's created a lot of leverage because he's created an A-B situation. He is able to go to the trading partners and say, look, I am happy to take in this tariff income if you don't want to negotiate. This is a high rate, but the U.S. is taking in massive amounts of tariff income. We had the first June budget surplus since 2015, last month. We reported it this month. And so we are taking in substantial income. So President Trump is creating this leverage by saying, if you don't want to negotiate with me, I've sent you a letter with a high rate. Have at the high rate, or come and negotiate in better fashion. Because I'll tell you, what was fascinating for me, and this was President Trump at his best, was the Indonesians came with what I thought was a very good offer out of the blocks. President Trump kept pushing them. He raised the reciprocal rate when he sent them the letter, and 5 iterations later, the Indonesian trade deal was greatly improved, turned into a great deal for both sides.
All right. That was U.S. Treasury Secretary Scott Bessent speaking with Bloomberg Television's anchor Anne-Marie Horton. And Isabel, for what it's worth, Anne-Marie did a great job today interviewing Secretary Bessent and Secretary Lutnick. Just a great job of monitoring, taking care of those interviews. Did a great job. All right, so we got the markets here. We got some positive movement in the markets here today. Isabel Lee, your job is to look at markets. That's what you do at Bloomberg News. This radio hustle is just a side gig. What are you working on?
I have a story recently out. It's about SMAs. They're separately managed accounts.
Okay.
So think of them as a wrapper, like a mutual fund and an ETF. But the difference is you hold the securities directly. So a lot of ultra high net worth folks use this because, well, the minimums are higher, like in the hundreds and thousands of dollars. And you have a personal advisor, they advise you. But the biggest appeal of this is tax loss harvesting.
Tax loss harvesting. I think I've got a lot of tax loss harvesting, it feels like.
Exactly.
What is that?
When you sell some of your stocks that are at a loss and then you get some of those back, basically. It's just a simple accounting trick that investors use. They like that. So, but there's a wash sale rule, which means that you can't sell securities within a certain time frame. I think it's some 30 days that are identical. If you sell Pfizer, you can't immediately buy back Pfizer or Moderna, for that matter. that's a trick of IRS because then you'll do a lot of nefarious things. So crypto SMAs, as always.
Crypto SMAs?
Yes. They don't have wash sale rule. So that's a complicated story I wrote because, again, it's another loophole that you're finding. So we can get into the weeds, but the big gist of this is how a lot of these crypto are really just mussing their way into traditional finance vehicles that you see in equities and fixed income. But they don't have the guardrails for that because they're new. I mean, Bitcoin was just created from the ashes in 2008.
Interesting. So are people trying to do that? Kind of trade their crypto within SMAs, separately managed accounts?
The whole appeal of SMAs is you hold Bitcoin directly and forever.
Okay.
And if you ask, why not just an ETF? Because you don't hold the Bitcoin directly, you hold shares of an ETF. SMAs are more expensive though, but people are still willing to pony up for those fees.
Okay, all right. Check it out on all of Isabel Lee's reporting for Bloomberg News on the Bloomberg terminal. And a lot of that stuff gets out there on Bloomberg.com, so check out her research. And all the markets team, I mean, all those folks there, they do great work kind of writing about what's going on out there in the markets. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Looking at the markets here, S&P's up 18 points, that's 0.3%. The Dow is up 190 points, that's 0.4%. The Nasdaq's lagging here. Only up about 24 points, that's 0.1%. Again, on the NASDAQ and for the broader market, we've got Google reporting, Google after the close today. We'll take a look at that, as will Tesla report before the close.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, I got a lot going on in terms of the earnings. We have some more on the tariff situation as well. We're going to check in with John Butler. He's a Bloomberg Intelligence senior telecom analyst. AT&T reported numbers. We'll get the latest from JB on that one. Joanne Feeney, partner and portfolio manager at Advisors Capital Management, get her thoughts on these markets. BNEF, Ryan Fisher, Bloomberg BNEF EV charging team leader. What's the future of EVs in this market when you got an administration that is less supportive of that whole electric vehicle transition than maybe we had in the past? So we'll get the latest on what we're seeing in the numbers there. But right now, let's kick it all off. John Tucker, Bloomberg Business Flash.
All right, guys, the trade agreement with Japan fueling another advance into record territory for the S&P 500. It is up right now 20 points, a rise of 0.3%, 63.29 on the index. 9 of the 11 major industry groups in the S&P 500 higher. And you have healthcare, like it was yesterday, in the lead today. Technology with communication services, the biggest drag. And of course, after the close of regular trading today, the first of the Mag 7 cohorts, you get Google parent Alphabet right now down 0.7% ahead of their earnings. And Tesla shares, always one of the most actively traded right now. It is up just about 0.5%. Before its earnings report later today. Dow Jones Industrial Average up 205 points. That's up 0.5%. The NASDAQ 100, 5 points lower right now. And Julian Emanuel at Evercore ISI worries stocks are just too expensive.
At this valuation, which is the highest basically outside of the dot-com boom and bust, we think actually a pullback would be healthy.
Starbucks launching free study rooms in some of its China outlets, so people won't be required to purchase anything from Starbucks to use these
Sounds
spaces.
like a great business model.
I wonder if you can bring your own coffee. The coffee giant has been weighing options for its China business, including a steak sale. There's one by me, and it's just like, I don't know what people do in there. They just hang out all day.
I was joking.
What's the
I think like a
attraction?
third of the U.S. economy is transacted within a Starbucks, I think. And it just feels like everybody's meeting there, studying there, doing work there. I don't know what they're doing.
We We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
All right, JT, thank you so much. We appreciate that. Let's take a look at the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee, and we're joined by our old friend, the Alexandra Semenova at Bloomberg News. Alexandra, what are you looking at?
Always great to be on with you guys. So the meme stock revival is stretching into a second day today. Amateur traders are once again piling into beaten down companies, heavily shorted companies like it's 2021 all over again in an effort to get rich quick. And some of the names that are moving today are GoPro, Krispy Kreme, Beyond Meat. Just take a look at the swing in GoPro right now, up 45%. It was up as much as 73% earlier into the trading session. And again, this has to do with the euphoria that is spreading across broader markets. More broadly, stocks are, of course, are trading at record highs. Bitcoin has doubled in the past year. You're seeing SPACs all the rage again. And so it's not surprising that traders are kind of, this animal spirit is permeating into more speculative corners of the market. They're looking at where to put their money beyond companies like tech that have run up so much. They're scouring Wall Street bets forums on Reddit and finding these companies. Actually, interestingly, JP Morgan's trading desk today flagged that their internal basket of meme stocks is up 7.9% month to date versus the S&P 500's 1.7% advance. So really a testament of the euphoria that is happening across markets right now.
There is the SI function on the Bloomberg, which indicates the short interest. I'm trying to find a better way to like accumulate just the individual stocks which have the biggest short interest, because that does seem to be what propels this, right?
Yeah, that certainly plays a role. If you look at Kohl's yesterday, the beaten down retailer that kind of led this revival, about 48% of Kohl's float is sold short. That's according to data from S3 Partners, meaning that it is being used to bet against the stock price. By comparison, it's 20% for GameStop. So a lot of these meme traders are finding heavily shorted companies, and a short squeeze is kind of the culprit of some of these names.
What about Morgan Stanley? What's happening over there?
Yeah, a little bit more serious than meme stocks. It is being probed by the Financial Industry Regulatory Authority over its vetting of clients for risk of money laundering. This is according to a report from the Wall Street Journal. It focuses on practices that happened from October 2021 through September 2024. Morgan Stanley is already facing potential fines from federal investigations into its anti-money laundering practices, specifically in its wealth management unit, meaning it's not doing enough to kind of vet clients who could potentially be doing wrongdoing. The stock right now is actually little change, not moving much on this report.
All right, so I'm the only one in this room that did internal audit for a brokerage firm.
What was
and
that
I can
like?
tell you, when we go out to a branch in the middle of nowhere, we'd be there for a week. I would say at least half of our time, this is way back in the 80s, was money laundering stuff.
Wow.
Really? Yeah, and I'm sure it's even way more today. So I'd be surprised, because I mean, these brokerage firms take that stuff so seriously, and they have so many controls on. It's if there was anything there, not at any firm, it has to be fraud, because their controls are so tight. So it's interesting to see how that plays out.
And the response today from Morgan Stanley was that it's made so much investment into anti-money laundering practices, but clearly, apparently, that's not enough.
All right, Texas Instruments.
So that company is tumbling today after stoking fears that the tariff-fueled surge in demand is likely to be short-lived. This is the key chip maker, of course, for producers of cars and factory equipment. The company did issue a third-quarter forecast that beat most estimates, but the outlook was a little bit more guarded than some investors had hoped for. Really interesting is the stock was falling as the earnings call was happening, because analysts didn't like the tone coming from management that was a little bit more negative than they were hoping for. The main concern is whether tariffs and trade disputes will hurt sales. A sales resurgence that is in its early stages. A lot of people think that people, front-loaded their purchases of chips out of fear that, prices will be higher from tariffs, and that might not continue.
All right, very good. Alexandra Semenova, equities reporter for Bloomberg News, giving us the latest there. And you can check that out on our Stock Movers podcast. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you get listen here. AT&T reported some numbers there, some pretty big numbers in subscribers, I noted. Stock's kind of flat today, but it's up 20% year to date. Let's break it down with John Butler, Bloomberg Intelligence Senior Telecom Analyst and the pride of Lafayette College out there. John, talk to us about AT&T. That's a competitive business they're in. What did they deliver?
Boy, it is a tough business, Paul. And I'll tell you what, as quarters go for AT&T, I would say it was a relatively unremarkable quarter, and in telecom, that's a very good thing. I mean, I seem to just say a quarter in and quarter out, but AT&T is the steady hand in the space here. I mean, they just have done a great job of setting a foundation for a very good business and just executing on that plan. They do a quarter in and quarter out, and 2Q was no exception here.
What are you expecting? Like, how are AT&T and specific metrics like cash flow and net adds really playing out compared to its competitors in this space? I feel like the network space is really very challenging because, as Paul and I talked about, it's so easy to move, especially these days when you can keep your cell phone number.
Yeah, I mean, what you're talking about is switching activity. And if there was anything this quarter that sort of caught my eye, it was the churn number. And by the way, I wasn't alone. I mean, there were tons of questions on the call from analysts about churn. And for our listeners, churn is a measure of, on a net basis, what percent of people left the brand during the quarter. And AT&T, for AT&T, it was 0.87%. A year ago, it was 0.7%. So we saw this 17 basis point increase, which to me is not incredibly remarkable. It's not alarming per se.
Hey, guys.
It could be sort of a hint that the subscriber acquisition
Short King Day.
costs are
It's
going
a
to go
short
up a
King
little
Day.
bit, and that could put a squeeze on the margin.
The 200. You track the
As
200
you said,
EMA?
Isabel, there's
Yeah.
just this
All right, let me
very
see what's going on here.
competitive market out
No,
there.
never got to the
Cable operators
200.
are really
Hey,
leaning into
Snooze, how
these
you doing?
low-priced plans, and it's just making life that much tougher for AT&T.
I'll be with you guys in a minute. I'm trying to scan and send some stuff in for work. So give me like 5-10 minutes and we'll start hunting for an entry. It looks like we're starting to get organized here. I'll be back in a few.
To work for them.
Hey, John, I know that Verizon, another stock that you cover, on their call, they used, I guess, the opportunity from President Trump's tax and spending bill to boost some of their full-year guidance metrics. AT&T did not do that, did they?
No, they're actually, this is interesting, Paul. They're taking all the savings and they're driving it back into upgrading the 5G network, which they've been doing. It's nothing that they've been ignoring by a long shot, but they are trailing Verizon and T-Mobile just a bit in the deployment of what's called mid-band spectrum, which is very high capacity. So, you know, the download speeds on your phone are dictated by how much spectrum is deployed in the network, and they're going to take those savings and just lean hard into deploying more spectrum on a nationwide basis to get network speeds and network coverage up.
Is broadband still a growth driver for AT&T, or are there signs of a slowdown?
You know, it's a great question. So the other, I guess, wart on this report in my eyes was the fact that they just missed analyst expectations for fiber net additions, the net new subscriber additions that they had during the quarter in their fiber broadband business. Having said that, they continue to quarter in and quarter out deliver very stable results there. So I think the fiber broadband business is healthy. It's actually healthier in many ways than the mobility business, which is hyper competitive. But to me, AT&T, out of all the big three, is doing a great job just laying that foundation for future growth by continuing to roll out new coverage areas for fiber. So I think they've done a great job there is sort of the summary statement that I'd make on broadband.
All right, John, thank you so much for joining us. Appreciate it. As always, John Butler, he's the senior telecom analyst for Bloomberg Intelligence. Switch gears to technology here. We check in with Anurag Rana, senior tech analyst at Bloomberg Intelligence. Anurag, a lot of news is going to be coming our way from your tech space. Starting tonight after the close, we'll have Google, Tesla, then all the other tech names will be coming out as well. I'm going to start with Microsoft. Can you give us a summary of, or an update of what's happening with this software cyber breach here? It doesn't seem to be impacting the stock that much. What's Microsoft saying, if anything?
I think the news is out, and frankly, apart from the one big breach last year where CrowdStrike really got hurt, these breaches typically don't have that big an impact on the stock, frankly, because it's a small portion of the one particular application, and I think the news story is far bigger than what it has an impact on the stock. In fact, if anything, people will be more inclined to buy Microsoft security products to protect themselves down the road. They would be more inclined to move more workloads to the cloud to make sure that the online version of the software was not impacted. So if it just sells by itself, some of the security products in these breaches, obviously not a good headline for the company, but these things do happen quite a bit.
How is the cloud business looking like these days? I feel like it's one of the main drivers of growth for many companies, from Amazon to Microsoft, as we're talking about, to most of the big tech giants. Is the competition becoming more fierce, and is there a leader emerging in this space?
See, the leader was always AWS, but frankly speaking, over the last 2 years, Microsoft has really narrowed the gap because of its OpenAI relationship. They are the only company who's really seeing the biggest benefit of all the searches we are doing in ChatGPT, because OpenAI runs primarily on Microsoft's cloud network. So when they report next week, we are expecting a big number coming out of that AI contribution. So Microsoft, I think, is the bigger beneficiary right now amongst all the bigger vendors.
So, it's interesting. Is it worth investors ranking kind of who are the big cloud players, who are the big AI players? Is it worth it, or is it better just to say, AI is going to kind of be all over the tech stack, and then I just got to be long tech? How do you think about really getting quality exposure to that theme?
Yeah, when you look at cloud, I think all the top 4 vendors will flourish and flourish well. I mean, that would be AWS, Microsoft, Google, and then Oracle after that. So all 4 will make a lot of money. Then you want to dissect each one of them. Within this group, Microsoft is the one that's seeing the current direct benefit, and that's because of OpenAI. The other 2, whether it's Amazon or Google, will start to see more and more revenue flow in because of the applications people are building on their cloud platform. And then lastly, on the Oracle side, they are benefiting in another part of cloud, which is more on the infrastructure side, where they're getting a lot of money or future funding from OpenAI to create their data centers to help train the model. So each one is slightly different, but I would say, as you mentioned, the total basket should do well over time.
You cover tech, and next week is a big week for those companies and beyond. Tech behemoths are expected to deliver nearly 15% of profit growth and robust demand for AI, and that's compared to the virtually no growth for the rest of the 493 stocks. Are you watching anything, any specific company you're excited about? And you mentioned you're looking at cloud, but is there anything else that is factoring in your outlook?
So there could be 2 elements of it. One is the cloud, the AI side of spending, and the non-AI side of spending. What we saw from SAP yesterday and Infosys this morning, and then Tata a couple of weeks ago or so, that the non-AI tech spending is under pressure. People are not spending as much because they are not sure how the tariff-related uncertainty is just playing out. So they're seeing a delay in closing of deals and everything around it. But on the AI side, we anticipate strong, results from Microsoft, for example. So there's a true dichotomy over there between the 2 vendors. The third thing that we are watching is actually what happens on the margin side of things, because a lot of these companies are investing very heavily in AI. Because of that, their margins are going to get squeezed. And for that, what we think is going to happen is they're going to take reduction in force, either through not hiring at the same pace that they have been, or basically laying off a portion of their workforce in order to counter some of that pressure. So those are the 3 themes that we are most interested in right now.
Anurag Rana, absolutely, thank you. Appreciate it. Anurag Rana, tech analyst, Bloomberg Intelligence. Anurag Rana, Mandeep Singh, those are our 2 senior tech analysts. They manage our global technology research effort for Bloomberg Intelligence. We have close to, I think, 20 analysts covering technology on a global basis, a lot based in Asia, based in the US, and based in Europe. And that's the way you have to cover it, folks. Tech is an all-encompassing sector. It's the biggest part of the S&P 500, and you have to have the complete coverage. And we do on a global basis, I think, the best tech research on the street with the best data helping them to inform their research. We appreciate getting a few minutes of time from Anurag and from Mandeep earlier, talking about some of these tech names. Again, Google's going to report after the close, as will Tesla. I'm going to pay attention to that Tesla phone call. I want to see how Elon Musk kind of positions his role in Tesla vis-a-vis his other issues as well as his political aspirations as well. So we're going to have all that coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. S&P 500 adding to its gains. It's another record. Industrials and healthcare leading industry groups right now. The French fries supplier Lamb Weston Holdings, best performing stock in the index. Right now it's up over 20%. They're undergoing a restructuring, cutting 4% of the global workforce there at that company. Tech shares weighing on the markets right now. And after the close, we're going to hear for the first the Mag 7 stocks, Google parent Alphabet. We're also going to get results from Tesla again after the close of regular trading today. The data today, sales of previously owned U.S. homes falling in June to a 9-month low.
All right, I'm back.
Contract closings decreased 2.7%. Cost of a house
Hey, Snooze, how you doing?
Sales price increasing to over $400,000. S&P 500
Good.
17 points. That's a rise of 0.3%.
All right.
63.27
Good deal.
on the index. The Dow up 100.
Yeah, we're chopping the VWAP. Good call, Hazard Matt. Good call.
Down just 5 points. And
Right now, we just crossed over the VWAP on both the ES and NQ.
Cost of the global contracts. Wow. The gap widened.
There's your
actually
ES.
widened
Let me go
yesterday
back to the
record.
NQ.
This comes after Coca-Cola said it would launch a new product with U.S.
So we're in the
cane sugar
shaded
this
area, which
fall.
means there's no
Problem
trade
is,
right
the
here.
US actually doesn't
So from
grow
here,
that
we
much
got to see if we
cane
reject
sugar.
the
We do
VWAP
get cane sugar from places
and go
like
back down,
Brazil,
or if we confirm above the VWAP and continue higher on both the ES and NQ before we can find an entry. So we're still holding a little bit.
Fructose.
We're still holding. Volume's really low today.
Sugar was so expensive in the early 70s. Nixon
Well, not
turned to his
really, I
guys and
guess.
said, come
Volume's
up with
okay.
a solution. They said, well, farmers produce corn, and you can make like
That's
a
what we're
sugary
doing.
stuff from corn. High fructose corn syrup.
There you go.
That's cool.
And you can ask your doctor about how healthy it is.
Not cool.
Not cool. All right, John Tucker, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I think Tom Keene had it right in the last few days, characterizing this market as just grinding higher, and that's another.
My hodgepodge of
that's a pretty good
computers, I
explanation
really got
of
it.
where we are right now. So we're right in the middle of earnings. Let's check in with a professional who does this stuff for a living, Joanne Feeney. she's a
Decide I'm
partner
gonna
and portfolio manager
sit
at
down
Advisors
and get
Capital
my network
Management,
all
out
straightened
there
out.
in Jersey. Joanne, what are the conversations you're having with your clients these days? Do they feel like we're a little over our skis? Should we be
I
pulling
got this
back, or
high-speed
should we put
router,
more risk on the table?
but
What's the conversation like?
The internet company says I have to use their router, and it was supposed to be set as pass-through, and I think when the power went out the other night, it's not pass-through anymore because I'm having to plug stuff directly into their router to get my printer to work, and it's a hassle, man. I just got to go through everything. Sales leads suck, dude. There's like no leads right now, and they're just not good. But I've already made my quarter, so whatever I do for the next couple weeks is just gravy. So so it's not that big a deal yet. If it continues into next month, it's gonna
happy
get a
with
little
what's
tough.
happened to their portfolios, but they do look on with a bit of nervousness given all the sources of risk that
Trying
are
to
out
get
there.
out of this department.
When you say
trying to
content,
get
why do
over
you
into
think they're
merchant
content? Do you think
services.
that they really just haven't fully grasped the economic cost of these tariffs, or they're just choosing to look elsewhere, like earnings, which have been fantastic so far?
Yeah, earnings earnings have certainly helped, and I think that most investors aren't that sophisticated when it
Might
comes
be a
to
short
the
king
potential
day.
risks of the
I
tariffs.
thought we would bounce off
And what they're
200.
looking at instead is what's happened
Another
to their
record high
portfolios, and
day.
they've gone up for a few years.
Did we
And
go
so
past the
that's really
record
source
today
of
when
their
I wasn't
content.
watching?
The other shoe may drop. If
Record high
the
is way up
economy
here.
does pull back,
This
or at
is
least
record
slow
high
down,
for
or the market
futures is
pulls back, as some of
23,425.
these costs of tariffs actually filter through into company profit margins and earnings. We're not seeing that yet, at least not for most companies. And the early results out of earnings have been pretty positive, particularly for the banks. There's some exceptions here and there. Texas Instruments obviously
All right.
had great numbers, but their outlook was
All right, let's figure out what we're
explicitly
doing
cautious
here.
because of those tariffs.
So, Joanne,
Yeah, we're in
the fixed
VWAP
income
chop
space,
mode. If you see
content to
the
sit in the
ES
treasury
is
market?
on
And
top
if
of the
so, where?
VWAP,
Or do you suggest your clients take some credit risk?
and Q is below.
Yeah, so our fixed income
So
team
I'm gonna give
has
it
done
4 or
a terrific
5
job of
candles.
looking at individual corporate bond issuances and
Give it a
performance.
little
So
time to see
we do
which
very little at
which
this
way
point
which
in
end we end
treasuries
up
because
on.
we're getting such great opportunities on the investment grade side of corporate bonds, and so we handpick bonds for
All
our
right, I
clients.
gotta
Every
work a
client,
couple of these leads.
that's above a
You
certain
guys,
minimum has
just
all
whatever you
individual
type in, I'll
bonds
keep
and
an eye
individual
on my.
preferreds, and we're
I'll
able
keep an
to
eye
get
on the
some
chat.
very attractive yields without taking that credit risk. And right now, as you know, higher yield issuances are not paying a lot for taking on that risk. So we've really kept that to a minimum. We just don't need to go there for most of our clients.
Going back to tariffs, what's your take on the argument that tariff revenues are a distortionary tax on U.S. consumers? Do you think there's a smarter policy alternative, or do you agree with that school of thought?
Well, Isabel, I'm an economist by training, and so therefore I hate tariffs because they are distortionary. And what I mean is that we're putting a tax on ourselves. We're putting a tax on our own consumers and our own firms. And it's distortionary in that it causes them to have to go elsewhere to a less appealing solution. In many cases, these tariffs are going to apply on goods that we simply do not produce in this country. So there's nowhere for them to go. That's going to constrain consumer and household budgets, which means they have to economize elsewhere. We saw that in some of the recent CPI and PPI data. You know, the prices on appliances, for example, were way up, and prices on services were down, not because they suddenly got cheaper, but because consumers probably were demanding less of them, particularly in leisure and travel, restaurants, that sort of thing, because their budgets are getting more constrained. And on the firm side, I mean, just raising the cost of inputs is just not a good thing. It's going to lower their profit margins, or they're going to have to pass it on to their final consumers. Ultimately, again, a tax on the consumer that is not.
Did you
a
trade
particularly
yesterday,
efficient one.
Snooze,
There
or you
are
take a day
lot
off?
of better ways to close the federal budget gap. But the recent
No.
administrations have
I
been
had a
unwilling
good day.
to
Your
do
ga-
that
oh
on
yeah,
the
you're
revenue
playing your game.
management
How's your game?
side.
Was it pretty
And
good?
tariff
Was the
revenues
drop
are
pretty
a
good?
drop in the bucket. They are a rounding error. So any talk of how tariff revenues are going to help, deal with the deficit is just fantasy.
Joanne, thanks so much for joining us. Appreciate it. Joanne Feeney, she's a partner and portfolio manager at Advisors Capital Management. Well, I saw right in the middle of earnings here today, we saw Hilton, the hotel company, reported numbers, and they lowered expectations for net income and saying that demand for U.S. hotel bookings declined in the second quarter. Let's break it down a little bit more detail, because boy, I get on a plane, it just seems like it's packed, and I assume those people are staying at hotels and everything. Let's check in with Jody Lurie, senior credit analyst for Bloomberg Intelligence. She covers all the fun stuff, the gaming business, the hotel business, the casino, the cruises, all that good stuff. So she has a great view on the consumer and kind of what's happening out there in that part of the economy. Jody, what did you learn from Hilton here? What are they saying about their business?
So, Paul, I mean, I think what's so interesting is they definitely tried to provide an upbeat, optimistic view. The amount of times that they talked about the thawing that after the freeze from tariffs was sort of interesting to hear. And I mean, I think it fits a little bit with the conversation that we've been having with clients, is that what we've been seeing in our data is 2025 summer should still be pretty strong. But I think as we get into the latter part of the year and then into next year, it's a little bit uncertain. And I think they were trying to suggest that economic data is positive for them and will provide for additional sort of demand. But it's still a little bit, it's still a little bit hazy, at least for me. And I mean, more than anything, they're so focused on giving back to shareholders that
Drop in price.
And as a credit analyst,
great,
that's
yeah.
not something you necessarily.
Hilton's one of those
ES
companies
is
that was
pushing
like,
higher.
If they wanted to be investment grade, they probably could work to it.
Yes, is pushing higher. NQ. So
ago.
this is like typical chop. You don't want to get involved in
stronger
this.
than a lot of their peers, but from a leverage
So if you
standpoint,
didn't
they're
catch
just
the
happen to
drop
be
early in the
around
morning,
3.5 times, and they've indicated that they want to be a little bit higher than where they
well, that was too
are.
early
So,
anyway. That
I mean,
was
I think
right
they're
in.
going to invest in organic growth and look at ways
Yeah,
to
that was
sort of
at the
grow some
open.
of their newer brands like Spark.
So we
which they've
haven't
been
really
talking
found a
about.
place to do
And the
our
most
entry
interesting thing related
find,
to that
to
is,
call the
it
first
seems
entry
like
yet.
they're looking outside the U.S. for growth opportunities. And maybe that's a function of the fact that while they think the U.S. is still having decent momentum, perhaps they need to sort of look outside to sort of really see the growth.
Where are they finding that growth elsewhere? And is that in relation to just the lower consumer confidence in the U.S. and the decline of international travelers? So then they just decided maybe looking elsewhere is better? What was the rationale behind that?
So they actually talked about on the first quarter, they talked about Canada and Mexico demand. And they said specifically that it's such a small percentage, it's like 1% of their total revenue is Canada and Mexico. And inbound U.S. is certainly a large portion, I think, larger than they sort of indicate. But I think they're also sort of saying, okay, yeah, it's going to be an effect, but it's not that much effect. I think they are seeing, and what we sort of heard on this most recent call, is that there is an element of trickle-down effect related to what's going on in the U.S., the prevalence of travelers coming into the U.S. versus historically because of the tariff and geopolitical environment. And so, they mentioned Saudi Arabia, they mentioned India, they mentioned Turkey on the call, and I think they're looking at anywhere there's potential growth opportunities. I mean, Hilton's so large and global that it's not really surprising to me, but it is sort of interesting when you hear a company that's 75% U.S. dominant that they are sort of looking to expand elsewhere.
Hey, Jody, we're hearing from a number of companies that depend upon travel, that maybe international travel inbound to the U.S. is less than it may be in past periods, maybe in part because of all this tariff discussion, people deciding not to spend their travel dollars in the U.S. What's Hilton say about that?
So Hilton didn't so much talk about it.
All right,
on this
NQ is
call,
challenging the
per se, but
VWAP.
They danced around it a little bit, saying that they think that, with the tariff situation sort of, it hasn't resolved itself by any measure, but with us getting over that shock of Liberation Day, that they're now seeing that demand is picking up. They're seeing, business conference travel. And so, I mean, I think they're sort of dancing around it. But if we recall, I mean, a lot of the companies in my space still haven't gotten back to pre-COVID levels when it comes to inbound US. I mean, we like to talk about United Parks, which is formerly SeaWorld, because they talk about it in their Florida parks that they still haven't seen the return of international travelers to pre-COVID levels. And so you add on top of that the tariff effect and the geopolitical environment, you say, okay, if we weren't back to pre-COVID levels and then you have this component to it, I don't know if we'll get back to pre-COVID levels sometime soon.
Jody, thanks so much. Always appreciate checking in with you. Jody Laurie, she's a senior credit analyst for Bloomberg Intelligence, talking to us a little bit about the Hilton numbers. Again, the company took down a little bit of guidance and maybe citing some of the uncertainty surrounding the tariffs they cited, as well as they also called out reduced government travel. So maybe the whole Doge thing, some of the government employees are maybe traveling a little. I hadn't thought about that.
Businesses are also reducing travel. I don't want to single out Bloomberg, but everyone, you only really travel when it's mandatory. If you can do Zoom, you should do Zoom. So we see it really across industries.
But I'll do account of that. Not our sales force. Our sales force is out there all the time pressing the flesh with Bloomberg customers, and that's a good thing. That's how it's done. S&P 500 up 19, the Dow up 229, NASDAQ up at 28. We're going to have more coming up. This is Bloomberg. Good morning.
No way that doesn't blow through VWAP. You think we're going higher? Just gotta be careful. So what I'd like to see is for the stochastics to get overbought, rotate down, and then have both the ES and NQ above the VWAP going higher, and then find an entry. That's kind of how I'd want it to line up. Yep. So we'll see. Let's see how this next rotation works, and then maybe we'll look for the entry. ES is being held up by the 200 EMA. It's holding the 200 EMA. Maybe it's waiting for the NQ. But it's starting to, you see stochastics are starting to roll down on the ES. So let's see if it crashes back through the VWAP or not. If it crashes back through the VWAP, then we're going to be waiting a while. See the NQ just dropped too. Hold on. The fast is 314 period K period 14, and then the slow is 60. 1060 314. Did you get that, Hazard Matt? I got to work on these computers. Kind of got it all gobbled together. It's all fucking kind of cobbled in. You got to learn how to actually make everything work right together. I also want to buy a $5,000 trading computer, but I've decided I'm not going to spend any more money on anything until I qualify the accounts I'm working on and get a payout. And then as I get a payout, I'll start upgrading everything. And then maybe I'll pay the big bucks and have it programmed so I can get it through NinjaTrader. So people can have the forecast on their computer if they want. All right, so we're falling. So this might be the short. We got to be careful though. You got to confirm on both, or it could just snap right back up. ES is looking like a hardcore short, but we're still in the range. We're still in the. Why is that so far? Oh, I thought that looked weird. I put the wrong value in. It's supposed to be 6 on the ES. It's 24 on the NQ.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500's surge from April's tariff tantrum, that is approaching somewhere around 30%. This comes after the trade deal with Japan. Big tech strength that's going to be on full display with Alphabet and Tesla. They're going to kick off the Mag 7 earnings season after the close of regular trading. Fundamentals, oh please. The meme stock revival, seeing GoPro, Krispy Kreme, and Beyond Meat all surging. Let me do GoPro for you. 28% higher right now in today's trading. Overall, the S&P 500, 17 points higher. That's up 0.3%, 63.27 on the index. The Dow Jones Industrial Average, 202 points higher. The NASDAQ 100 has paired a lot of the earlier losses right now down just 7 points. Rayanne Mitrione, meantime, at Callan Family Office says stocks can still push higher.
The market has been largely kind of looking past the trade, some of the trade, but making progress there will be a significant tailwind. And there's a lot of other reasons why the economy continues to be in good shape, and we could continue to see support for the markets.
Let's talk chips for a second. Texas Instruments suffering the worst stock decline in about 17 years after stoking fears that a tariff-fueled sales surge at TI is going to be short-lived. Texas Instruments right now down close to 13%. Finally, President Trump says he's considering a proposal to end capital gains taxes on home sales. Under the current law, filers can exclude as much as $250,000 from taxable income on capital gains made on the primary home. That is double for couples filing jointly. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Isabel and Paul.
All right. Thank you very much, John Tucker, Isabel Lee, Paul Sweeney live here on our Bloomberg Interactive Broker, streaming live on YouTube as well. Let's talk about the EV transition. I think for a lot of people, one of the gating issues is, the charging system, the charging grid is just not as robust as I need it to be. I got a gas station on it every quarter, but I don't know. I just got some anxiety about the whole charging thing. So let's get the latest on what's happening on that part of the EV transition. Ryan Fisher joins us. He's an EV charging team leader for Bloomberg, BNEF. And he's in London there. Ryan, give us an update here, kind of where we are. I guess let's start with the United States. where we are with kind of the whole charging grid and kind of where does it need to get to, do you think?
Yeah, so the
All
United
right, I
States
had
is an
my
interesting one.
values. I thought the
What we're
charts
sort
looked
of
weird. I
seeing
had my
is that
values
there's more competitors coming
backwards.
into the market, particularly in the fast charging space. So people can go out and kind of top up in a shorter amount of time, but still some way behind other markets like Europe and China. And really what we're looking at in our outlook, which has just come out, is almost like an 8 times increase in annual installs in the next 5 to 10 years needed to keep up with some of those EV sales that we're expecting over time. So a bit lagging. One of the things you can say about the United States is there's quite a lot of houses that people can put home charging in, so they can get home from work, they can plug in, they might only need to do that 2-3 times a week, and they'll be plugged in for sort of 12 hours, but only actually get any charge moving between the cable and the car for sort of 3 hours. So for some people, this is both cheap because there's cheap electricity at night, and they can do that with home charging. But for those who might want to either charge on the go because they do a lot of driving, or for those who literally can't charge at home, still some problems in the United States.
What about China? This surprised me in your note because you wrote that they consume more electricity than the whole of Sweden in
All right,
2024.
guys, I
And
think
as
I
we
got
know,
the charts
global
figured
EV
out
electricity demand continues to rise there.
Sorry
How
about
is China
that.
different and the same with the US?
Yeah, so China
Had
is
other,
different.
I
when
had
we
to
think
clean up
about
some other
EVs,
stuff
they've
I
got
was
like
working on this
50%
morning.
Of sales are electric vehicles at the moment. The US like closer
All
to
right,
10%.
we're working
So
back
just
up
the
into the
amount of
view
vehicles
app.
being sold. And if we think on kind of a
Checking the
macro level,
NQ just to
the
make
vehicles
sure my
themselves, the
values
electric
are right
ones are largely cheaper than
in the
gasoline in many
strategy.
of the segments. And when you go to charge up, it's cheaper wherever you charge.
That's
So I
another
talked about home
bug
and
too,
public
is
charging
it
in
should
the US,
remember, like once
and
you
like
put
the
the
home charging
values
is
in a
often
strategy
cheaper
in a chart, it should
than
always
gasoline, and
remember
therefore
it.
you kind of know your saving. But the
There's a
public
bug
charging
in
can
it
often
where it
be a lot
always
more than
kicks it out. So
gasoline.
I gotta
So that can make a
re-enter it
big
every
difference.
morning,
But the thing about
which is
gasoline
annoying. And
across
if
the
you're
world,
busy
not
doing
just
3
China
other
and the
things,
US,
you
is that
can
you sort of have a
accidentally
gauge
put
on
the
what it is, and
NQ and the
maybe
ES and the S and the NQ, and the chart will
on
look
local
funky and not
regions a
make
reasonable
sense.
grasp of what the cost is and the similarities.
But you see, I'm
For
the only
electric vehicle
one that's
charging, it can
probably
differ
gonna
vastly
know
by
that.
location. So we've looked at this metric of like
So
residential electricity
that's another
cost
bug
versus
that needs to
gasoline.
get fixed
And
before I can
Washington,
let other people
you
use
can make
it.
a massive saving. They've kind of got expensive gasoline prices. They've got cheap electricity.
All
Whereas
right,
places like
so
New
you're
York,
on the
it's actually more
ES. Let's go
expensive.
back to the. All right, so
California now, whilst one of the
we're just
holy
chopping around,
EVs,
guys.
is actually
This is
getting really
dangerous
expensive on
chop.
electricity in some regions. Some of those big
Trade at your own risk. If you want to try range trading this, maybe for a 1, 2, 3 type deal, then good on you. But we haven't really picked a direction yet.
Increasing the like
All
registration
right, I'll be back
taxes
in
and other
just a
things,
couple seconds. I gotta
maybe
clean up a
politically
lead
to
or
try
two
and make it
here, and
less
then I'll be
attractive,
right back.
to go electric.
So that's kind of where I wanted to go, Ryan. If you could, we've had 6-7 months here of this second Trump administration. What's the EV industry? What are they discounting today about how this administration will support or not support the change and the transition to EVs? What's the consensus thinking these days?
Yeah, so in our outlook, we moved our 2030 EV adoption number down quite substantially, I think from 47% to 27%. So
is that in the US?
High level, that's the US, yeah.
Okay.
So all of these policies coming in, we're basically saying in the US that these are going to be challenging, right? You've got removal of subsidy schemes, you've got fuel economy legislation being retracted, both on a national level and also kind of going after it in California. So the sentiment is not brilliant, but people are slowly sort of fighting back in different ways. I obviously focus more on the charging infrastructure, and they have this federal charging grant, 5 to 7.5 billion, depending on which bit you're kind of counting. What Trump did when he came in was an executive order saying you can't distribute any more money to the states. And they found that actually he didn't have the authorization to do that, and therefore 17 states have fought back, and it looks like that money is going to continue to flow. I obviously look across markets, right, and you can see that whilst people can say, well, he's stopping stuff, there is room for the money in the US to be looked at in how those subsidies are put out there. So in Europe, I think we saw something like $1 billion of subsidies, and they got something like 30,000 chargers. We look at $1 billion of subsidies that flowed in the US, and it looks like 6,000 chargers. Wow. So there's the potential to be leaner in what they're doing to kind of achieve those goals better. But it does look like on that specific piece of legislation on the charging infrastructure that some of that money is going to flow again.
Talk to us about when to charge and where to charge, because it seems like where you charge matters, and also the temperature that day.
Yes, definitely. So we're starting to find more and more interesting pieces about how charging is going to affect the grid. Like you said, China, they're already consuming as much as the whole of Sweden. Those kind of dynamics will play out elsewhere. So we've been looking at things like temperature, and we've also been looking at things like holidays. So people obviously do a lot of travels on holidays. Some of those can occur in winter, and these two combinations of cold weather can be like drive you to consume 30% more electricity from the car. And then if everybody's driving at the same time, you see these queues. So you've probably seen in the news like queuing articles at chargers, which leads to everybody saying there's not enough, and the charging operators just see so much demand on those days. Well, actually, if you think about what's happening underneath that, some of these networks and grid operators will start to feel that when we move from the fleet being maybe 5% of the fleet to these sort of like more EVs than gasoline on the road, we're saying in the report in some regions. We're starting to see 2030 Norway first. I think we've got California, Norway, China, California, Germany, going from 2030 to 2040. There'll be more EVs than there will gasoline vehicles. And therefore these effects, like while minutiae today maybe in terms of temperature or holiday seasons, could actually play out as quite big things for utilities.
Was that the ad that played?
Excellent work. Thank you so much for joining us, Ryan Fisher, EV charging team leader for Bloomberg BNEF. It's the new energy finance people. They're the ones analyzing the transition to clean energy. He is based in London. All right, well, yesterday, President Donald Trump reached a trade deal with Japan that will impose a 15% tariffs on imports, including automobiles from Japan. The deal includes a $550 billion fund to make investments in the U.S., with Japan agreeing to provide the funds to invest in projects in America. Earlier today, U.S. Commerce Secretary Howard Lutnick joined Bloomberg Television anchor Anne-Marie Hordern exclusively for a conversation on trade. This portion of the conversation began by Anne-Marie asking Lutnick about the investments Japan will make in the U.S. Take a listen. All right, Anne-Marie, I know she's there. I know we've got the tape. You just got to hit play. It was a big deal. I thought the interesting part of the deal was a $550 billion fund. That's a lot of money for Japan to commit to invest in the U.S. And it's the type of deal that President Trump likes. He likes to have big, round numbers where others are going to be investing in the U.S. Economy. So that's, I think, what a lot of folks are saying might be a template for some other deals. Let's take a listen to this conversation.
So let's say we want to build generic pharmaceuticals, right? We don't make antibiotics in America. So the president says, let's go make antibiotics in America. The Japanese will finance the project. They will finance the project, and then we'll give it to an operator who'll run it, and the profits will be split 90% to the taxpayers of the United States of America and 10% to the Japanese. So they basically bought down their tariff rate by this commitment of we will back what you, the president, want, and you, America, want to build in America that are key to national security concerns. We'll back that, and therefore will be on your side.
The Prime Minister, Ishiba, says these are loan guarantees. Is it more than that?
Of course it's more than that. It's equity, loans, and loan guarantees. They have to deliver the project. So we say, let's build semiconductors. We want to build $100 billion worth of semiconductor fabs, is what you call them, because we want to make those chips in America. The Japanese will finance that whole project. They've got to put down equity, loans, whatever they want to do. They have to deliver the $100 billion.
Or Japanese companies?
Oh, no. Anybody does it. It's the Japanese are the financer. They're the banker. They're not the operator. It's not Japanese companies. So when people get confused, this isn't like a Japanese company like Toyota coming in and building a factory. No, that's Toyota. This is literally America saying we want to build generic pharmaceuticals, semiconductors, critical minerals here.
Does anything like this exist now? Like, what could we think of and model after
That's why you have someone like me who joins the government. I mean, this was my idea in January. So I started, because the Japanese are never going to really open their market the way Donald Trump wants them to open it. I mean, open it. You know, so what happens is they had to come up with another way to really make it work and the tariff model work. So I suggested to them a $400 billion fund where they would give to the president and they would give to America the financing to go build out your whatever you think for national security, go build it, we'll back you, and that's the model.
The reports the prime minister, though, may be resigning. Could this deal transcend domestic politics in Japan?
Of course. I mean, it's vital. You saw what happened to their car companies. They were all up more than 10% today. So a 25% tariff delivers what Donald Trump said. Build it in America. A 15% is right on the edge. It's right on the edge. So the Japanese car manufacturers can still produce in Japan. And that's what the Japanese wanted to buy. They wanted to buy that line where they could stay in Japan for some cars, build, of course, huge amounts here, but also what they did is they'll invest and give Donald Trump the tools to invest in America.
All right, that was U.S. Commerce Secretary Howard
The
Lutnick
Japanese are
speaking
going to
exclusively.
give America.
All right, there we go again. There was U.S. Commerce Secretary Howard Lutnick speaking exclusively with Bloomberg Television anchor Anne-Marie Hordern, talking about the trade deals. Again, the trade deal with Japan inked yesterday. Some folks saying that could be a template for some type of deal with the European Union. We will see going forward here. After the close today, we got earnings, we got Meta, but we also got Tesla reporting numbers today. You know, and I think this is going to be an important quarter for Tesla. They seem like they all are, but to hear from Elon Musk and kind of what his vision for this company is now. The stock's down 17% year to date. There's real concerns about demand out there and competition. So let's get the latest analysis. We can welcome Steve Mann.
Jesus,
He covers
what
all
happened?
the global auto companies for
What
Bloomberg
the fuck?
Intelligence. Steve, what's the key thing for Elon Musk and Tesla?
Anyone
to
see
get
that
across to
coming
investors
ahead of time?
This quarter?
Yeah, it's really
What the
outlook,
fuck? All-time
that's
high on
important
ES
here.
by a lot. Holy fuck
You
me.
know, we think earnings for the second quarter will come around where
What's the
consensus
news?
is at. You know, consensus earnings have come down quite a bit.
You hear any news snooze? I don't have anything
So
to have a
I think
reason
what,
why it
you
did
know,
that.
what the investors were mostly focused on.
Shit. I got two leads. I'm
obviously,
trying to get these
Robotaxi,
knocked out.
they
ES
just
just
launched
popped
that
because of
in
NQ.
June. But
Well,
what's
I don't
really
know. They
really
usually do it
interesting
together,
is,
but
their
there's usually a
international markets,
catalyst that
right?
sends it up, that sends
the
it,
EV credit is going away. The
you know,
$7,500 credit is
with a
going
big
away in the
move like that.
US.
I don't
So what are
I
they
don't
gonna
see the
do to
catalyst
diversify
for it.
sales? So it's going to be mostly China and more importantly now a new market
Yeah.
in India.
How do
Yeah,
you
that's
think Tesla
true,
is managing
Hazard
cost
Matt.
pressures,
But usually a
especially in the
move
face
like
of
that
ongoing
quick,
price
that
cuts across
violent,
key
has a
markets
catalyst.
and the
Like there
lowering
was
of
some
demand,
kind of
especially
trade
with the
deal
backlash we've seen when Elon
that
Musk
went
was
good, or
involved
like
in
there's
this
good
call.
news somewhere. I haven't seen it yet. Hey,
Fortunately,
Led,
I think
Ladioff,
the
what do you
rhetoric
need?
from Elon Musk
Don't tell me you're in a
on the
short
business
again,
side
buddy.
has subsided. Hopefully
Don't tell me you're in a
it's
short
staying that way.
again.
In terms of auto sales growth,
All right, guys, I got to clean up a couple of leads. I got to go back and
really
forth.
going to be hurting the industry.
You want to go watch the NQ or
It's not
ES?
just the Tesla, but it's across the board.
I'll keep the
GM
news
reported
up on the
earnings
ES.
yesterday or the day before. They're gonna feel
More
it
up?
as well. But you
You
I
need
think
more up?
Tesla
Okay.
is still
Here we
one
go.
of the two profitable
For retake.
EV
Oh, okay,
makers,
okay.
in the world. The other one being BYD. They are launching the new Model Y, or they have launched the new Model Y. Sales have been improving, and that vehicle, on the surface, it looks pretty much the same, but in the inside, it's a lot of it's been redesigned to cut cost. So, but they need more volume, and sales have been improving, but they still need more volume from the Model Y.
Aside from Elon himself, in my mind, if I were an investor, one of the biggest headwinds would be China. Both selling into China, where the local competitors are really good, but everything outside of the U.S. seems to be, I can't see where China auto EV guys, BYD and the others, they don't take over the world here because they have a really good product at a lower cost. How does anybody, I'm talking VW, Toyota, how does anybody compete against some of these Chinese manufacturers?
Well, you're absolutely right. I mean, the Chinese are pretty dominant, or it's increasing their market share in a very rapid rate in emerging markets. I think they still have to build a stronger reputation within the more mature markets, especially here and other parts of the world. But Tesla is not standing still. in China. They just announced that they're going to launch a longer version of the Model Y. And I think that's going to resonate with buyers over there quite a bit. If you remember, BMW, Mercedes, and other automakers in China really took off when they introduced extended versions of their vehicles. For example, there's within BMW, there's the 5 Series L, which is the long version of the 5 Series that we see here. Same thing with the LD, the 6L.
Yep.
So look, I actually have more optimistic for Tesla in China in the second half when they launched a longer version of the Model Y in September.
All right. Steve Mann, good stuff. Steve Mann, Global Autos Analyst for Bloomberg Intelligence. He's in Princeton, New Jersey. I recently leased a Honda CR-V for my number 4 and last offspring. He goes to college in California where the cost of gasoline is really, really high because of all the taxes. So he actually pitched me on that and said, well, we should get a hybrid. We did, and it works great. I mean, it's a cool strategy, cool technology. So maybe that's an interim step for a lot of people. All right, folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Across the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories in global business headlines are coming up in just a moment. We end the morning trading session on a pretty solid note here, at or near the intraday highs. The S&P is up 32 points. That's a 0.5%. The Dow's up 360 points. That's 0.8%. And the Nasdaq up 73 points. That's about 0.4%. The Russell, the small cappers, really the stars here today. They're up 25 points. That's 1.1% 10-year Treasury yields, right around 4.38%. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. Raw emotion in a courtroom in Boise, Idaho, as family and friends of 4 college murder victims speak at a sentencing hearing for Brian Kohberger. Dylan Mortensen is a surviving roommate.
Because of him, we're beautiful, genuine, compassionate people. We're taken from this world for no reason.
CBS's Andres Gutierrez.
After we hear hours of emotional testimony from the victims' family members and possibly the 2 surviving roommates, he will be given the chance to speak. If he chooses to, he doesn't have to say why he did these murders.
A new battle line has emerged in the Trump administration's war with Harvard University. CBS's Cammie McCormick.
Secretary of State Marco Rubio says an investigation has been launched into Harvard's eligibility as a sponsor for the exchange visitor program. All sponsors, he says, must fully comply with the regulations, including conducting their programs in a way that doesn't undermine U.S. foreign policy objectives. This government visa program is for international students, researchers, and professors. The New York Times reports Harvard's been given 1 week to produce records related to the program.
The correspondent Michael Wallace tells us the number of people missing after deadly flooding in Texas is down to 2.
The body of a woman was found near hard-hit Kerrville, raising the death toll to 135. That leaves a man and a girl from Camp Mystic still missing. 12 bodies have been recovered on Ricky Ray Robertson's property along the Guadalupe River.
There were 4 children and the rest were adults.
He and a local artist have erected wooden crosses for each of them.
They're not just crosses, they're faces
of
husbands, wives, fathers, mothers,
EU
brothers, sisters,
and U.S. closed their tariff deal.
Can start healing.
Now to Jacksonville, Florida.
Or they get close. Maybe that was the news.
Where video of a winter traffic stop shows an officer punching a man in his car.
That's all that I have. If you guys hear anything, let me know. But that's the only big news I have right there. They're trying to get EU and U.S. are trying to get the trade deal figured out.
I step out the car when I know I didn't do nothing wrong.
There is an investigation. CBS's Allison Keyes on a change at Uber.
Starting next month, women getting into an Uber
have the option to choose female drivers when booking their rides. Women drivers can also choose to ferry female passengers. The company says it's about giving women more choice and control when they ride or drive. Uber is test driving the program in LA, San Francisco, and Detroit.
The Dow is up 373 points. This is CBS News.
Talk.
Some music fans in New York City had an accidental meet and greet with a legendary performer.
An only in New York moment for a pedicab driver in Manhattan. He was transporting two women with Billy Joel blasting from his speaker when the piano man himself pulled up.
You see me, I'm playing you, man. Can I take a picture with you, please?
Joel obliged and stepped out of his SUV for selfies. One of the pedicab passengers asked. How are you feeling? Joel was diagnosed with a brain disorder in May. In an interview this week, he said he feels fine, save for some balance issues. Deborah Rodriguez, CBS News, New York.
Among those paying tribute to the late Ozzy Osbourne is Elton John, who called the Black Sabbath frontman a dear friend and a huge trailblazer, and one of the funniest people he ever met. Osbourne died yesterday at 76. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Another day, another dollar, this time from Japan. Welcome to the Wednesday edition of Balance of Power as the White House trumps a new trade deal with Tokyo that has Wall Street in a very good mood, made even better now by reports of an impending deal with the EU. We'll have the latest on all this for you straight ahead. As House members start leaving town, lawmakers are preparing to fly out. We're going to discuss what's left, if anything, in the legislative agenda, along with a fresh effort to save Social Security, in conversation with Republican Senator Bill Cassidy of Louisiana. We'll have analysis from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. And it's all after a look at Wall Street. Let's set the baseline in the markets with Charlie Pellet at World Headquarters in New York. It's rally time, Charlie.
Yeah, absolutely right, Joe Matthew. You mentioned Wall Street in a good mood. Let me quantify that, put it in terms of numbers and percentages. We've got the Dow at the record right now, S&P 500 index also trading a record-breaking run in stocks, gaining fresh fuel after the U.S. reached trade agreements with Japan. Investors, though, turning their attention to earnings from tech giants. After the bell today, we'll be hearing from Tesla and Alphabet. Tesla up now by 0.5%. Alphabet shares, though, in the red, down 0.6%. The Dow, though, rocketing higher, up 414 points now, a gain of 0.9%. Dow Industrials very close to 45,000. 44,917 right now on the Dow Jones Industrial Average. S&P at a record right now, 63.44. We've got the S&P up 35, gain there of 0.6%. The Nasdaq Composite Index advancing 66 points now by about 0.3%. Ahead of those big tech earnings, our Mag 7 index up 0.2%. The 10-year 4.38%. The 2-year 3.87%. Gold is down $43 the ounce, 33.88, drop there of 1.2%. West Texas Intermediate crude down 0.2%, 65.
That's about the VWAP.
And Bitcoin is retreating down 1.1%,
So yeah, 63.66 is about the VWAP.
Nimrit Kang is Chief Investment Officer at the North Star Asset Management. She says developments out of Washington have been driving stocks.
The market has rallied very significantly over the last few months based on three major things. One is that the trade war that we, got started with the announcement of the Liberation Day, that gets resolved. We get a big stimulus investment back into the U.S. here from the Big Beautiful Bill, the tax incentives for the corporates. And the third is the inflation and employment picture is such that it allows the Fed to start cutting.
Nimrit Kang of North Star Asset Management. We have got the rally in the so-called meme stocks broadening today. Case in point, GoPro. The stock is up 18%. Krispy Kreme uses the ticker Donut, D-N-U-T. Krispy Kreme up now by 11.4%. Beyond Meat up 5.7%. And Wendy's shares, they are surging now by 3.9%. So, bottom line here, rally underway on Wall Street. After the bell, Tesla will be reporting its core car-making business facing a deteriorating outlook. Again, S&P up by 0.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie. Many thanks, as always, to Charlie Pellet, the voice of Wall Street and the New York subway. You'll know what I mean when you get on the train. Welcome to the Wednesday edition. We're live in Washington, as Charlie mentioned, here on Bloomberg Radio, satellite radio, channel 121. You can watch us on Bloomberg Originals and, yes, right now on YouTube. Search Bloomberg Business News Live because you're going to want to see, not just hear, our conversation with Senator Bill Cassidy. We have news today. It started last night. It's still developing. We'll start with Japan. A big deal announced by President Trump, who is still trumping the benefits of this deal with half the administration, it seems like, out in force today, most of them here on Bloomberg. Let's start with the president last evening in our new deal with Tokyo with a 15% tariff. Here's Donald Trump from last night.
I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. We're doing things that have never been done in this country before, and our country is becoming very rich again, and that's the way it should be.
Well, it's being well received on Wall Street. Markets are on a tear here, and it's not the only reason. Commerce Secretary Howard Lutnick, in studio here at Bloomberg, talking with Anne-Marie Hordern this morning, says Japan's pledge of hundreds of billions of dollars in U.S. investments could be a model for the EU. Just like that, we have headlines on the EU, and this is why the markets have just reached to new highs for the day. The Financial Times reporting U.S.-EU close on a 15% tariff deal. U.S.-EU would have waive aircraft, spirits, medical device tariffs. Your wine, it appears, may be safe. The euro hitting the day's high on this report on U.S.-EU tariff talk. This is something that we discussed with both Howard Lutnick and Scott Bessent earlier, and it does appear that we may be on the verge of another big announcement. This would be, with regard to the EU, likely the biggest that we've seen yet, assuming that it does come in the form of a true deal. Now, as promised, the senator from Louisiana is with us. He's live on Capitol Hill. Republican Bill Cassidy, it's great to have you back on Bloomberg TV and radio, Doctor. Good to see you. We've got a lot to talk about, from government funding to trade, as I mentioned, to your effort now, your plan to save Social Security. And I'd like to get into all of these. First, with news breaking on trade, I have to ask you about this. We'll start with Japan. I was amazed to learn about how much business Louisiana is doing with Japan. In fact, your state is the second in the nation for foreign direct investment from Japan. The president's deal here includes this investment fund I mentioned, $500 billion to make more investments in the U.S. How much of that money should go to Louisiana?
A lot of it will go to Louisiana. We have both access to inexpensive natural gas, a great workforce, the Mississippi River to transport goods around the world. And so Japan and other countries are investing in Louisiana for products not just for our country, but for around the world.
If there's an EU deal announced today, Senator, or in the days ahead, is this vindication for the whole idea of the Trump tariff regime?
Yeah, I think the president aggressively pushing back on other countries with their tariff and non-tariff barriers is clearly paying dividends. And so you got a tip of the hat to the president. He saw it through, and it appears to be working.
Well, let's get to your business in the upper chamber, Senator. I know in the House, they're heading home today. It's flyout day for members by order of the Speaker. Is Leader Thune planning to do the same, or are you going to stay overtime to work on nominations or other legislation?
He's talking about staying overtime to work on legislation. To work on nominations. Of course, I'm hoping we also do some legislative stuff. We're here to pass laws to make the country better. So we have that opportunity, let's do so. Principally, he's looking at nominations.
Nominations, and maybe, God forbid, spending a little time on writing a budget for the next fiscal year?
Wouldn't that be good? The three appropriation bills that we're taking up have significant rescissions, a rebalancing of where we spend our money. I like that because it may not be that we need another rescissions bill, because on a bipartisan basis, Congress has come together and said, let's shave here and push up there. And they're significantly increasing defense spending in a more dangerous world, but significantly decreasing other pots of money, showing the Appropriations Committee is doing the people's business of making sure we spend our money wisely.
Well, Senator, our viewers and listeners should know, if they don't already, that you're not only a practicing physician, you're chairman of the Committee on Health, Education, Labor, and Pensions. And you've got an important project underway that we've actually talked about before that is advancing to the next stage here, because you've got a Democrat on board, Senator Tim Kaine, helping to propose a rescue plan for Social Security. It would essentially create a second Social Security fund that would invest in more appreciable assets like treasuries. Senator, tell our audience how it would work.
Context: the Social Security Trust Fund is going insolvent in about 8 years. By law, the amount of money coming in has to match the amount of going out. When that trust fund goes insolvent, in order to match those two, outgo will cut by 21 to 25%. If you're getting social, or if you're going to, your benefit will cut by 21 to 25%. And nobody has a plan to address that. So our plan: create an investment fund separate from Social Security, put $1.5 trillion in it over 5 years, invest it like you would a 401k in the power of the U.S. economy, and over 75 years, but the rule of 72, which your listeners know about, the rule of 72, it just blossoms out. We use that money to offset any borrowing required to pay scheduled promised benefits. By the way, importantly, if the market goes up or down, doesn't affect the beneficiary. All risk is borne by the investment fund. And by that, we can bail out Social Security and also perhaps decrease our nation's indebtedness by 20%.
Never thought I'd be talking about the rule of 72 with Senator Cassidy. Where does the initial $1.5 trillion come from?
Yeah, so in our plan, we would borrow $300 billion a year for 5 years, but the way the federal government does its budget, we have a unified budget. So if you borrow money and put it in escrow, it does not contribute to your nation's indebtedness, because you could just dissolve the escrow and pay off the bonds. And so we don't add to the debt as we borrow that money.
And now these are treasuries that we're talking about purely? Would you invest in crypto or any other securities?
Right now, the Social Security Trust Fund puts all of its money in treasuries. Some of those from like a few years ago are bearing 2%, less than the rate of inflation. No, we would do like your 401k. First, there'd be a board of trustees or investors an arm's length away from Congress and the executive. They would bid out to someone to manage the money, as the federal government currently does with the savings plan for federal employees, the retirement system. They would make the decisions on a fiduciary basis. They would make the decisions, again, arm's length separated, but they could put it in equities of any sort, in assets of any sort. They could put it in treasuries. Those are pretty low yielding. Probably put it in something different.
If we're following Rule of 72 here, and you're talking about decades, not years, Senator, in our remaining moment, you point out, you just said it as well in your op-ed in the Washington Post, the Social Security Trust Fund will be insolvent as soon as 2033. Would this separate account have enough money to make up the difference by then?
So not by 2033, so it only partially offset the borrowing required to pay scheduled benefits. By the way, everybody knows we're going to borrow that money. No one has a plan how to offset it. But in our plan, as it goes up, it at first would partially offset, and at the end, it could potentially fully offset and even evergreen the Social Security Trust Fund, so we never have to worry about this again.
He's got a Democrat on his side now, as I mentioned, Senator Tim Kaine joining hands with Senator Bill Cassidy on the effort to save Social Security. Senator, it's good to see you, and I appreciate your being with us. Welcome back to Bloomberg. The Republican from Louisiana getting things started here on the Wednesday edition of Balance of Power. I'm Joe Matthew in Washington. Glad you came along. We've got a lot to talk about with regard to these trade deals. Bloomberg now reporting that we are on the cusp of a deal with the EU. We'll have much more straight ahead, only here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg, and we are very close to session highs after the FTs reporting that the European Union and the U.S. are closing in on a trade deal similar to the agreement that was struck with Japan. Right now, the S&P is up by 29 points at 63.39, a record there, up 0.5%. Dow Industrials also at a record, up 395, up by about 0.9%. We've got NASDAQ climbing 34 now. NASDAQ up by 0.2%. The NASDAQ 100 index unchanged on the day, ahead of earnings after the bell from both Tesla and Alphabet. 10-year 4.38%. The 2-year, 3.87%. Gold now down $48 the ounce to $33.83, drop there of 1.4%. West Texas Intermediate crude oil flat on the day, and Bitcoin down $1,900 to $117,803. That represents a drop of 1.7%. Tesla reports after the closing bell its core car-making business is facing a deteriorating outlook. The company is expected to post the sharpest drop in revenues in more than a decade. And Alphabet is expected to deliver a strong earnings report as the company reassures investors about its ability to compete and defend its search empire during a time of artificial intelligence. Alphabet shares down 0.8% ahead of earnings. Tesla up by 0.4%. Complete coverage coming up on Bloomberg Radio and television after the close of trading. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, many thanks. Charlie Pellet, live from World Headquarters in New York. His hands on the market every day here as we talk politics on Balance of Power. We'll get back with Charlie a little more than 10 minutes from now for another update on the trade. He mentions AI. Of course, that's a big theme today, or it will be a bit later on today here in Washington, D.C. The big AI summit that President Trump will be speaking to roughly 5 p.m. Eastern time. I say roughly because, well, that's the White House schedule. If he's on time, 5 p.m., the late edition of Balance of Power will include the president's remarks. You're going to have Jensen Huang in the room as he's talking about the future AI policy coming out of this administration. We're watching shares of NVIDIA bounce back a bit today, up almost $2 or 1%. But it's trade that leads the day here. And as I mentioned, it seemed like we had half the administration on Bloomberg this morning. My goodness, Anne Marie comes down for one morning. Scott Bessent, Howard Lutnick, and others speaking about, at that point, the fresh news about a trade deal with Japan. We're going to add another log to the fire here in a minute because headlines are popping on a looming deal with the EU. But of course, this deal with Japan is being seen by many as a potential roadmap, an example of what we could do with the European Union. Listen to Scott Bessent, the Treasury Secretary, in conversation earlier today on Bloomberg TV and radio.
As only President Trump could do, he brought the Japanese trade delegation into the Oval and had a very fulsome negotiation with them. And I tell you, they're tough negotiators, but President Trump's tougher.
Well, there is a photo circulating on Twitter from Dan Scavino, and you actually see a Sharpie X out of some what looks like preliminary deals for even more concessions with Japan. I want to ask you about this 15% tariff rate. Is that the new floor now for trading partners when you're going into these negotiations?
Well, I think it's very important to know that 15% for Japan for reciprocal tariffs for autos, that is a different kind of deal, but because the Japanese proposed a very innovative solution. We've been working with them for months, the trade team, myself, Ambassador Greer, Secretary Lutnick, and they came to us with the idea of a Japan-U.S. partnership where they are going to provide equity, credit guarantees, and funding for major projects in the U.S. So they got the 15% rate because they were willing to provide this innovative financing mechanism.
There's a lot of Japanese FDI into the United States already. Is this new capital?
Oh, no, this is all new capital. This is all new capital, and it is going to be targeted at the strategic industries that President Trump and this administration believe that we have to de-risk on. During COVID, we saw our vulnerabilities, whether it was in medicines, semiconductors. So we are going all in over the next few years to de-risk our supply chains, and this deal, thanks to President Trump, is going to be part of that.
When it comes to the 15% rate on autos, this means that Toyota is basically paying a cheaper rate than, say, GM if they have inputs from other countries. They're still at the 25% auto rate. Do you see the auto rate leveling out to something lower than 25%?
All right, I'm caught up, so I can play
those are just
on the
GM
stream for a little bit.
There's also the USMCA.
How's everybody doing?
The portion of any
I'm kind of feeling along here in just a minute.
GM,
if you look on the NQ,
Ford, I think Ford has the largest U.S. production.
I like this long on the NQ.
There are no tariffs.
So when it comes to what's next?
Problem
We know
is
that
my
the
trade
negotiators
box
are
is
in
off
town.
and I'm in the no trade
This
zone,
15%
flirting
rate
around
feels
with the
like
VWAP, so I'm not
potentially
going to do
floor.
it.
Could anyone get below 15%?
So I'm going to give it a couple more candles, and
10% minimum baseline tariff?
if we confirm,
Again, the 15%
like on the
is a
NQ,
result
if we
of
kind
this
of
very
confirm over the
innovative package
the
that
20
the
EMA and the
Japanese came
200,
with,
if we kind of
and,
confirm
President
over
Trump
that,
being able
then I'll
to
be looking
push
at,
them
see,
to
if
do
I would have
even
taken the
more.
long, I'd already
So,
be in the heat,
Has Brussels come up
be
with
taking
anything
heat.
innovative?
Not yet.
Stochastics are ready to move up, so I'm kind of, we're in VWAP chop mode again. NQ is under the VWAP. The VWAP is such it's a horrible area to take a trade. ES is over, so I'm just going to have to wait again. All right. There's no trade here for me. You're about to comment on the box? Yeah, I know. I'm watching snooze. I'm being responsible. I really want to qualify these accounts. I've got almost no money in them. They're all 250 accounts. I got 3 of them. One of them is only $2,000 away from being qualified. And I just really want to get serious and start getting payments. I'm getting nervous.
Why don't we start with Japan?
Because
deals of a deal with the Philippines.
There's like no lead, like unless this is just a really bad. This is like the worst month ever. I had 2 really good months, and then this is so my quarter is good, but this month, man, if it continues to be this way with the off-site center, I don't know how they would justify keeping our team here. So I got to get out of this team, or I got to start getting payouts, because if they give me the layoff slip, I'm gonna be here all day with you guys full time.
That obviously the headline being this reduction in the reciprocal rate to 15%, and really the reduction in the sectoral rate.
Yeah, I sent it. I knew the last guy I worked for, the last 2 managers I had when I first got hired here, they work in the money, they call it money, but it's merchant services. And they're both over there. They made it through the layoffs. So I contacted both of them, and they said they would advocate to get me an interview when they hire. And I think they're going to hire 10 spots in the next couple months. So I updated my resume and I gave it to Bobby. And so when they open up that position, I should be all set to get, if I can get the interview, I should be fine. You know, I just got to get somebody to talk to me and I'll be fine, usually. You know,
items essential for national security.
as long as I'm, you know, as long as I'm not trying to reinvent a new way of doing what they're asking for in the interview, I'll make sure I get the job.
This is not Toyota building a factory in South Carolina.
Yeah, that's all it is you just, you know, I've been here long enough and I made it through the layoffs, and my numbers have always been, you know, above average. So all I got to do is hit the points they want to hear.
The United States somehow,
you know,
through whatever process,
tell them some,
takes the lion's share
you know,
of those
they like hearing bullshit stories. Well, they're not they're real stories about, like, you know, how you want to do great for people, and, you know, I kind of know what they want to hear. It's a corporate culture. It's not like a hardcore sales culture. So I kind of figured out what they want to hear. So if I can just get the interview, yeah, here we bounce off the VWAP. I don't, well, look here, though, dude. We're under the VWAP on the NQ, so we could go up and bounce down and pull the ES into it.
I mean, it certainly appears to be that was the cost of entry for that discussion.
Always hear sales. Well, it depends on who you work for and what you're doing. Everything I've done in the past has been with smaller outfits that are like, you know, that are hardcore. And Intuit it's a corporate HR culture, and they don't work like that. Oh. You got an ad?
Doable, but over just a couple years, who knows how Japan's going to finance that?
And do we assume that they're going to be driving GMs and Fords around Tokyo?
So it was a big deal to see Japan change its standards to allow
Is the ad over?
vehicles to simply enter the marketplace under American certification.
Oh, no, it's
However,
planned.
one major
All right.
issue remains is that Japan is actually a left-side driving society. And so American auto companies would have to actually make specialized vehicles for Japan, which they've been reluctant to do. So I honestly do not believe we're going to see a lot of American vehicles driving around.
Yeah,
Tokyo
ads work.
anytime
You can hear
soon.
me, right,
Never
Snooze?
mind the fact that those roads are much smaller.
No one has said that on this show. Am I right, James? That is absolutely fascinating. Philippines were said could help to put pressure on China.
Yeah, you have a subscription.
With
Yeah.
Beijing. How are you looking at the deal with the Philippines?
Yeah, I know.
think to
You're
start
VIP,
with,
mofo.
It aligns with what we've started to see with the development
Bottle
of the
service.
Southeast Asian economy,
Bottle
China,
service for
Malaysia,
Snooze.
Singapore, and a different baseline developed
Because it's VIP.
in many ways.
Hey, Hazard Matt.
Somewhat smaller.
Oh, what was I talking
looking
about?
for a bellwether
Oh,
as to what the
sales.
baseline would be, and Vietnam is somewhat surged.
Yeah.
Their 20% seems to be the baseline by which
We're gonna bust out the black Amex card for Snooze
and the Philippines landing at just below
at the table. All right. So yeah, sales. You know, everything I've done in the past has been like, you know, high pressure. You know, close the person in front of you.
Competitive, regardless, as long as they come in under it.
You know, it's just like, you know, it's
peer competitors in the region.
it's been like the image you get when you kind of see high pressured sales on TV.
Like Malaysia and Thailand is that
But with Intuit, they want you to do that, but they want you to act like you're not doing it, if that makes sense.
Post on Truth Social.
You know,
Our, remaining minute or 90
they want you to put numbers up and do everything, but they don't want you to tell anyone how you're doing it. They want you to pretend like you're doing it the way they're teaching it, which will get you nowhere. All the people who listen to the training that they provide here no longer have a job.
It certainly sounds that way. I mean,
So I think they're trying to go the route that I've always worked by creating these off-site call centers, because when they're not directly working for the company, they can do whatever they want over there, and it doesn't affect the company. You know what I mean? And there's probably no HR department in those small units either. So,
that the United States has different calculations here. I don't think we're going to see a
all right, look how the end. I don't know if any of that made sense,
by
but
the nature of the EU being unable to come to a consensus on doing such a thing. But at the same time, I do think we'll see large purchase agreements.
you see how it's rolling over?
Adjustments to the entrance of U.S. goods into the EU market.
See, this could jump any. See, it could start ranging from the 200 EMA to this fair value. We could range in here for another half hour. So just be careful, guys. This is how you get chopped up and you end up buying evals, or you completely lose your shit, go full retard, and like start buying. You know, start doing
Will the EU be next?
resubscribes, or what do they call them? Resets. You know, you start losing your mind going on tilt, and all of a sudden 4 or 5 resets later, you're still getting chopped up. And don't ask me how I know that. Yeah, resets. Snooze has watched me do that a couple times. I'm recovering. I'm a recovering reset addict. So don't do that. Yeah. I'll do it. I don't give a fuck. I'll go 5 deep, all in. Over and over and over again until I get one to stick. Nah, I don't want to do that anymore. The thought of even getting to that mindset again just kind of steals all my energy. I'll just go ahead and keep a little bit of... I'll keep what little bit of my soul I have left. So yeah, so I'm hoping that they haven't been hiring, like for the merchant services department, they've been hiring people from the outside that have experience in that industry. And I can understand why. I had interviewed over there when they first opened it, and they didn't even know how they were paying people, so that interview didn't go very well. ended up going to Outbound. But traditionally, like a merchant services rep that sets people up, they have a book of business that they receive residual commission often. So the more deals they set up, they're there to manage the account and make sure they stay on the books. And the more they charge, the more they make off it every month. And so I guess they have a program like that now, which would be good for me. I'll just hang out there and hide out. And maybe I'll try and get into management from over there. Or they could give me the layoff package. I'll get 4 or 5 months of my salary and I'll hang out with you guys all day. Yeah, a long time ago, but that takes a long time to get going because listen, you gotta be able to talk people into letting you manage their money. So you gotta talk to people with real assets and convince them that you can manage their money. You know, you're talking about something like a Raymond James, or what is it? Like Charles Schwab, like a Charles Schwab guy, or Raymond James. And you basically make a percentage off how big of a book of business that you're working. Morgan Stanley. Yeah, like a Morgan Stanley guy. Edward Jones. I met Edward Jones. Edward Jones, Maryland. You know, they're all independent contractors that sell the program and manage it. Yeah. Yeah, when I was younger, but you know, when you're younger and you have a family, you can't really, you know, that's something you got to do while you're still single and build up your book of business, then get married. Because things can get tough. I'm starting to like the long again, to be honest with you. Look at the ES. But I'm not going to do it. I'm going to wait till we get on top of the 20 EMA at a minimum on the NQ. So if you're young and you're single and you want to take your series tests, ES, sorry. There's the ES. You know, you want to find somebody that'll sponsor you for your series, all the series tests you got to take in order to be a financial advisor in your state. Then, you know, I do it while I was young, very young. Build your book of business and then, you know, start building your life from there.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We're off session highs, but still a rally on
I gotta stop staring at it. I'm gonna get hypnotized and take a trade.
Advancing. We're looking at records. S&P up 27 now, 63.37, up by about.
I hate it when I'm thinking about 6 things at once.
Really,
Forget the little things I'm trying to talk about.
The S&P again up 28 now. The Dow up 371, up 0.8%, while Nasdaq higher by 37. For the Nasdaq Composite Index, that is a gain right now of 0.2%. The Bloomberg Mag 7 Index ahead of earnings after the bell from Tesla.
Well, you know, for somebody to give you a shot at a financial advice, Squirrel, yeah, I know. You know, it doesn't really cost them anything, you know, if they like you and they think you could be okay. It's just you got to figure out how to, you know, how to get in front of people and convince them that you can take care of their money.
33.90, down 1.2%. A retreat for crude down 0.2%.
Or unless you got a bunch of family that has money. That's a good way to get started.
117,705 on Bitcoin. A research firm says the number of companies and organizations compromised.
That ES looks like it's ready to pop, doesn't it?
Microsoft SharePoint servers is increasing rapidly, with the tally of victims soaring more than 6-fold in a few days. The Dutch cybersecurity company iSecurity says hackers have breached about 400 government agencies corporations and other groups.
Somewhere that gives you a book to start and even start out in your own.
Estimate provided.
Well, that's more like a bank.
Microsoft
You know, a
shares
bank.
Down 0.3%.
Like a bigger institution would do something like that.
Bloomberg News now wherever you get your podcasts, and Balance of Power continues.
You know, but you don't get that job walking off the street.
Joe Matthew.
You know, some of those guys would start as, you know, an account, not an account manager, but
by searching Bloomberg Business.
yeah, an account like
Bloomberg Originals as well, and listen to the
banks call it different. It's like the banker. You know, you walk in and you sit with a banker, and they go over your accounts and they offer you a car loan, and you know, usually you start there and then you move to like maybe a branch manager, and then you qualify. You know, then you got to compete to get a spot like that. You know, in order to get in. You don't usually get in something like that right out the box. I should have took the long on the ES.
Getting out of Dodge.
I'm watching the NQ right now.
Epstein blow up in the House.
All right, I'm gonna put an entry right on the cross on the NQ.
Order submitted. President's trade advisor Peter.
If it comes back down to get me, I'll get in. I'm only doing 2 contracts. So on the NQ, I'm gonna sit right here.
Sky high tariffs that seem
to if that 200 EMA smacks it down and I get in, I'll be okay.
Going with the EU. Domestically speaking, as lawmakers fly home, there's big news. Mr. Salt is staying in Washington. Did you hear this? Mike Lawler, the congressman, Republican from New York, who's been on this program many times, talking about the state and local tax deduction, has decided to not run for governor of New York. It's a big breaker up in New York, and it's going to have some interesting implications about not only who's going to Albany, but who's going to be in his seat here.
Yeah, I'm taking I'm going long because the ES, I think the ES is leading the NQ. So if I can get in at my spot, I'm front running the control EMA cross. So I'm front running the control EMA cross. And I'm trying to follow the ES. So if I can get in on my spot, I'm willing to take this trade. Plus, I've got the stochastics in my favor. I got the stochastics. Stochastics just crossed.
Does this mean essentially
control EMAs just crossed?
Have a race down to 2 here.
Forecast is starting to shorten up. If it can just pop down a little bit and pick me up, I'll be happy.
Yeah, that's right. You know, I love your moniker, Mr. Salt, and I'm assuming the representative would love it as well. There's nothing he wants to do more than remind the people of the Hudson
I'm
Valley
hoping the
and
200
Rockland
pushes
County,
it down
the
one more
17th
time, just
district,
enough to get me
that
in,
he
and
helped,
then
you know, lift the cap on salt. He
then we'll
worked so
see if
hard
we're
on
off
that.
to the races or not.
But yeah, this race is really going to come down to 2. You know, one of the interesting things is Governor Hochul is being.
But do you see front running the control EMAs? See, we got everything. We're just below the 200, so that'll go green here in just a minute.
Be Hochul versus Stefanik. And I think what this shows us is how focused President Trump is on 2026 on this particular district, because this is one of 3 that Kamala Harris won that was won by a Republican in the House. And this is one that Democrats are eyeing for a big pickup. And I think Donald Trump having Lawler in the White House, we understand last week and then just the other day, has made his position very clear that we need you, Mike. And so the representative is staying where he is, and he's going to try to run. And this will be a hard fought race. I think one of the most watched in the 2026 cycle to see if Democrats can possibly take it back.
Rick, Governor Hochul says, of course, he doesn't have the spine to face me. Was this a decision based purely on polls in the governor's race, or more like Jeannie's talking about? He's more needed here in Washington when it comes to the Republican Party.
You know, I think a little bit of Republican unity also. Elise Stefanik has made it clear she's going to be a candidate for that spot in New York. And really, based on the experience she's had in the Trump administration, first being identified as the next and future ambassador to the UN, then not being able to do that because they needed her votes. She
Target
really is
filled.
the,
got
the
that in the
person
bank.
who should be given the first shot at that. And I think Lawler is
Alright.
doing a real favor to her
We're gonna
by
move our
setting
last
aside
stop
his
way up here.
ambitions to let her run,
At the top
especially
of
in
the
a
cloud.
very,
Oh,
very
I got taken out.
interesting Republican
All right, I
year.
made 315 on
So
that.
being said, he does have his challenges, as Jeannie said. I mean, he's one of 5 districts in New York that Biden won that are currently
You want me to
occupied
stay
by
on the
Republicans,
NQ?
and they'll
Oh,
be
I'm
the very
sorry.
top of the target list for the
Yeah, whatever one you want, you got to tell me because I bounce back
he's
and
gonna have to
forth.
run
So
a
whatever you
flawless
guys are
campaign to
watching.
make it back in the
But I
Congress.
just went in.
And-
Did you
and
see
that
where
would be
my
his
entry
reward
was on the NQ?
for becoming Mr. Salt.
So the 200 is holding it down. So I'm going to wait a little bit. But I made 315 on that. Did you kind of see how that trade was set up? I didn't see that. I was on the ES. I'm sorry. I'll move to the
Rubber
NQ.
stamping Trump's extreme agenda at every turn. What will this campaign be like for Democrats in New York?
Put the news down here too.
It's going to be ugly. I heard Mike
All right, I
Lawler
gotta
the
work
other
a
day
lead.
talking about how Nancy Pelosi, of all people,
I'll
has
be
been
right-
approaching him on
I
the
gotta go
floor,
back and
sort of
forth.
tapping her wrist, saying, "Time, let's go."
I
She
broke
wanted
through.
him to
Damn it.
announce this run for
It took me
governor.
out too early.
Now that he is staying put, they know
I don't
it's
wanna
gonna
chase
be
it now.
even tougher. The Democrats do, but they've got some wind at their back.
I'll tell you what.
You know, historically, this
If we
should
get,
be
if I can
a
get back
harder
in down
year,
here, I'll do it.
2026 for the
Order
Republicans.
submitted.
And Mike Lawler knows this better than anybody. Some of these town halls he's been giving over the spring, he has been viciously attacked by Democrats and Republicans over his support of things like the cuts in Medicaid and SNAP. And Democrats are going to keep pushing this. That said, I wonder how smart a strategy this is on the
Order
part of
filled.
the
All
president.
right, I'm
You
in.
know, Mike Lawler has proven he can win in a purple district. We haven't seen that from Elise Stefanik. And while she'll have the endorsement of the president, she is going to have to defend her record as a leader of the Congress, which pushed through this bill with these
Order
tremendous
filled.
cuts and the impact on the deficit. All the while, she has been just a real visceral supporter of the president, and he is most unhappy in the state. Not to mention, not unhappy, so unpopular. And of course, not to mention, it's been decades since a Republican has won statewide here. So, you know, I wonder
Target
if this is a
filled.
good move on the
There
part
we
of the
go. Now we're
Republicans
running.
to back her versus Lawler in this race.
Stop
I
filled.
wonder if this
All right,
helps
took me
Lawler
out.
in his quest for now re-election.
That second one is too
Davis
tight. I
is
got to adjust my
introducing the
ATM strategy. So I'm
Mamdani
up 725. Did you see how I worked that hazard
map?
map?
Democratic nominee for mayor in New York to examine the risks of government-run grocery stores. Rick, this legislation would direct the FTC to conduct the comprehensive study into the competitive, economic, and supply chain impacts of government-owned grocery stores, which is something that Zoran Mamdani has talked about, along with the free subway and so forth. Is that the kind of rhetoric that keeps a Republican in New York?
Well, I'm sure there's been a lot of polling around New York Republicans on issues.
Look at that. See, all right, I got to fix my ATM strategy.
And I'm sure this one spikes with people.
I got to
What
let
will
that
be
second one
a
run
grocery
longer.
Store run by the government. No telling what decisions they'll make on things like grapes and carrots. And so it's the power of incumbency. He can do that as a sitting United States congressman to use the facilities of power that he's got available. And it's going to be a tough reelection for all Republicans. It's party out of power season, and so cycles matter. And this is not a good one for Republicans running for House seats. And so he's going to need every advantage he can make use of. And this is a very good start. The fact that he's focused on doing these kinds of things means he knows he's going to have a tough race, and he's going to use every ounce of power that he's got to be reelected.
I think Rick is suggesting that the grapes.
All right, I'm going to let that second one run a little bit more. But I'm up 750 on three of my accounts. So on
I'm wondering if you guys have thoughts on this.
I only
The
got
RNC,
1,500
and in
more.
the first half of the year, $65.5 million cash on hand
qualify.
advantage over the Democratic Party. How worried does that make you, Jeannie?
1,400.
It is a source of worry. I think, you know, Republicans have done a very good job raising money for these House races, and Democrats not so much. You know, it really is going to fall on Hakeem
right.
Jeffries and his team to get out there and raise the money they need. And one of the things that's hurting the Democrats is things like Mamdani winning this primary. I mean, he is the gift that keeps on giving to Donald Trump and the Republicans. And that is something they are going to take to the bank, and they already have. So they really have to get Democrats a message together that they can run on, so that they can keep up this history of overturning the House and taking it back. It's going to be very close, but they're going to need money, and they're going to need a message and
Order
leadership
block.
to do that.
So we got
and Republicans so far, Mike
That's a big
Johnson
order block.
is showing that they can raise with the best of them, and these
So
are
this is a long order
fundraising
block.
for him.
You wonder
Why?
if the government-run grocery store sells the.
All right,
the
so
Coke
now-
with the sugar cane.
Okay, so now I'm not going to take any more. I got all the juice out of that long. So we're going to wait for a rotation. So I'm going to wait for the rotation down. And once we're overbought again and heading back up, we'll look for the long.
Republicans keep the House.
What part did you miss,
Senator
Hazard
Bill
Matt?
Graham once said, money is the mother's milk of politics. And I don't disagree with him. Money matters. You can't make too much of it, but it doesn't on its own elect anybody. And there are lots of
This is the
advantages
order
to that.
block.
You know,
Um,
Democrats are running around today with these fundraising numbers.
When we're done today, go to YouTube
2017,
and type in what is an order block,
we were radically
like trading
fundraise
order block indicator.
and we did really well.
You'll find 50 videos
You
that
know,
will
that's a really
explain it.
lame excuse. Democrats are in a free
It's
fall.
basically an indicator where you got to fill a gap and then you'll go higher.
Taking leadership of the party
So
who can.
you know that and the fair value gap together, if you can find a way to kind of read them together, it's pretty. So it's going to challenge, it's going to challenge this order block. If it fills, it'll come back and fill it and go higher a lot of the time. So that's kind of, I'm looking for the rotation down to test the order block. And then if the test is unsuccessful, it'll test it. If the test is unsuccessful and the order block holds, it should go higher up into this trend line. That's what I'm saying. So the 200 EMA may hold it down. We may revisit the VWAP on the downward rotation of the stochastics. And then if the order block stays valid and we rotate back up, we're going to try and maybe go to this trend line up here.
But the problem is,
That's what we're thinking. But it gives us something to think about, so you're not trade, and then you get chopped up. That's what we're looking for. So we're in a long condition. Did you see how I front ran the control EMA? Or I wasn't on the chart when I did that. I don't
to get
think.
back to a message of defeating the president and repealing this bill, and the impact he has had on the middle, lower, and working.
Now the
classes
secret
of
is
the
if I
country,
get in too
despite
early on the
Brexit
next one and
otherwise,
take a
and just
loss,
look at all these trade
is
issues,
not to lose
they
my
are
mind
hitting
and start
the lower and
revenge
middle
trading
class who will pay
and then
these,
blow the whole
these
fucking thing
tariffs
up.
and not these
Right,
foreign countries. So
Snooze?
they need a message and a messenger if they're going to defeat.
Because I'm putting on a clinic right now, and I just want to warn you, it doesn't happen like this all the time.
Mamdani, even after their meeting here in Washington. Our panel will stay with us in our second hour. Jeannie Shanzano and Rick Davis, which much more to talk about.
It builds
on the way.
character
We'll be
like a
joined in
paper
studio
route.
by Peter Navarro, following the
Revenge
trade deal
trading
with
builds
Japan. There could be
character.
more
You'll
to
find out a lot
come.
about the dark
Details
side
on
of
that
yourself
ahead. Only here on Bloomberg.
when you reflect on it at night, thinking about how ridiculous you were acting. It's a great reflection tool. You really reflect on who your inner self is. Yes. Yes. You'll learn through despair. And then after you burn through your 5 resets, losing your fucking mind, going full retard. No, there's no short here. Look at the forecast. Does the forecast say anything about anything going short? We're only looking for longs. So when the forecast is all green, now we're looking for, we got our A+ setup. This was the A+ setup, right? Remember I talked yesterday about B setup and A+ setup? This EMA cross was the A+ setup. And it worked out well. We double dipped it and we made 700, 750. Okay, so now the B setup is a pullback into our entry zones. So we're looking for a pullback, rotation down, and then another upward move. So like I was saying earlier, we're looking for a pullback down to like the 50 EMA, the 20 EMA, or maybe the VWAP, and then the upward move back for a continuation higher. But that's our B setup. It's not as reliable as the A setup. So that's what we're waiting for. There is no short to consider. As far as the forecast, I mean, you know, somebody might be on a different time frame. Somebody, you know, might have, you know, different indicators, and they might see a short here, and there may be one because the stochastics are overbought. So your case would be, well, the stochastics are overbought. We're waiting for the pullback. But what you don't, the reason why I only stay on one side at a time is so I don't get myself chopped up. Because you don't want to like try and, all right, I got the long, now I'll get the short, get the long, get the short. You know, you kind of want to be organized a little more and look for one direction at a time while it's happening. So the pullback, somebody might be able to predict the pullback with their setup, but for me, I'm just waiting for the pullback so I can get to my setup, which is, this time it's going to be our B setup at one of the entry points. Yeah. And I've done it too. That's why I came up with this. I would trade up, trade down, trade up, trade down. And then I do well, and then I get chopped up, and then I'd be on the opposite side every single time. And I said, well, how can I just stop from doing that? And then I created the forecast box and just the philosophy of the A and B trade. Yeah. And I don't reverse trade. I just wait for the next setup. Because honestly, an honest guy, an honest man, look, an honest man can live off $750 a day, can't he? You know what I'm saying? And you could probably scale up too. I mean, I'm on 3 accounts, but that's not real money. But if it was real money, you know, I'm trying to get to the real money. But, you know, an honest guy can live off that. You don't have to keep trading after this. Just wait for your best setup again.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Will the EU be next? Welcome to the Wednesday edition as Bloomberg reports progress now on a possible trade deal with the European Union that would include a 15% tariff just hours after the White House announced a trade deal with Japan. I'm Joe Matthew alongside Tyler.
Yeah, that's right.
Washington. Thanks for being with
That'll
us
get you a weekend in Montreal with some hookers and some cocaine.
The next hour, we're going to be exploring what's inside
A few 8 balls and a couple hookers.
We are short on a few details so far.
Right, exactly. And the
at the finest establishment in Montreal.
Potentially could be ready to accept a 15% tariff. Joe, our understanding had been that they were angling for 10% tariff. Joe, it does appear that the administration is sort of
maybe get you 3 Russian hookers.
That's true. We wonder if 15 is the new baseline after we saw a couple of these with regard to the Philippines at 19, now Japan at 15. We're going to go to the source this hour.
Rolling big.
Later. First, some reporting from Josh Wingrove. We're going to talk as well with
you might.
The ranking member on the
you might.
Committee, but Tyler, Peter Navarro
might want to plan on it. You might want to have everything you need ahead of time to plan on that.
He's going to be with us in studio to get a sense of what's going through his head today as we have new reporting.
All right, you see our pullback?
Might be next.
So we're getting our pullback.
We're watching closely when it does come to China because
ES is pulling back too.
Its next round of talks, the 3rd round of talks.
There's no trade on the ES. The reason is the volume's so low. You see how low the volume on the ES is?
When we've already seen the administration put forward some
But
measures, at least, to keep the ball rolling, such as those H20 chips being able to be
sold
to China from NVIDIA.
Well, markets aren't waiting around to find out. You see Wall Street.
All right, let's go back to the NQ. NQ's still live.
Right, exactly.
But we're starting to get our pullback, but we're waiting for the rotation to finish. So you want it to go all the way and then start rotating back up. And then that's when we're going to look for our entry.
NASDAQ all surging on trade deal optimism. Right to the numbers here. A rally underway with the S&P now up 29.6339. That is a gain of 0.5%. Yes, a record on the S&P. The Dow up 372, up 0.8%. Nasdaq Composite Index up 44, up 0.2%. Nasdaq 100 Index back in the green, little changed, up under 0.1%. Russell 2000 Index is surging 1.1%, and the Mag 7 Index ahead of earnings after the bell from Alphabet and Tesla. That index up by just about 0.1%. The 10-year 4.38%, the 2-year 3.86%. Gold down $43 the ounce, $33.88, a drop there of 1.3%. And West Texas Intermediate crude down 0.3%.
All right. So this is going to take a while, guys. So
gaining fuel as the U.S. reaches a trade agreement with Japan. Speculation is growing.
this is when you can get yourself in trouble. You're all excited. You made a couple really good trades. You planned and called out. You feel like you're king of the world. You got the market mastered. And you just got to give it some time to set back up. You don't want to just get in to get back into the action. Because right now it's bouncing off the 200. This can talk you into taking a long right here. You're like, fuck it, I'm going to go along. We're going all the way up to my trend line now. And you don't know that. It might. It might go all the way to the trend line now. But the fear is if you get in now to go to the trend line, what happens if the stochastics roll over and we go back to the VWAP first? And then you got to take all this heat all the way down. And then what if we get a liquidation candle after that and you blow your account out? And then all of a sudden it comes back, we confirm, get the B set up and go all the way. You know, that's something you got to think about, you know. 3 bounces and I'm short. Are you in a short, Hazard Matt?
We're doing things that have never been done in this country before, and our country is becoming very rich again, and that's the way it should be.
I'm okay if this takes off to the trend line without me. I'm totally okay. I've already made my money on this trade. I got to wait for the next setup in order for me to re-enter.
It's something that the administration is touting as innovative and ultimately helped to get that trade deal over at the finish line, and that's where we want to start by bringing in Bloomberg's Josh Wingrove. He helps to lead our White House coverage here. Josh, thanks for being here. Thanks. I'm wondering if you could help us connect the dots here, because we saw this deal emerge with Japan. The administration says that this investment fund ultimately was what helped to clinch the deal. Should we expect other trading partners, such as the European Union, to put something that the administration
might be hiring in your
area on the table? One, would they? And two, what would that even look like?
I think innovative is going to be in the eye of the beholder, and I think the Japan situation was.
I haven't eaten at Taco Bell in forever. Can they still do the $5 box?
Fire back than Europe.
It's usually like the $7, $8 box now.
What they had was a pocketbook to make this pledge. Now, I should note, we do not have details on it, and as we've been saying in our reporting, of course, the number was 400 printed on the president's desk until he scratched it out with Sharpie, and then it was 500. Now it's 550. We don't know details. The Japanese are saying these are loan guarantees. The Americans saying something different. Eye-popping number any way you cut it. One that'll be difficult for other countries to match. Perhaps South Korea, looking at a similar model. They have similar concerns to Japan around auto tariffs, steel tariffs as well. So, you know, a big one here. I'm glad my toddler was asleep when this really popped off, because that really smoothed my night over a little bit. That was important. But I think one thing here is to back up, like, so much of Trump's view on trade was forged, like in how he, like, you know, with Japan in the 80s, in New York, and like all the consternation around that. So this is symbolic in some ways, but I think it's just really too early to say whether it's a template for the EU, and of course we're seeing today progress potentially on the EU, or other deals like the South Koreans. We do think, though, that, you know, you start looking at this 15 number as more of a floor. One other thing that Trump did was scratch out 10. Right? The initial deal here was the Japanese would go down to 10 on general goods. No doubt.
Let's see if the 200 holds it up. I'd be interested to see that.
Of the 80s.
If you look at the ES, well, the ES isn't really when your volume is so low.
Is that the cost of selling cars here? That's the
It's
car
not really going to be
for
valid.
Japan? And where's all that money going? Can we do anything we want with it?
It is so unclear. I cannot stress
It's
this enough.
tough.
It's like
The,
there's no
you
details.
can't really
No
you
one's
can't
writing
really
yet. We're
follow
gonna
the
see it.
ES anymore when the
Correct.
box
I mean,
isn't
Americans are
on.
saying this is new money. For instance, SoftBank has already talked about $100 billion pledge.
It's at 1 o'clock. We still got we got 2 hours and 20 minutes.
Them sort of double counting previous
The trade box will turn off at 3:20. If you're not in a trade before then, you do not enter trades unless you're going to gamble on
They're
MOC.
saying, look, we're going to have like, you know, a new
And the only
flagship
time to
staff,
gamble on
$100
MOC
billion
is if you
project.
have an eval and you're kind of getting short on your time for the renewal, or you just want to gamble an eval because you have one and you can afford it. That would be the only time to really enter a trade after 3:20 Eastern New York time in the afternoon.
Who knows? But for the Japanese, this was the price of getting it down to 15. In essence, actually 12 and a half, because Akazawa is saying that the MFN rate is included in the 15. So previously, before all this started, the auto tariff was about 2.5, and now it'll be 15 for them. They can work with that. And now if you're the South Koreans, you have more pressure to try to match that. They, of course, have less domestic U.S. production than Japanese companies do. And if you're other automakers in Europe, in Canada, and Mexico, these numbers, you know, probably change your calculus a little bit as well.
Well, since we are talking about how autos really were at the heart of this deal, on both ends, the administration also says that it's going to see perhaps more lenient standards for U.S. automakers. Sector-specific tariffs have really come into these negotiations under Section 232 enacted on national security concerns. These are totally separate from the so-called reciprocal tariff plans. Can you just walk us through, is this where the U.S. perhaps has more leverage? Is that why they're coming into the conversation in a meaningful way, or were they always supposed to be intertwined?
Okay, so now let me talk a little bit about the B setup and kind of considering it.
Which, by the way, have a
You gotta, how can I say this? The B setup can turn into an A setup in the opposite direction
they didn't. There's no change in steel tariffs.
when we get really long into the move. So what I mean by that is you see we're looking for to continue higher. We're looking for an entry somewhere around the 20 EMA, the 50 EMA, possibly the VWAP. But if it comes down that far, look at our control EMAs. Our control EMAs could end up getting close to crossing, and if we lose the cloud to negative to selling volume, that could be we could be taking a continuation trade higher straight into a front run A plus move reversal. Does that make sense?
High price of entry if you're a country that is wanting to bring yours down as well.
Getting into the granular with
So you kind of got to be careful.
Correspondent Josh, thank you. Maybe next time we talk.
Because if this keeps creeping down and the stochastics stay overbought, this could be another cross like this one. See how that crossed? And then we could run lower. And you don't want to be in a long during that. That's when you blow out accounts. If you don't let it go. I've blown out so many accounts getting caught like that because I wouldn't let the trade go. I'd add to it. And then you're waiting for a whole nother trade cycle for it to come back your way and hoping that you don't go too far down. So that's just something to think about while you're considering. That's why it's the B setup. The B setup isn't as good as the A plus.
In my state, the Commonwealth of Pennsylvania, voted for Donald Trump by just over a percentage point, is because overwhelmingly voters who swung from 2020 to 2024 were saying costs were just too high. I heard it anecdotally. All over my district and really all over the Commonwealth. I even observed focus groups that was of swing voters, and it was so consistent. I would say for at least 80% of voters who swung, it was because of high costs. So what has Donald Trump done?
Yeah, lead.
6 months
All right, so we touched the 50.
Solved the problem of costs and goods being
Our stochastics are still running down, so let's give it a little bit because you don't want to.
Walmart quietly.
You don't want to go to the continuation trade against the stochastics. You do not want to do that.
The tariffs. This has been a real problem for our economy. The Fed has outright said the reason why they are keeping interest rates as high as they are because of the uncertainty of high tariffs. So forgive me if I don't applaud when the arsonist starts to put out the fire that he started in the first place.
But Congressman, at the same time, you also represent a state that's home to a lot of steel production in the United States, and we've seen many of the steel manufacturers applaud these tariffs in terms of a more protectionist policy. I'm wondering if you would caution the administration when it comes to any sort of potential carve-outs or limitations on these sector-specific tariffs like steel as they are negotiating these deals going forward.
Yeah, you know, I'm glad you brought up this example because whether you know it or not, you actually are bringing up an example of an area where I have supported tariffs. Now, what's the difference? I've supported tariffs in the past and currently as it applies to specific countries that are behaving in bad behavior and on particular products. So, for example, tariff on China for their constant, incessant steel dumping to hurt the U.S. steel industry. That is
okay, so you see, this is where you got to be careful. Like this candle can trick you.
What President Trump is doing is entirely
And look at your stochastics. This candle, you can be like, okay, B setup, boom, and then all of a sudden, now all the 20 EMA turns into resistance, and you end up in a full-on reversal to go short. So it's just like you got to be careful
here. They have
here.
no justification. In fact, it's laughable when they attempted to pretend like there was an economic.
Now, I would consider the long if the stochastics rolled and started going higher. You know, I kind of want. I know we're being really, you got to be really patient.
So that is, I think, a clear difference.
Until you get something that tells you. Plus, we're inside of the no trade zone around the VWAP. We're in the shaded area around the VWAP is the no trade zone. So we kind of want stochastics to roll up, be above this zone or at the top of it, really, in order to think, okay, we're going to continue higher. Otherwise, if these cross and we drop below the VWAP, you're probably, if you're in a long, then it's. You better, you know, you're puckered up.
To regular order, if there is such a thing, in crafting a budget
probably
for the
taking
next
heat.
Fiscal year, or have Republicans burn the bridge, and your response will be a middle finger.
Sorry, you threw me for a loop on the middle finger reference. Obviously, you know I'm from Philly, so you thought that I might be familiar with that gesture and a Philly sports fan. But anyway, I'll instead just talk about the budget process. You know, Republicans, unfortunately, led by Russ Vought, the most dangerous man in America that almost no one has ever heard of, they are breaking the budget process. And the way they're doing it is by trying to have a normal appropriations process one day, and then the very day after saying, okay, but we're going to unilaterally rescind X, Y,
like these leads are coming in, and they're not answering any of my first questions.
Look, I don't believe in
government
shutdowns. They're costly. They don't make any sense. I don't want to see one. But let's be clear. I am not going to support a continuation.
See, if they lay you off and give you the package, I think they let you keep your stock options.
As it relates to impoundment and rescissions. Let's not forget, the prevailing law here is the Budget and Impoundment Control
That'll fund the
Act
cash account. And
The
Ninja
Supreme
Trader.
Court
There we
has
go. You see, look, it just fell through.
That what previous president did, President Nixon, when he went down this road more
It just
than a
fell through.
century ago.
So by being patient and waiting, it paid off. So now we're in a total volatility area because look, now we're underneath the VWAP where the ES is above the VWAP, and now we're back in VWAP chop mode. So we need to wait and see where we confirm.
Shutdown perhaps inevitable here, because you said that you don't want to see one, but we've spoken to a few different Democratic House members in the past week who seem to be flirting with the idea that Democrats could gain more leverage if they do threaten to shut down the government.
Well, I would direct you to actually a longer piece that I wrote for the Bulwark a couple days ago that kind of fleshes this out and adds entire clarity to what I'm saying. What I'm saying is that we need to get back to regular order, have a normal appropriations process without these unilateral rescissions. If the administration continues to do that, then I certainly would not be in favor or vote for a scenario in which we reach an agreement on a Monday on a bipartisan basis, and then the very next day on a Tuesday, the White House says, oh, thanks for your vote for that. We're now rescinding X, Y, and Z in that bill, but we're keeping the parts that we liked. I'm not going to be a sucker, and I'm certainly not going
You think
to
we're going to drop to the
I
downside?
believe actually a shutdown is more likely than not, and it is directly as a result of what the White House is doing when it comes to the
We'll
budget
see what
and
happens.
decisions.
Stochastics are almost oversold.
Why Democrats must think hard about voting to fund the government. If that's the starting point here, Congressman,
Trade
you
box
wonder
is
where
back
we're going
on
to
in
be
the
post-September. Will it be incumbent upon Democrats?
But we got a fair
if you are
value
willing
gap up
to
above
vote to
us now
shut
in
down
the
the government,
ES.
to also
That
have
may
a
hold
plan
us down.
to reopen it at some point?
Yeah, let's be clear.
So
Republicans,
we got this
as
order
they,
block we're testing
constantly
right now in
remind
the
us,
ES, and we got
are
a
in the
fair
majority
value
in the
gap
House
up
and
above.
run the House. They're in the majority in the Senate.
NQ, we're
and
still
run the
testing
Senate.
the order
And,
block,
they
but
control
we
the
have
White
no
House
fair
and all the
value gap
executive
to hold
branches.
us down.
If there is a
So
government shutdown,
this is going to be
it
interesting.
will be because Republicans want to shut down the government, period.
Does another rescissions package, we've only got a minute left, make that more likely? If Republicans decide to rescind education funding, for instance, we can bank on a shutdown.
There is no question that another rescissions package from this White House is them essentially saying we
You see the
want
forecast
to
cloud?
see
It's
the
almost
government
closed
shut down.
up. We're about to go
Russell
red
Holt,
on the
by
forecast
the
cloud.
way,
We're
last
red.
week, let's not forget what he said. He said the problem
So
with
if the
budget
20
process
EMA
is that
turns
it's
into
bipartisan.
resistance,
So he's outright saying that they want a government shutdown and they want to force one.
He's the ranking member on the House Budget Committee.
This
and
is
knows
crazy right
what
now.
he speaks when it comes to budget matters. Congressman Brendan Boyle, Democrat from Pennsylvania. We appreciate the insights as always. Let's stay in touch as we get closer to September 30th and have a good recess if we don't talk to you before then, Congressman. Alongside Tyler Kendall in Washington, I'm Joe Matthew. We'll assemble our panel next, only here on Bloomberg TV and radio.
all right, dude, we'll be here. All right, so now we're starting to rotate on the stochastics. Let's see. I'm going to wait for the next candle and see what the next candle does. I'm not going to get in on this candle. All right, I'm gonna go do a couple sets here. I don't want to like hypnotize myself because look at the ES is looking like a short big time. This is looking like a big time short, and the NQ is looking like a long. So I don't want to get caught guessing. So I'm gonna give it another candle or two. I'll be back in a minute.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are climbing on U.S.-EU trade reports. The Dow, the S&P, NASDAQ all gaining. S&P right now at a record up 30, 63.40, a gain there of 0.5%. The Dow up 388, up 0.9. We've got NASDAQ up 38, up by about 0.2%. The Mag 7 index ahead of earnings out of Tesla and Alphabet, up now by 0.1%. The 10-year, 4.38%. The 2-year, 3.87%. Gold down 1.2%, 33.90 the ounce. And West Texas Intermediate crude down 0.1%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Tyler Kendall.
Many thanks, Charlie Pellet. Wall Street, of course, keying off the news from here in Washington. It's so often we meet at this time on Bloomberg TV and radio to connect the dots between Washington and Wall Street, and that is the case today with a series of trade deals that have been announced in the past 24 to 48 hours, and maybe another one to come. Of course, Tyler, it was Japan last evening that moved the markets for the better this morning. There's now talk of a trade deal looming with the EU, which brought us to new highs for the day.
Right, exactly. It's been really interesting to see how this has all unfolded because Japan was one of those countries that was long prioritized by this administration for a deal. Officials said that they came early and often, but then there appeared to be some tension before we got this deal that we now see. And the administration is really out in full force touting the negotiation and ultimately what is in this framework that we've seen from the president. And that includes Commerce Secretary Howard Lutnick. He was here in our D.C. studios earlier today. We want to bring you part of his conversation with Bloomberg's Anne-Marie Herdern earlier on Bloomberg Surveillance.
The Japanese are going to give America the ability to choose the projects, decide the projects, and execute the projects. So let's say we want to build generic pharmaceuticals, right? We don't make antibiotics in America. So the president says, let's go make antibiotics in America. The Japanese will finance the project. They will finance the project, and then we'll give it to an operator who'll run it, and the profits will be split 90% to the taxpayers of the United States of America and 10% to the Japanese. So they basically bought down their tariff rate by this commitment of we will back what you, the president, and you, America, want to build in America that are key to national security concerns. We'll back that, and therefore we'll be on your side.
The Prime Minister, Ishiba, says these are loan guarantees. Is it more than that?
Of course it's more than that. It's equity, loans, and loan guarantees. They have to deliver the project. So we say, let's build semiconductors. We want to build $100 billion worth of semiconductor fabs, is what you call them, because we want to make those chips in America. The Japanese will finance that whole project. They've got to put down equity, loans, whatever they want to do. They have to deliver the $100 billion.
Or Japanese companies?
Oh, no. Anybody does it. It's the Japanese are the financer. They're the banker. They're not the operator. It's not Japanese companies. So what people get confused, this isn't like a Japanese company like Toyota coming in and building a factory. No, that's Toyota. This is literally America saying we want to build generic pharmaceuticals, semiconductors, critical minerals here.
Does anything like this exist now? Like, what could we think of and model after
That's why you have someone like me who joins the government. I mean, this was my idea in January. So I started, because the Japanese are never going to really open their market the way Donald Trump wants them to open it. I mean, open it. You know, so what happens is they had to come up with another way to really make it work and the tariff model work. So I suggested to them a $400 billion fund where they would give to the president and they would give to America the financing to go build out your whatever you think for national security, go build it, we'll back you, and that's the model.
The reports the Prime Minister, though, may be resigning. Could this deal transcend domestic politics in Japan?
Of course. I mean, it's vital. You saw what happened to their car companies. They were all up more than 10% today. So a 25% tariff delivers what Donald Trump said. Build it in America. A 15% is right on the edge. It's right on the edge. So the Japanese car manufacturers can still produce in Japan, and that's what the Japanese wanted to buy. They wanted to buy that line where they could stay in Japan for some cars, build, of course, huge amounts here, but also what they did is they'll invest and give Donald Trump the tools to invest in America.
That was U.S. Commerce Secretary Howard Lutnick speaking with our Anne-Marie Herdern on Bloomberg Surveillance earlier this morning. And trade is where we want to start with today's political panel. They're both Bloomberg Politics contributors. We have Rick Davis, partner at Stone Court Capital, and Jeannie Shanzano, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, I want to come to you because we're starting to gear up here. There appears to be more deals potentially in the pipeline. It might not be 90 deals in 90 days, but when we see a significant trading partner like Japan get this framework, is this enough for the administration to tout its tariff plans as a win?
No question. This is a major tariff or major trading partner of ours. These are the 12 to 19 countries that really make up the bulk of our trade relationships around the world. They're clearly who the administration is focused on to craft these more bespoke trade relationships. And this is pretty creative. I mean, the idea that Japan's going to serve as a bank to finance our critical needs, whether it's on infrastructure, pharmaceuticals, other things, is pretty unique. And I think Americans will get it. That's $550 billion that they don't have to pay in taxes to do the same thing. It's kind of like an infrastructure bill, $1 trillion infrastructure bill, but not being paid for by American taxpayers. That can be a pretty salient political argument. And I'm a little surprised that they haven't attached in their talking points either Secretary Bessent today or Commerce Secretary Lutnick on Bloomberg that this is really relief for the taxpayer. We continue to build infrastructure and become a stronger economy, but we don't have to charge the U.S. taxpayer to do it.
Pretty interesting, Jeannie. What's your thought on this? Having been a critic of the tariff regime and Donald Trump's approach to trade, does the White House deserve some points for creativity with this investment fund?
It's absolutely creative. We just don't know what it means. I mean, what is this? What is the time frame? What are the guarantees? Anne-Marie asked an excellent question, which was what happens given the political uncertainty in Japan at this time if the prime minister steps down? And that could be any day now going forward. What happens to this pot? And what kind of deal is this? It's a pay-to-play scheme, it sounds like, where you pay us, we get 90% of the benefits. Never heard anybody make that kind of deal. And then you get these tariffs that are no longer 26, 25, 24% down to 15. So there's so much about this that we don't know and don't understand. What we're getting is Donald Trump's usual Truth Social announcement without the details and very little from Japan's side, except the market expressing relief that it's not quite as bad as it could have been. So if somebody breaks into your house and says they're going to shoot you in the head and ends up only shooting you in the arm, you feel a lot better, except in the long term, what have you done to the economy? And one thing, oh yeah, Joe, I'm fired up. One thing I would just say to what Rick said is tariffs, and this is driving me crazy, tariffs are a tax on the American consumer. Look at GM, look at Stellantis. They have been hurt in these last few quarters, and they have absorbed those costs now. They will be to the American consumer going forward. They will not continue to absorb them.
Right. Well, Rick, when Jeannie mentioned General Motors, we saw that they suffered a $1.1 billion profit hit from the administration's tariffs. They revealed no plan for a near-term fix. I'm wondering how you're thinking investors are looking at this. Shareholders are looking at this as these companies say that for now they're absorbing some of these tariff costs.
Yeah, look, each company takes a different tack to it, and some of those companies have been willing to take the hit on their own balance sheet before sending them out to consumers. Some companies don't have the consumer base that others do to do that. So it's really an individual decision by the C-suite to figure out what they're going to do in this regard. I do think that in general, people are getting more and more bullish about the fact that we're getting through the uncertainty period in the tariff regime. Remember, when this started a few months ago, nobody knew how it was going to end. These numbers were skyrocketing. I mean, 35, 55, 100% tariff regimes. I mean, markets were reacting very negatively. And now we've got it down to really arguably more reasonable numbers. I mean, Jeannie needs to understand we've always had tariff regimes. And so, yes, some people, and certainly a lot of Republicans I know, are not big fans of tariffs, but it's not like this is the first time a tariff's ever been applied. And right now, it looks like if this 15% tariff is a floor more than could be a floor, could actually result in not a whole lot of damage to the U.S. consumer, and yet create some certainty around the cost of doing business abroad.
That's what the market seems to think, Jeannie, and the EU could be next. Bloomberg is reporting that the European Union and the U.S. are moving toward an agreement that would set a 15% tariff, once again in this case, for most products. There's more to this as well. Steel and aluminum imports above a certain quota would still face the 50% duty. If this emerges, reporting is this is imminent. If this emerges in the coming days, if it happens before August 1st, doesn't this White House have something to celebrate?
They will absolutely celebrate it. And, they're nowhere close to their 90 and 90 days. We don't know what happens August 1st. So it's hard to imagine they can get there. It usually takes about 2 years to iron the details out on a trade deal like this. So, God bless them if they can move any of these forward in the next few days, and they will celebrate them. But you know who else is moving forward on a deal with the EU? Japan. You know where else they're going? They're going to China. And this is something that hasn't come up in this conversation, which is the fact that these special relationships with allies that we have long had, they are no longer special. And that has become perfectly clear to Japan as they move to China. And so what does that do to the national security, let alone the economic security of the U.S. when you look at the long-term impact? Are we throwing away enormous power and sway that we had in the interest of short-term benefits? And I can tell my dear friend Rick, I know very well we've had tariffs, but we've only usually had targeted tariffs. These blanket tariffs on allies with many, many reasons for them, we have not seen to this degree. And so this is an absolutely new approach in the modern era, and we don't know how it's going to pan out.
Well, Rick, let's just pull on one thread that Jeannie had mentioned there, and let's talk about China briefly, because we have seen the administration say that President Trump has a good relationship with Chinese President Xi Jinping. President Trump said the other day that perhaps a visit to Beijing could be in the not-too-distant future. How should the administration be prioritizing talks with China when we know that this is such a significant trading partner for the U.S., but that it's going to take a little bit longer time here to actually get a trade deal done?
Yeah, let me just start with one thing. It is a gross exaggeration to think that Japan is turning its back on the U.S. and looking for security with China. There are significant problems between the China and Japan relationship, and they are a useful and very helpful ally to us in the Pacific. That said, we'll see what happens in Beijing. Hopefully, a dialogue can get started soon.
We'll talk to you about it when it happens. Rick Davis and Jeannie Sheehan Zaino, Bloomberg Politics contributors, making up our great panel today. We thank you as always. Peter Navarro joins us next. The Source on Tariffs, straight ahead on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. S&P right now trading at a record. We are close to session highs, all about trade, all about tariff optimism. Right now we have got the S&P up 34, 63.44 where we stand, up by about 0.5%. The U.S. reaching a trade agreement with Japan. Speculation is growing about a similar deal with the European Union. Keep it locked in to Bloomberg Television and Radio for the latest on these developing stories. The Dow right now up 432 points, up 1%. Again, S&P at a record, up 0.5. NASDAQ up 0.2%, while the NASDAQ 100 index is up by 0.1%. Our Mag 7 index is gaining 0.2% ahead of earnings after the close of trading from both Tesla and Alphabet. Both of those companies are lower right now. The 10-year 4.38%, the 2-year 3.87%. Gold down $43 the ounce, $33.87 now, down 1.3%. And West Texas Intermediate crude down 0.1%, 65.26 for a barrel of WTI. Texas Instrument shares are plunging after earnings. TI down now by 11.8%. AT&T lower after earnings, down 0.3%. T-Mobile reports after the close of trading today. T-Mobile down 0.5. Verizon reported Monday. It is down now by 0.4%. Recapping stocks higher. S&P at a record, up 34, up 0.5%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Tyler Kendall.
All right, Charlie Pellet, many thanks. Charlie's look at the market. We'll have more on the Wednesday trade coming up near the top of the hour here with Charlie Pellet at World Headquarters in New York. Indeed, we're gaining momentum here in earnings reporting season. We'll have a lot more to talk about after the bell. We're gaining momentum, Tyler, in the number of trade deals being announced by this White House. First fire to be lit under this market was Japan. Now headlines of a potential deal with the EU got us to new highs for the session. We've got the S&P 500 now up about 0.5%. The Dow's up 1%. Investors love where this is going.
So the trade idea I drew out earlier was the B trade was around here, which we didn't take, and then go up and hit the trend line, and we basically did all that. So if I would have got in with a couple contracts at the 50 on the revert, you know, when it was coming back around, maybe.
White House is with us right now.
And then held it.
Washington Bureau. That would be
for my trade idea. I would have had all that run.
Peter, senior counselor to the president, director of the Office
but now
of Trade
we're,
and Manufacturing Policy.
There's no trade now.
The White House. Welcome back.
So the trade idea worked out. Forecast worked.
Details on Japan, and I thought, Tyler, what does Peter Navarro think about
off this whole move up? We made 750, which hey,
and now we've got a very creative
that's good.
With this
we could have got a piece of this run, but
vision for trade deals?
Yeah, look. For your
I could have also went the other way, but our trade idea worked out.
Started, right? We come in, President comes into the administration.
ES is about to hit the all-time high again.
Tariff. That's basically what we're charging Japan. We went to 25% tariffs on autos through what's called the 232, right? And then we instituted a global tariff on Japan.
Is that off?
And what we've got here is a beautiful thing. We go from 25% to 15% on autos for Japan. That was part of what President Trump was trading. The sneaky great thing about this is the $550 billion that we're going to get from Japan, and essentially as a blank check to invest in America. And the thing that really needs to be understood here is it's going to be used to basically cure our supply chain vulnerabilities. Okay? This is really important. We've seen in the pandemic that we were exposed on pharmaceuticals. We know we've got a chip problem where too many of the chips are made offshore. We've seen recently with China, their export restrictions on things like gallium, on rare earth magnets, critical minerals. And so this money, and Howard Lutnick, the Commerce Secretary, I think is going to be the symphony orchestra guy on this. We are going to figure out every vulnerability we have in our economy and make sure that we close that gap with now the help of the Japanese. So for me, that's the big thing. Now, the other thing to keep in mind here is, because I know you're going to ask me about what's happening with the EU and things like that, what this deal does, as what the Indonesian deal did, is it spurs other deals along, right? In this case, right now, we're in a situation where, for example, German cars are going to be at a disadvantage now to Japanese cars because it's a 25% tariff on German. Same thing with Hyundais from South Korea. So as just watching the boss, I mean, I'm almost getting tired of winning, but I don't think he ever will, okay? But as I watch him, he's like a maestro. He wasn't doing a Japanese deal. He was doing a synergistic whole deal with the rest of the world. This is just one part of that chess game.
Well, let's follow on this and talk about the European Union, because the Treasury Secretary Scott Bessent was asked on Bloomberg Television earlier today if the EU has put forth anything innovative, such as what we're seeing with this fund. Should we use this idea of the fund? Would that be something innovative that the administration is looking for? What are you looking for from the EU in order to clinch a deal?
Tyler, it's a great question. What I want everybody to know is that we have these large trade deficits with, we call them, the 15 big ones, right? And including the EU writ large. But every one, they're like fingerprints. Every country, or in this case, EU entity that we deal with, has a different set of problems that we got to deal with. So every deal is going to be unique to deal with that fingerprint problem. The problem we have with the EU is that they basically violate the WTO rules in terms of our ag products, so we can't export to them. They've got a tariff which was 4 times higher than ours when we got in, but they also have this thing, the value-added tax. I'd love to see some relief related to the value-added tax, which is unique. What I can guarantee you is once the deal's made, we're going to have a situation where we'll be able to sell more ag products, more autos, and we'll see a dramatic reduction in that trade deficit. But as to what it's going to look like, we'll see.
Is the design to see GMs and Fords driving around Japan, driving around Europe, or have we realized that that's not going to happen, and therefore the investment fund with Japan or something similar with the EU?
Well, certainly we'd love to see a lot more American cars driving around Europe. Japan's a tough market. If you've ever been there, they export a lot more cars than they ever use in the country. It's land constrained and things like that.
They drive on the left side too, Peter. They've got the steering wheel on the wrong side.
But I'm not going there. But what we can do with Japan is get them to buy more ag products. And the other part of the deal, which we didn't talk about, is Alaska LNG. I mean, if you think about Japan's vulnerability, they have a long-standing problem with China. There's over the Senkaku Islands and a whole bunch of other things, right? And they have to figure out a way to maintain their energy security in a world of volatility in Asia. And they're a lot closer to Alaska than they are to the Persian Gulf. And so doing an LNG deal and using their money to help do it is a really big part of this. So look, they're an important ally to us, a long-term ally, and this thing works on both economic security and national security. And I got to applaud Jameson Greer, Howard Lutnick, and Scotty Bessent. What we've done is every country has a template, right? There's like 4 or 5 verticals that we look at in terms of tariffs, non-tariff barriers, digital taxes, things like that. And they're just going in, and the countries are lining up like they're at a deli pulling numbers, and they want a deal. And the president then comes in and closes it. And by the way, when he closed that deal last night, it started at $400 billion.
I saw the Sharpie.
Yeah. So
550.
Come on, you do what? Yeah. So,
well, when we are talking about making the deals, I do have to ask you about our Bloomberg News reporting, which is that the EU sees progress towards a U.S. trade deal with a 15% baseline tariff. Is that where these numbers are going?
So let's view the spin of the game, right? The Canadians do this, probably the best or the worst, depending on what you think of that. But we don't negotiate in public, okay? these other countries aspirationally negotiate in public to try to get us to where they want us to go. So I would say that even though it was reported on Bloomberg, I would take it with a grain of salt. Let's see what happens. Never assume that anything's fixed until the boss says it's fixed.
But should we expect that the baseline rate is tending closer to 15?
I wouldn't go there. That's aspirational of the EU. It depends on what they give the boss. I mean, look, here's the problem with the EU. Besides the high tariffs that they charge us,
all right, what's going on? We got some news out there.
Non-tariff barriers, when we've challenged them on meat and pork,
price action is going crazy.
They refuse to abide by.
Let's check our news.
So that's a problem. This, I'm telling you, the value-added tax, okay? It's like on autos. You start with a 10% tariff, and you add a 19% value-added tax. That's not just a tariff. It's also an export subsidy, the way it works under the rules of the World Trade Organization. And then you got all these digital taxes that the Europeans invented and trying to slap on our big tech
Damn,
companies.
that's a big move down.
Anybody
know what's going on?
I never get ahead of the
Trump
boss.
traded Pfizer and Navarro on
EU
US.
deal. Come right
Take
back
it
here
with a
and talk
grain of
about
salt.
it.
I look forward to that.
But I caution you that if
Does
the
that mean that
EU
deal is not going to
putting
happen?
something out there in the biosphere out here, it's aspirational rather than maybe what's going to happen.
We hear you. When it comes to August 1st, markets, of course, want to know what we can bank on here. Are you in a world where if you get enough of these, you add a couple of more countries, maybe it's the EU, South Korea, something else that I'm not thinking of here.
So that deal isn't done
August
yet.
1st, everybody, you're on your own.
Maybe that's what this is about.
Countries that are in talks with the White House.
Again, I never get ahead of that. My job is to help the trade team figure out what we have to negotiate for. Again, give you an example. For example, on the whole critical minerals, rare earths thing, when we were hit with that by China, that was a major thing, I think, in world geopolitics, right? It's not nothing for China to withhold something as critical to technology as they did. It was a wake-up call to the world. But what that has focused our attention on is how do we solve that problem? So now we think in terms of what's Japan, what's the Congo, what's Guyana, what can they contribute? That's one of the verticals. Okay. So again, let's
it's going to be
case
by case.
Case by case.
All right.
Since you did bring up China,
The
the
trade
administration
deal is in
moved
question,
last
it
week to
sounds
ease
like.
those restrictions when it did come to NVIDIA selling its H20 chips. I'm wondering if you have any national security concerns around this move, which had been put in place originally because of those
that was not my lane. I mean, basically, we're giving them the H20, and we believe that that's in the interest of the United States. I think the reporting on that was a little bit over the top in terms of what China was actually getting, but that's not something I want to wax eloquent. Get Howard here or David.
We've been
Sachs.
lucky to have Howard Lutnick, Scott Besson, and now Peter Navarro all on the same day in this studio, which is pretty remarkable, and we've learned a lot from these conversations. Is there any of this?
I'm like, they were like my opening acts.
I think we saved the best for
Sorry,
last.
Howard, Scotty.
I think we saved the best for last.
Or am I the epilogue?
Well, I don't know. Let's ask the boss when we're done. When it comes to the defense contractors, we can talk about GM, but Tyler mentioned national security. When you hear Raytheon or Lockheed say, hey, the steel is eating into our margins when we're making missiles and military hardware, is that the cost of doing business?
So let's go back to the Japan deal. We just got 100 more orders for Boeing, and we got the Japanese to
and that
significantly increase
the impact on the margin.
We're going to do our arms sales to them. And during the first term, I was basically the tip of the spear on arms sales, and we were having some big problems with the Hill and all, and even within the State Department. And then we just turned that around and started selling F-16s to Bosnia and stuff like that. And that's good for America because it means we don't have to fight the battles. We create jobs at home. So Raytheon's going to be quite happy. And if any Raytheon lobbyist dares criticize any particular part of the Trump thing, they're not seeing the big picture.
Okay, because the scale, the increase in business will offset the impact on margin that we're talking about, is your point.
I think that's what the markets have figured out. I remember when the boss first put on the tariffs and the market,
Yeah.
you know, the Dow went below 40,000.
Yeah.
So I'd be sitting on a set like this. I said, what are you doing? We're going to 50,000.
We're at a new all-time high here already.
Yeah.
50,000. That's the
That'll
target
be
for
easy.
Peter
We'll do that
Navarro.
in our sleep.
Come back and see us when you
Anytime.
get the next deal.
All
It's
right.
good to see you, as
Yes, sir.
always. Straight from the White House, Peter Navarro with us here live on Bloomberg TV and radio. Alongside Tyler Kendall, I'm Joe Matthew. We'll meet you back here at 5 p.m. Eastern for the late edition of Balance of Power. It's only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. You are listening and watching Bloomberg Business Week Daily. Carol Massar, Tim Stenivek, and we've got stocks. They are trading higher. We've got a couple of IPOs, and don't even talk to me about those meme stocks. We got a new bunch that are actually kind of soaring in today's session.
Krispy Kreme?
Krispy Kreme.
DNUT?
Yeah.
Anybody?
Beyond Meat.
Beyond Meat.
What's the other one?
I don't know.
There's
but
another
those are sort of blasts from the past, and that's certainly showing some optimism.
GoPro.
GoPro. Thank you. Yeah, another blast from the past.
Exactly.
Are they excited about the optimism over trade deals? Is that what it is, Carol?
I don't know, but we're going to certainly talk about trade deals. Keep in mind, this is all ahead of some really, really big tech earnings. So we're going to talk about, first of all, in the next 60 minutes, that big trade deal with Japan. Next one, maybe the EU. And then next stop, I guess you could say, is China, Tim.
That's certainly the hope. Also, as Carol mentioned, big tech earnings after the close. Alphabet and Tesla are reporting. Also, Texas Instruments getting hit pretty hard in today's trade after their report yesterday. Speaking of tech, Carol, big AI event happening in Washington, D.C. today.
Yeah, we're going to check in with our Ed Ludlow, who has been there all day. And then bigger IPO momentum. Got a little bit of a theme here, folks. 2 more companies going public, and we've got the CEO of one joining us. Got to say, stock's trading a little bit lower here in its first day of trading. All right, more to come in the next hour. First up, though, let's get to that rally underway. A little bit of a rally on Wall Street. Let's check in with Charlie Pellet.
All right, thank you very much. Lots going on. We got you covered on Bloomberg Television and Radio. Indeed, S&P 500 index record right now, 63.47, up 37 for the S&P 500 index. That is a gain right now of just about 0.6%. The Dow pushing higher, up 1%, higher by 436 points. NASDAQ up 81 for the NASDAQ Composite Index, a gain there just about 0.4%. Carol and Tim summed it all up. Optimism about trade and tariffs. We've got the 10-year 4.37%, the 2-year 3.87%. Spot gold now down $38 the ounce, down 1.1%. A retreat as well for crude, down 0.2%, just above $65 a barrel. And Bitcoin now down by 1.4% at 118,149. Carol mentioned Texas Instruments. Stock is plunging now. TXN to 11%. GoPro and Krispy Kreme surging amid an expansion of the meme stock rally. GoPro now up by 16.8%. Krispy Kreme, DNUT, donut on the ticker. It is up by 7%. Beyond Meat was in the category earlier in the session, but right now Beyond Meat is lower by just about 0.4%. So again, recapping, busy day for Mag 7 earnings. Tesla, Google after the bell. We got you covered on that. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, then cross Beyond Meat off of the meme
At least
stock.
for now. I mean, it was up as much as 14% earlier in the session.
I know.
Okay.
Talk about some volatility.
That's what makes it a meme stock.
It's exactly. I mean, no fundamental changes, but just some play and a lot of momentum out there in the world of social. Hey, let's get to what really is probably top of mind in addition to those big tech earnings, but what's going on when it comes to trade and tariff deals. Trump administration, no doubt about it, out in full force today, including showing up earlier on Bloomberg Television and Radio with the surveillance gang on TV. Top of mind, those latest trade agreements still waiting to be done, including one with the EU, and then another that's already been hammered out with Japan, Tim.
Weighing in, both U.S. Treasury Secretary Scott Bessent, followed by U.S. Commerce Secretary Howard Lutnick.
15% for Japan for reciprocal tariffs for autos. That is a different kind of deal, but because the Japanese proposed a very innovative solution.
Has Brussels come up with anything innovative?
Not yet. The EU has a collective action problem. 27 countries.
That's up to them to negotiate, right? Are they willing to open their market? I don't think anybody. Europe's not going to go and give us $1 trillion to
Well, can they
invest
get
in
below
America.
15%, or is 15% now the floor?
For autos, I would.
No, for a reciprocal tariff for the European Union.
I don't think
at one point they were willing to accept.
I don't think
10%.
big countries can get low like that.
All right, that, of course, is U.S. Commerce Secretary Howard Lutnick, preceded there by U.S. Treasury Secretary Scott Bessent. They were earlier on Bloomberg Surveillance on TV and radio. Hey, check out those full interviews. You can find them on the Bloomberg and at Bloomberg.com. Hey, for the tell, though, on these trade agreements and what impact it may have on global trade and for investments in the U.S., we start in the nation's capital with a senior advisor in Japan chair at CSIS. It's the Center for Strategic and International Studies. Christy Gavella joining Tim and myself from the nation's capital. Christy, it does seem like things are moving along on trade deals. According to what's kind of coming out, are these good trade deals for the United States? Are they good for the economy? Are they good for the global economy? And why or why not?
Well, it certainly seems that the Trump administration is gaining momentum in its quest to negotiate trade deals before the August 1 deadline. If we look at the deal that was announced with Japan yesterday, it's clear that these are good deals for the U.S. in the sense that the U.S. is raising tariffs by significant amounts and therefore accomplishing the goal of the Trump administration, also by getting increased investment that addresses the trade deficit. Some could argue that the concessions being offered are perhaps not as significant as they might have wanted, but they are getting, for example, Japan $550 billion in investments, as well as concessions on rice imports and also on auto safety standards. So these are meaningful deals in a sense. And the deal with Japan was the most substantial negotiated yet in terms of trade volume.
In your view, does it seem like the deal with Japan is better for Japan or better for the United States?
It represents a compromise on both sides. Japan's initial position was that it wanted the removal of all U.S. tariffs, which of course it did not receive. But a key issue for Japan was the tariffs on automobiles, which were at 25% from earlier in the year. So Japan received a reduction to 15% on autos and also received an overall reduction from the proposed 25% reciprocal tariffs to 15%. So that is a substantial improvement over the initial conditions Japan was facing. It's also the lowest reciprocal tariff rate that's been negotiated to date with a country that's running a trade surplus with the U.S. But make no mistake, 15% tariffs are still a significant blow for the Japanese economy. So, things were given and things were gained on both sides.
Hey, there was a Bloomberg story, Christy, out this morning. It included a quote from Trin Yuen, senior economist for emerging Asia at Natixis. And she said, we live in a new normal where 10% is the new zero. And so 15% and 20% doesn't seem so bad if everyone else got it. And she's talking, of course, about tariff levels. She went on to say that a 15 to 20% tariff level, it's still profitable for U.S. companies to import from abroad rather than produce similar goods at home. So wait a minute. I thought these trade deals were about bringing back manufacturing and supply chains to the U.S. and investment back to the U.S. Is that going to really happen?
Well, on your initial point, it is true that the Trump administration has managed to reset people's perspectives on what constitutes reasonable tariffs. So, what we see with Japan, for example, would have been considered horrific, and the minimum 10% that seems to be on the table is also shocking by previous standards. But it is true that in the longer term, it's still up in the air whether these tariffs will really achieve the goal of bringing investment and jobs back to the U.S. in a substantial way. These tariffs are not necessarily the best tools to do that, and it also is very difficult to predict how companies and others will react to them. So we can only really see the short-term consequences in terms of rising prices for consumers and also the revenue that it will generate in the short term. But companies and others will adjust in unpredictable ways, and it won't necessarily mean that they will come back to the U.S.
The president has talked about trade deals and economies opening up to the United States. In your view, was the Japanese economy closed to the United States? I mean, certainly from an automaker perspective, it's been a few years since I've been in Japan, but I didn't see any American cars on the roads of Japan. They were all Japanese cars there. But has the market been closed to the U.S.?
In general, tariff barriers in Japan are not significant. Japan has had open trade with the U.S. for a long time. But you're correct that on sensitive products like agriculture, there have always been high tariffs. That's not unique to Japan. So rice did become a significant issue in the negotiations. On autos, the main issue there is more complicated. So the concession that was given in the agreement related to auto safety standards, which have long been perceived to be a non-tariff barrier that have made it more difficult for U.S. automakers to sell in Japan because they have to meet different safety standards. But there are a host of market factors that make U.S. cars less competitive in Japan that won't necessarily be addressed by these changes. So, there are areas, in short, where Japan's market has been rather closed. But on the whole, companies face relatively open conditions on a relatively free and fair playing field.
We've seen some reports about the EU seem to be maybe working, getting closer to a deal with the United States. We've got China next week. Just to wrap up, just remind everyone why having trade deals with these big trading partners is important for the U.S. economy and the U.S. overall.
Well, from the perspective of the Trump administration, the issue is that these countries are running trade surpluses. So they are seen as a negotiating tool in that sense. Overall, these are our major trading partners in the U.S. And so the trade volumes that are going through are significant to the economy. It's important that these relationships are maintained. It's important that from the administration's perspective, they be rebalanced in various ways. So, getting these deals ahead of the August 1 deadline minimizes disruptions to markets and to companies' activities. So it's important that they move forward.
Yep, we can cross a big, big uncertainty off our list here. No doubt about it. Thank you so much. Christy Gavella, Senior Advisor and Japan Chair at CSIS, the Center for Strategic and International Studies, joining us from the nation's capital.
Let's stay in Washington, D.C., as the Trump administration called for boosting AI development in the U.S. by loosening regulations and expanding energy supply for data centers under new guidelines that also urged withholding funds from states that put burdensome rules on the emerging tech. Speaking of AI, the president will give the keynote at an event hosted by the All In podcast and a consortium of tech leaders, Carol, and lawmakers known as the Hill and Valley Forum.
Bloomberg Technology co-host Ed Ludlow is there. He has been there all day conducting interviews and reporting out what he's hearing. He joins us now at the Andrew W. Mellon Auditorium in D.C. Ed, good to be able to check in with you. I'm sure it's been a busy day. Set the scene. Who's there? What are you hearing?
Yeah, I think that the point of difference with this administration relative to the last is that it is a sort of deep mix of the private sector and government. So the Vice President, J.D. Vance, was on stage talking about how the point of the action plan is this 23-page document that's kind of segmented between action points and policy, is to allow America to move fast. But then you also have, of course, the CEOs, the critical CEOs in this space, which are those of NVIDIA and AMD also participating. I think, Tim summed it up really well. It's an emphasis on deregulation and cutting red tape while acknowledging that the energy component of what's happening is the bit that's probably missing, but the deregulation is going to be there in order to allow America to move fast.
So you've got some pretty heavy hitters. You talked about Jensen Huang of NVIDIA. You've got Interior Secretary Doug Burgum. You've got Howard Lutnick, Commerce Secretary Lisa Su of AMD, Kelly Loeffler, former U.S. Senator, now head of SBA. You've also got the Secretary of State there as well. Does it seem to be, Ed, more of an event that is talking about opportunities, or an event that's actually announcing investments, announcing new elements to competing with China when it comes to AI? That's talking about establishing and ways to establish the U.S. as a leader with this tech.
Probably the former. I mean, the expectation is that the president is going to speak here later today, right? But accompanying that, concurrently, there will be some kind of executive order that puts into action the pledge to deregulate, allows companies to move faster. As it relates to particularly NVIDIA and AMD, you guys will remember our coverage of the president's trip to the Middle East and the Gulf. And the big surprise dollar value deals were NVIDIA and AMD directly selling GPUs into both Saudi Arabia and the United Arab Emirates. There is still a lot of questions within the document that was published this morning about codifying a successor to the diffusion rule. But the blanket statement here, be it from Vice President J.D. Vance, and I'm sure the president will discuss it later today, is that America does want to export its technology to the world. And that includes exporting to economic adversaries, including China.
Hey, one thing I want to ask you, though, how much of what we're getting from the president, though, seems to be about energy for data centers and helping with that process, Ed?
Yeah, a lot. The way that the president framed it in his published remarks this morning is that this is a national security priority. And many of the particularly private sector attendees here have framed this in the context of you have to secure the energy supply if you're going to build the data centers and operate them. And this is something that J.D. Vance also discussed, but the data shows us that actually China is able to bring a lot more energy capacity and supply online much more quickly than America can. So I would say in summary and in aggregate, there's at least an acknowledgement, both from the government official side of those gathered here and the private sector, that America at this moment is behind China on securing that energy capacity, hence the focus on deregulation and cutting red tape, because they want to move faster.
Ed, how is this approach that you've seen just in the first 6 months of the Trump administration different than what you covered when it came to this during the Biden administration? I don't remember speaking to you from D.C. over the last 4 years.
Yeah, I think that's such an interesting observation. And actually, when I woke up this morning in DC, I thought to myself, goodness, it's super interesting that I'm here. Why wasn't I here more in the last 4 years? You know, the Biden administration, particularly through the CHIPS Act, is the lens you could look at through, legislated for government support from a policy perspective to onshore industry. You know, I referenced a minute ago the president's trip to the Gulf and Saudi. As somebody that covers the semiconductor companies, NVIDIA and AMD, that moment was a massive surprise that the president basically said, do you know what, you're fine. If you want to sell chips to Saudi Arabia and UAE, go ahead. And it wasn't just the big dollar value of those deals as standalone, it was the idea that this anxiety that a third-party country like Saudi or the UAE would have access to top-tier American technology, but without worry that China would have backdoor access to it. It just kind of went away overnight. So that's the difference here. You know, both that the private sector is more engaged with this administration. Those are the words of everyone attending here, right? It's been said on stage repetitively, but also the president just moves fast, and evidenced by the deals that have been struck year to date in 2025.
It's such a fascinating world when one of the other big stories we've been focusing on today, we can't really get into it too much, but we have the story, I know the Times reported Chinese hackers are exploiting flaws in widely used software. Yeah. This is coming from Microsoft. So I'm a little confused, like, hey, open up everything to China at this point. We're comfortable with it? I mean, is everybody all in all
This
of a
is
sudden?
crazy.
Yeah.
Hey, Ladioff, are you okay on your trade now? You said you needed it to go higher. Well, we're higher.
H20 with NVIDIA, right? There was a time in the last few years where the H20, even though they had engineered the performance out of it, it was basically the third best AI chip on the planet. That's just not the case anymore. And so the priority from those gathered here is actually we'd rather China build its AI industry on our technology than its own. But we are conscious that H20 isn't the cutting edge or leading edge chip that NVIDIA has. Those restrictions are still in place, but it is a part missing from the AI action plan. There's no codified successor to the diffusion rule. And as I speak to more people today, I'm going to certainly ask if they expect that piece of rulemaking is coming.
All right, 30 seconds before you go. AI is going to be on our mind when Tesla reports. Obviously, there's a lot when Tesla reports. What will you be watching out, though, in that report? And forgive me, I've only got about 25 seconds here.
Yeah, it's astonishing that it's happening at the same time that everything's happening here. All investors want to know is that Musk is focused on robotaxi and AI future, and I'd be curious if he addresses his America Party plans, because that is the opposite of what investors are seeking. They just want to know he's paying attention to Tesla.
All right, that is our Ed Ludlow, not on the West Coast today, but in the nation's capital in Washington, D.C. Bloomberg Technology co-host Ed Ludlow. Catch him weekdays on Bloomberg TV at 11 a.m. Wall Street time. Hey, coming up, Tesla, reporting earnings. We just talked about that a little bit with Ed. Alphabet is too. More on both of those companies, what to watch out for after the close. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index trading at a record right now. S&P up 43, 63.53 where we stand now, up by about 0.7%. A 1% gain for the Dow, up 459 points. NASDAQ up 0.5%, up 104. The NASDAQ 100 index up 0.3%. And the Bloomberg percent. Tesla and Alphabet, both members of that index, they report after the close of trading today. Right now we have got Tesla just about flat on the day. Alphabet down 0.3%. Our Mandeep Singh will have a whole lot more on Alphabet coming up in just a moment. 10-year 4.37%. The 2-year 3.87%. Gold is down 1.1%, $33.94 the ounce. And West Texas Intermediate crude down 0.1%, $65.25 for a barrel of WTI. Earnings news. Hilton Worldwide Holdings shares, they're down 2.8%. It lowered expectations for net income for 2025 as demand for U.S. hotel bookings declined in the second quarter.
If anybody's got a good explanation on why we got this huge rally happening, making all-time highs, I'm happy to hear it. You had that big drop off. It looked like the EU tariff deal news, which looks like that's still being ironed out. And then I don't know what the catalyst is that keeps pushing this up. We've been busting through all-time highs on the ES since for about an hour now.
And that's why it's so important.
We just explained that.
So think of it this way. When you type a query in any LLM, whether it's ChatGPT or Gemini, it has got, let's say, 15 or 20 words. Those 20 words translate into, let's say, 300 tokens. Those tokens get processed by the LLM. In turn, it returns, let's say, 400 or 500 tokens, and that converts into the chatbot response. So everything gets measured in tokens, because the world of LLMs and AI agents involve a lot of these back and forths. So now we're talking more consumption-driven metrics as opposed to a flat $20 subscription, which Google is selling. And that's why I talked about the subscription growth.
Right.
But this is like the derivative. Even with subscriptions, how much are you consuming on a agent basis or a user consumption based on the total number of or volume of queries that they are sending. And so it's very important to keep an eye on these two metrics, I feel.
Okay, Mandeep, pulling back the layers of how the AI is actually made. I want to home in on search here, though, because this is the bread and butter of traditional Alphabet. And I think I'm starting to see some chatter about concerns when it comes to search. And when it comes specifically to click-through, especially with the AI answers that Alphabet gives, that Google gives when you search for something, how concerned should investors be that people are just typing in a question, reading the answer, they're not clicking, and they're not clicking on any ads?
I mean, look, they always had monetized their search page in a way where for informational queries, the ad loads weren't high. But for commercial queries, you had pretty high ad loads where you would see, for a brand, you would see the ad right away. But if you are seeking information, like a lot of people do that on Perplexity or ChatGPT, you don't need to see an ad. So that's where, they have levers to change the ad loads so that they can still have search revenue growing, high single digit, which is what the consensus number is for growth. And some of it can be kind of offset by ad pricing.
So ChatGPT, Perplexity, Claude, they are not killing Google?
Oh, no. I mean, even in terms of query volume, you're talking about maybe 5 to 6% query volume for ChatGPT. People still use Google. In fact, I would argue AI overviews, the last number they shared was 1.5 billion monthly active users for AI overviews. A lot of the queries that you're going to ChatGPT for, now you can see it on AI overviews. So I would say it doesn't make a great experience to open another tab, go to ChatGPT or Perplexity and find similar information when I can get the same level of information. If the quality of the information was better.
Reading those AI overviews.
Just don't eat the rocks. When it tells you to eat the rocks, don't eat the rocks.
But how do you make sure? Like we keep talking about, like making sure, like kind of checking the information, like look at the sources and so on and so forth.
Yeah, and look,
how do we trust?
I think Google obviously has the credibility that they've built over 20 years. They've got the right sources, and that's where other LLMs will struggle. And I feel AI overviews is giving you a comparable experience to ChatGPT for a lot of queries. Not everything. In some instances, ChatGPT is better. But that's where the user experience matters because they still are spending a lot more time on Google than they are on ChatGPT.
All right, so that means you have to tell Tim, stop making fun of Carol for looking at the Google AI reviews.
If Mandeep says it, maybe.
I'm just telling you. He says it. I'm in. Mandeep, thanks. I know we're going to be talking to you after the close, too, following the results. Really, really great setup. Mandeep Singh, Bloomberg Intelligence, Global Head of Technology Research. All right, let's talk Tesla, right? And the other big, which is the other big tech. After the close.
Yeah, those earnings coming out like Alphabet rallied those since April lows, up nearly 50% since then, and yet still down close to 17% so far this year. With what to watch out for, back with us from Bloomberg Intelligence headquarters in Princeton, New Jersey, Steve Mann. He's Bloomberg Intelligence Global Autos and Industrials Research Manager. So Steve, early this month, Tesla reported second quarter deliveries were 13% lower than a year prior. The company said little about possible future models that could help turn momentum around. What is going on with car sales at Tesla?
Yeah, they did have the Model Y changeover earlier this year, so that dented sales, not just the U.S., but globally, including the other big market that they have in China. I think, tonight's earnings call will be mainly focused on the outlook. They didn't really provide any guidance in the first quarter, but I think they're supposed to come back this round. So everybody's going to be focused on the consensus forecast. Right now, consensus forecast is for the full year of 1.65 million unit delivery. And if they can come back and say they will meet that, I think it'll be a little bit optimistic. And I think the market will be a little bit suspicious of that number. So they're going to have to really explain how I'm going to get to 1.65 if they do come in with that.
Do you think it can get there?
Well, I think the best case scenario is that they announce a cheaper vehicle. Remember, they've been talking about it for the last 6 to 12 months that they're going to launch a cheaper vehicle for the marketplace. It's becoming more critical that they do that because remember the 7,500 EV credit on new EVs is actually coming to an end at the end of September. So they really need a cheaper vehicle. Yeah. So actually, you good thing you bought the Tesla early.
Yeah, exactly.
But yeah. So I think the ideal situation, I think for investors to react positively on this stock is really if they come out and say, look, it's gonna the $7,500 going away is gonna hurt. But we have a new product, a cheaper product coming out to offset.
The reason I made the comment about the $7,500 tax credit is because of all the back and forth between the president and Elon on social, of course, over the last 6 weeks or so. The president says Elon's upset about the tax credit. Elon says he's upset about the deficit. I don't need to rehash everything. But anyway, before we let you go, the big picture existential crisis or potential existential crisis that I'm wondering about at Tesla doesn't have to do with Elon Musk's attention. It has to do with what China is doing when it comes to EVs. Not an issue here in the US because we don't get BYDs or Xiaomis here in the US.
Right.
Is it an issue around the world? Like, why would anyone buy a Tesla if they can buy what many say is a better car for cheaper?
Yeah, Tesla still carries a cachet, brand cachet, even in China. I think with all the politics that's going on in the U.S., he's well loved in China. And look, I think a lot of automakers, even Xiaomi, even BYD, still benchmarks off of Tesla. One thing that's interesting though, in the fall, Tesla Model Y is coming out with a newer, a longer, extended version of that SUV. And that tends to resonate with buyers over there. I mean, they love the extra room in the back seat. We've seen in the past, for example, BMW, Mercedes, Volkswagen, and Volvo, they've introduced extended version of their vehicles, and the sales went up quite a bit because of that.
Hey, Steve Mann, just real quickly, 30 seconds or so. Do you think we'll ever see Chinese EVs sold in the United States or Chinese cars? And I just wonder, especially as we look to all of the trade negotiations that are expected to go on next week, just quickly.
I would be surprised if they do, because if Chinese EV comes in here, I think it's going to be a lot of hurt for the local automakers here.
All right. Interesting stuff. Steve Mann, thank you. So appreciate it. Bloomberg Intelligence Global Autos and Industrials Research Manager joining us at BI headquarters in New Jersey. Quick look at those stocks that are going to be reporting after the closing bell. Tesla now just up about 0.5% here in trading. What do we got for Alphabet?
Down about 0.6% in the trade today. It kind of goes against what we're seeing in the NASDAQ right now, up 0.5 percentage point. The S&P 500 up 0.7%, on track for another record close. The Dow up 1% as we speak. Coming up next, as Carol mentioned, we got the CEO of one of the companies IPOing today. That's next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index holding close to a record. The Dow, the S&P, NASDAQ all gaining on optimism about trade and tariff deals. Right now, the S&P up 43, 63.53 where we stand. That is a gain of 0.7%. The Dow up 456 now, higher by 1%, while the NASDAQ Composite Index is up 106. NASDAQ up 0.5%. The NASDAQ 100 Index up 0.4%, and our Mag 7 Index ahead of earnings out of Alphabet and Tesla gaining now by 0.5%. 10-year 4.37%, the 2-year 3.87%. Gold down 1.1%, 33.94 the ounce, and West Texas Intermediate crude up 0.2%, 65.44 a barrel. A research firm says the number of companies and organizations compromised by a security vulnerability in Microsoft's SharePoint servers is increasing rapidly, with the tally of victims soaring more than sixfold in a few days. Microsoft shares little change, down under 0.1%. Again, recapping here, the Dow, the S&P, NASDAQ all advancing. S&P right now at a record up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. So we've seen initial public offerings definitely picking up some momentum this year. As a group, IPOs are up about 5% year to date as measured by the Renaissance IPO Index, but up 41% from a low back on April 8th. We've got a couple of IPOs today. Both are trading lower in their first day of trading. We've got NIQ Global Intelligence shares slumping after the company raised more than $1 billion in its IPO, giving it, Tim, just about a market cap of just under about $6 billion.
Another, a small cap, Carlsmed. It's a med tech company slipping in its first day of trading after it raised $100.5 million in its IPO. The company with an approximately $387 million market cap. Carlsmed uses AI to personalize spine surgery. It sold 6.7 million shares after offering them for $14 to $16 each. Here with more on the company in the first day of trading as a public company, Mike Cordonnier, co-founder and CEO and president of Carlsmed. From the NASDAQ, also joining us, Bloomberg News equities reporter Natalia Konijevic. She's here in the studio with us. Mike, the stock is down on the first day. How are you feeling on a day such as today? Stock not necessarily moving in the direction you want to see?
Well, we're feeling really good about, how we're doing today. Continue to focus on our mission and building awareness about, really what we do that ultimately we know has transformed spine surgery. And so, continue to focus on the fundamentals and, it's ultimately going to be a really strong day for us.
For those who might not be familiar, Mike, just fill us in on exactly what you do. From what we understand, you guys do personalized surgery, which got one of our producers, Cece, a little worried because we thought all surgery was personalized. At least we hope that's the case when we go under the knife, so they say. So what exactly do you guys do?
Yeah, we've really taken a very different approach to what really a medical device company is. And so we are a medical technology company, and we work with surgeons and patients, and we take digital imaging of the patients as well as surgical inputs from the surgeon, create a virtual plan of that patient's surgery, and then we 3D print personalized devices for their spine surgery, build those on demand, delivered directly to the operating room. And ultimately what this does is this gives the surgeon really power to be able to perform very precisely what can be a really complex spinal surgery.
Mike, hi, congratulations on trading debut. I'm curious about your path to profitability because companies like yours typically require a lot of CapEx. Do you guys have any timeline in mind on when you become profitable?
Yeah, well, we haven't provided direct guidance to that. However, we have built our company very differently than a traditional medical technology company because we don't carry any inventory. Everything that we create is 3D printed directly on demand. And so as we think about this public offering, the use of capital to reinvest towards really our growth in being able to provide this technology to a lot more patients.
What's proprietary?
Yeah, ultimately, we have a broad technology platform that we built. And so as we think about rolling this out much more broadly, we've been able to create an end-to-end technology platform that is proprietary to us, that we've called our digital production system. And this is a all-in-one system that allows us to take digital data about the patient, about the surgeon, create personalized plans and the devices to achieve those plans. And ultimately, when we started down this journey just a few years ago, this whole end-to-end process took us a little bit longer than 8 weeks. And now we've really reinvested in our proprietary system that allows us to do this in 2 weeks or less, which really allows these scheduled surgeries to be able to be done in the time that the surgeon and patient needs them.
Mike, why was an IPO the right move here? If the broad adoption by doctors around the US and around the world is your goal here, why not look to be acquired by, let's say, a Medtronic or a Johnson & Johnson or a Stryker that already has these relationships with doctors and can roll this out more broadly?
Yeah, we really, think about this much more than a product line and really much more as a new way to run a business because, very different than what the large players in this space do, which tends to be a very capital-intensive business model. We've built this new business model, which is really digital first, allows us in conjunction with the surgeon to do the procedure digitally first and then make on demand everything that's needed. And so because of this, because of ultimately our ability to do this on demand, we built a very nimble, agile company that we can deeply target those key institutions and the patient population to directly deliver exactly what's needed. And we see this really as a platform technology that has a lot more applications, much beyond our current indications that we have for spinal fusion.
So can I just ask you, so does that mean you ultimately see yourself maybe for every complicated surgery figuring out how to do this? Just quickly.
Yeah, absolutely. We see this as continued innovation, partnership with surgeons, as well as us on the technology side, to be able to provide a very novel, personalized solution to patients that ultimately drives better outcomes. Because as we've looked at our early data for spine fusion surgery, we've been able to materially improve outcomes for patients because we can directly personalize the devices needed for their surgery.
Mike, what is your tariff exposure?
Yeah, so we are 100% supply chain in the U.S., and so we're very well insulated from the news that's coming out around tariffs.
Hey, one thing I want to ask you though, in terms of the growth of the business, I know you're not going to give us anything on profitability or when you get there, but what's the growth that you are seeing in usage, growth in revenues? Can you give us some numbers? We are Bloomberg and you are public now, and ultimately you're going to be sharing this stuff. Just got about 40 seconds.
Yeah, absolutely. We've grown phenomenally since we started, and we can report that in the first quarter of this year, we grew 100% year over year, and so we see this adoption very rapid with new surgeons, new accounts coming on board, and we anticipate continued wide adoption of this new standard of care.
All right, I think we have to leave it there. Hey, listen, stay in touch. Love to know as you continue along, and maybe on that first earnings, you can come join us after that. Mike Cordonnier, he is co-founder, Cordonnier, co-founder, CEO, and president of Carlsmed, joining us from the NASDAQ on their first day of trading. And our own Natalia Kedijevic, she's here in studio. She's our Bloomberg News equities reporter. She's going to stick around. We're going to talk to her about some stocks on the move. All right. That stock, though, seeing a little bit of a lower trade in its first day. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, folks, we've got a rally underway on Wall Street. You've got the S&P 500 up almost 45 points. That's good for a gain of 0.7%, a 1% gain on the Dow Jones Industrial Average, and the NASDAQ 100 up at 81 points or higher by 1/3%. This ahead of some big tech earnings. We've got Tesla and Alphabet after the closing bell, but we've got some definite momentum.
Yeah, those aren't the only ones, though. IBM is reporting ServiceNow, Chipotle, Las Vegas Sands, CVS, all after the bell, too. The focus, though, on Tesla and Alphabet.
But we could see, another record here on the S&P 500.
Oh, sorry, I was thinking about Chipotle.
Oh, sorry.
Burritos.
Well, that's because it's food and you're always
Yeah.
hungry. I'm Carol Massar along with Tim Stenivek. Let's take a look at some stocks on the move today. With us is Bloomberg News equities reporter. We've got Natalia Kanijevic. She is here in studio. And let's talk about IPOs because we had a couple out today, and that includes one that's been going through some changes as of late.
Exactly. So this is NIQ Global Intelligence. The ticker is NIQ. The stock is down by 8%. This is the first day of trading. It was a really highly anticipated IPO because it's a private equity-backed company. It's a rare exit so far this year, and it was pretty well received among investors based on our reporting. And I don't know how to explain the stock price reaction. I'm not going to go into this, but overall, the IPO was priced at $21. The range was between 20 and 24, so it's a lower level of that range. The company's market value is about $6 billion. So NIQ Global Intelligence, the company that was founded in 1923, it has a very long history. At one point, it did television ratings, and people know about that here in the U.S.
We used to live and die by Nielsen ratings. Haven't for a long time.
Then it was separated, so now there are two completely separate businesses. NIQ provides customer intelligence, and it has a really solid portfolio of clients, including Amazon, Target, Walgreens, global brands like Sony, L'Oreal. Basically, it helps them understand consumer behavior a little bit better, and then, of course, target those consumers when it comes to marketing.
I wonder, our reporting says the top 25 largest investors in the deal were allocated 70% of the shares. And I'm just wondering, is that normal? Is that typical? And I'm just wondering if there was maybe that is why I don't know. I'm trying to understand why there's some downward momentum because that's a pretty big drop.
Typically, when we have long-only investors interested in the deal, it's a very positive sign. It means that people will not be selling the stock after the lockup period expires. But now, I don't know, maybe it's like a more broadly some kind of market turbulence and maybe some kind of frothiness. And again, keep in mind what kinds of IPOs do well in this environment. It's crypto, first of all, right? Sometimes fintech, technology, AI-related stuff. But this company, the end user is consumer, but at the same time, it's a software company because it provides and also 80% of its revenue is recurrent, which means that the company has a stable cash flow.
Yeah, some visibility, right?
All right, so that's consumer intelligence. Let's talk a little bit about energy technology. Baker Hughes on your radar.
Baker Hughes, the stock is one of the best performers today in the S&P 500 index. It's up by 11.2%. The company posted better than expected earnings results, mainly because it has a diversified portfolio. It's not just a typical oil player. We know that we have so much volatility in the oil space, but it also has exposure to gas. More specifically, they supply modules for LNG terminals, gas turbines, and with all this excitement about AI and data centers and demand for energy, this is where Baker Hughes is winning. Just to compare, for example, Halliburton, this is more like a pure oil services player, US-centric, and we see that the stock's performance is not doing as well as Baker Hughes. So it's a big win for the company.
What goes up might go down. What goes down might go up. I was trying to make a transition. It's a little lame. It's a little lame.
No, it's not about transition. The company that actually invented the escalator.
I know.
You're talking about Otis.
Otis, the ticker is OTIS. The stock is down by 11.5%. Here, this is why it's an interesting story. It's a global company and it has a global exposure. Mainly, it posted larger than expected drop in new equipment sales. And as a result, this elevator maker lowered full year guidance. New equipment sales declined by 10%. CEO said that Mainly, this can be attributed to some challenges in China, and in North America, we also saw some declines. Two analysts, specifically JP Morgan, they said they did not expect such a big decline in operational guidance. So this is where we see that it is a little bit like consumer sensitive, tariff sensitive business. And despite the fact that so many people are saying, yeah, maybe, tariffs is not as dramatic, this is what we can see in the stock price reaction.
Yeah. All right. So taking a little bit of a hit there. Good stuff. Now, Natalia, excuse me. Thank you so much. Bloomberg News equities reporter Natalia Knežević joining us here with some of the stocks on the move. For more conversations, check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. We've got a rally underway.
We do.
A little bit, yeah.
Ahead of earnings from Alphabet and Tesla, the S&P 500 up 0.7%, the NASDAQ Composite up 0.5 percentage point, the Dow up a full percentage point.
Yeah, and we're looking at about more than 320 names in the S&P 500 higher ahead of those big tech earnings. Hey, if you're watching on television, the close is coming your way in just a moment. Tim and I continuing on radio with Bloomberg Business Week Daily. Join us. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Bryan Kohberger was sentenced today for the murder of 4 University of Idaho students 3 years ago. He pleaded guilty to avoid the death penalty. At the hearing, relatives and friends of the victims struggled to contain their grief and anger in addressing him.
I'm shaking because I want to reach out to you, but I hope you feel my energy, okay? Go to hell.
Randy Davis's daughter, Xana, was killed.
I know people believe in other stuff. You're evil. There's no place for you in heaven. You took our children. You are going to suffer, man.
Kohberger remained silent during the hearing. He has never said why he killed the students. At the White House a short time ago, Director of National Intelligence Tulsi Gabbard made a surprise appearance in the briefing room to talk about a newly declassified report, which she claims undercuts the finding that Russia interfered in the 2016 election. And she lashed out at members of the Obama administration.
They manufactured findings from shoddy sources. They suppressed evidence and credible intelligence that disproved their false claims. They disobeyed traditional tradecraft intelligence community standards and withheld the truth from the American people.
More than 100 charity and human rights groups say Israel's blockade and military offensive are pushing Palestinians in Gaza towards starvation. Amand Bazarol of Doctors Without Borders.
They're giving up. They're really giving up. There's nothing. They cannot feed their children. They see their children dying and getting sick every day.
The number of people missing from the deadly flooding in Texas is down to 2.
The body of a woman was found near hard-hit Kerrville, raising the death toll to 135. That leaves a man and a girl from Camp Mystic still missing. 12 bodies have been recovered on Ricky Ray Robertson's property along the Guadalupe River.
There were 4 children and the rest were adults.
He and a local artist have erected wooden crosses for each of them.
They're not just crosses. They're faces of husbands, wives, fathers, mothers, brothers, sisters, children.
Robertson hopes the families can start healing.
Let them know we'll never forget them either.
Michael Wallace, CBS News.
The UN's top court said today that countries harmed by climate change could be entitled to reparations.
The consequences of climate change are severe and far-reaching. They affect both natural ecosystems and human populations.
The court's non-binding opinion is a potential turning point in international climate law. On Wall Street, stocks have been higher all day. The Dow currently up 461 points. This is CBS News. Ozzy Osbourne's hometown is in mourning today after the heavy metal superstar died at the age of 76. Vicky Barker has more.
Some of the fans laying flowers for Ozzy Osbourne in his native Birmingham, England, were at Black Sabbath's last gig July 5th. Also in Birmingham, where it all began.
He wanted to be back home, didn't he? He wanted to come back home, I think. And he's left a legacy.
Even the Birmingham Police Force has paid tribute, saying it's named a police dog puppy after Ozzy and hoping he grows up to be a legend like his namesake. Vicky Barker, CBS News, London.
Teenagers are increasingly turning to AI for advice, emotional support, and decision-making, according to a new study. Common Sense Media found 70% of teens have used AI companions. Many say the interactions are as satisfying as talking to real friends, but experts are warning the trend could lead to poor social skills and mental health. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Hey, everybody. We're just about 55 minutes away from the closing bell on Wall Street on this Wednesday, July 23rd. This ahead of some big earnings after the closing bell. We are talking about Tesla and Alphabet.
I was talking about Chipotle.
Oh, I know. And IBM.
IBM.
What else? What am I leaving out?
ServiceNow. It's another one.
Okay.
CSX, Las Vegas Sands.
Yeah.
Yeah.
Yeah. But he's thinking about Chipotle. Hey, it is an earnings palooza, so we're going to break down all of those earnings after the closing bell, so be sure to stick around for all of that. Lots of deep analysis.
We've also got you covered on all things trade. We're talking Japan, the EU, and what it could spell for future trade deals.
Yep, all in on trade, no doubt about it, and that really supports some of the enthusiasm we're seeing in the equity trade today. Hey, also, how about a little bit of real estate? We have a guest that we really love checking in with.
Louise Phillips Forbes is back with us on where and what people in New York are buying. Also, maybe she'll give up her secret surf spot in the Hamptons to everyone.
Won't. I bet she won't.
I think we can get her to do it.
All right, we'll see what she has to say. Hey, first up, let's get to today's trade as we are less than an hour away from the closing bell and those big tech earnings. Here is Charlie Pellet.
Thank you very much. Here's what's going on. We got 54 minutes to go, to be precise. The Dow, the S&P, NASDAQ, all advancing. S&P right now close to session highs, up 42 points. That is a gain of just about 0.7%. Stocks are rallying on trade and tariff optimism. A record-breaking run for the U.S. stock market as measured by the S&P, gaining fuel as the U.S. reaches a trade agreement with Japan, while speculation grows about a similar deal with the European Union. Again, the S&P up 0.7%, the Dow up 1%, NASDAQ up 0.5%, and the Bloomberg Mag 7 index up 0.5%, which includes Tesla and Alphabet. They'll both be reporting after the close of trading. 10-year 4.38%. Gold is down 1%, 33.95 the ounce. West Texas Intermediate crude up 0.1% right now, 65.41 a barrel. GoPro and Krispy Kreme are moving higher, surging as the meme stock rally widens. Beyond Meat have been up by as much as 14.2%. Beyond Meat, though, actually back in the green, swinging between gains and losses, up 3.2% right now. Krispy Kreme up 5.2%. GoPro up by 12%. We are seeing a rally in those stocks. Nimrit Kang is Chief Investment Officer at North Star Asset Management.
What it does signify is this interest of the retail investor back into the market. You know, it's the animal spirits back into the market. That's what we're seeing. We've seen a lot of buying the dip that's happened with the retail investors, and that's continuing on and manifesting into some of those meme stocks as well now.
Nimrit Kang of North Star Asset Management. Again, Tesla, Google, after the close of trading, definitely got you covered on those reports. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. President Trump reached a trade deal with Japan that will impose 15% tariffs on imports, including automobiles, from the key American ally, while creating a $550 billion fund to make investments in the U.S. The agreement was touted by Trump after he secured breakthroughs in a final 75-minute Oval Office meeting Tuesday with Japanese negotiators, and it spares Japan from a threatened 25% tariff that was set to take effect next week. Here's U.S. Commerce Secretary Howard Lutnick on Bloomberg TV talking about the trade deal reached with Japan, saying that it could be a model for the EU.
It could be. I mean, that's up to them to negotiate, right? Are they willing to open their market? I don't think anybody. Europe's not going to go and give us $1 trillion to
Well, can they
invest
get
in
below
America.
15%, or is 15% now the floor?
For autos, I would.
No, for a reciprocal
possible.
tariff for the European Union.
I don't think
At one
big
point they were willing to
countries-
accept
I don't
for
think
10%.
big countries can get low like that.
That's U.S. Commerce Secretary Howard Lutnick with Anne-Marie Hordern earlier today on Bloomberg Television. I want to bring in Adam Ferrer, Bloomberg News senior geoeconomics analyst for Asia Pacific. He joins us from our Washington, D.C. bureau. Adam, I want to pose the question to you about who the winner is when it comes to this trade deal in your view. Is it better for the U.S. or is it better for Japan?
Order filled.
So time will tell a little bit. We're obviously still parsing through the details, which, like all the other agreements so far, remain scarce. And so far, we can certainly take away that Japan is in a position to breathe a sigh of relief. There was deep concern that they were going to either not reach a deal or reach a deal that did not address auto tariffs, which were sitting at 25% and had the potential to completely undermine a core industry for Japan and a core export to the United States. So those in Tokyo are comfortable and happy to be landing around 15%, which keeps them potentially competitive, even with cars coming in from Canada and Mexico under USMCA provisions. All that said, we do have a strange situation here where Japan has created this new investment mechanism of $550 billion that somehow will be managed by the United States and invested by the United States on Japan's dime. And it's unclear right now both how that will work and how Japan and the Japanese electorate will process that as they come to understand it. But for now, there's certainly reason to be happy in Tokyo, despite the fact that tariffs will still sit at 15% with pretty significant impacts on overall trade and their GDP.
Does this do anything for U.S. automakers? Because as I talked about last hour, when I was in Japan, I was struck that there were no American cars anywhere to be seen. Granted, this was what, 8, 7, 8, 9, 6? I don't know. It was a few years ago. It was before the pandemic when I was there. So it could have changed, but my experience was it was all Japanese autos. Unlike here, where you really do have a mix of American autos, Japanese autos, other Asian auto firms, except for Chinese autos, and European firms as well.
Sadly, I really don't think so. We're not about to start seeing Chevy SUVs driving down the street in Tokyo. The reality is, as you're laughing would indicate that the country is simply not built for that. But more importantly, a reminder that Japan also actually drives on the other side of the road, which would require American auto manufacturers to create new lines and produce cars with the steering wheel on the other side of the vehicle. And so the question really becomes, are they willing to invest that much time and money into that market, with the reality that most of the cars that are popular in Japan are small sedans or vans that we just simply don't produce.
So would you consider that a non-tariff trade barrier?
I guess you could say that, but I don't. From everything I've heard, that was not up for debate or negotiation during the most recent talks.
Hey, one thing I want to ask you, and this is that tie sometimes between soft power, hard power, and so on and so forth. But you served on the U.S. National Security Council under both the Biden and Trump administrations. And so tie together the importance of trade relationships and national security.
So increasingly, I think what we've seen over the past, 5 to 10 years is just the complete integration of the idea of national security and economic power, and this idea of economic security being at the core of relationships around the world. And we saw that during the last administration with efforts to kind of broaden relationships, particularly with key allies in the Indo-Pacific, like Japan and Korea, to move beyond this concept of defense and foreign policy to really address technology, trade, and economic policy. Because those are the issues that were really going to drive security, and when we look at these, the supply chain ecosystem, drive the U.S. economy moving forward. So I think there's no doubt that those are fully integrated issues, and I think we're seeing that here. And there are potentially some real ramifications in that connection, in the sense that while Japan certainly is happy today to have solidified a deal, the tough approach the United States is taking, even with its closest partners, is at the best leaving a bad taste in the mouths of their partners, but at worst actually causing them to reevaluate their long-term strategic relationship with the U.S. and relationship with other like-minded states where they may want to prioritize those ties over the U.S.
So you think net, again, you served in both a Republican and Democratic administration. Do you think net these deals are worse for U.S. national security? Potentially?
Time will tell.
Okay.
I think we're still too early here. We don't we haven't seen, ink on paper on these deals or how they solidify and work going forward. But there's no doubt that this more aggressive approach from the Trump administration is making countries question the relationship, question whether the United States is going to show up. For key defense allies like South Korea, is the United States going to come to its aid in the event of North Korean invasion? Or is the U.S. going to sit back and make a decision based on its own perceived national interests, just looking at the homeland? Those are real concerns, and they have broader ramifications for how countries both trade, but also how they pursue their own security, who they work with, and what weapons they pursue.
I'm wondering about the big picture trade deals that we're seeing be negotiated under President Trump. Is it accurate to say that trade is becoming more fair as a result of what the president has done?
I guess it depends on what you mean by fair. There is certainly a direction of travel right now, and the agreements that have been announced and the limited details that have been announced have included the reduction in trade barriers in at least 4 countries, right? But at the same time, the United States is erecting massive barriers to trade that over time will change the way that goods move around the world. So on one hand, it is certainly true that U.S. exporters may have a better access to key markets, but we'll have to see what that means for the global economy and for how companies want to invest their time and money.
All right, we're going to leave it on that note. So appreciate it, Adam. Thank you so much. Adam Ferrer, he is Senior Geoeconomics Analyst for Asia Pacific at our Bloomberg Economics team, joining us from our bureau in Washington, D.C. We do have some headlines crossing the Bloomberg terminal.
Yeah, House panel has subpoenaed the Epstein accomplice Ghislaine Maxwell. The deposition is set for August 11th. That will take place in a federal prison in Florida.
And we should point out, and this was certainly a story that we were covering last week, that the Trump administration had asked a federal court to unseal grand jury transcripts related to the case of Jeffrey Epstein, citing, quote, transparency to the American public as of the utmost importance. And we know that we have seen some criticism certainly levied at President Trump and his Attorney General Pam Bondi, who have come under criticism from some of the Republicans that are out there who have been demanding more information about the Epstein case, including details about a purported client list. So again, as Tim mentioned, the House Oversight Panel issuing a subpoena for Ghislaine Maxwell. This is according to a release from the panel.
All right, taking a look at stocks on the day today, up 0.7% on the S&P 500 on this earnings Wednesday, Carol, up 0.5% on the NASDAQ, excuse me. The Dow Jones Industrial Average up a full percentage point.
Yeah, fairly broad-based in terms of the rally. Healthcare, really your outperformers in the S&P. If I look at the major industry groups, it's up about 1.7%. Industrials, a similar gain on a percentage basis. Energy names are up more than 1%, and financials up about 0.6%. But really our focus is going to be on big tech, as you've got Tesla reporting after the closing bell, and we've seen that stock trending just a hair higher. And then you've also got Alphabet. It too is reporting after the closing bell, and that stock right now, it is down about 0.5%. This is Bloomberg.
3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. S&P hovering near session highs after news reports that the EU and the U.S. are progressing toward an agreement that would set a 15% tariff for most products. S&P right now up 43 to 63.53, looking at a record up 0.7%. The Dow up 458, up 1%. NASDAQ up 0.5%, and the Mag 7 index up 0.5%, ahead of earnings after the bell from Tesla and Alphabet. 10-year 4.38%, gold down 1.1%, 33.94 the ounce, and West Texas Intermediate crude 65.42 a barrel. WTI up by 0.2%. Coming up after the close, Tesla and Alphabet, parent of Google. Sarah Kunst is founder and managing director of Clio Capital.
I like Alphabet, and I think it doesn't always get its fair shake. I don't really understand it. They are doing very well at every single trend that the rest of the market is chasing right now, except maybe stable coins, which I don't think they're in, but they're doing incredibly well in AI.
Sarah Kunst of Clio Capital. Also after the bell, we'll be hearing from both IBM and T-Mobile. An Idaho judge has sentenced Bryan Kohberger to life in prison without the possibility of parole for murdering 4 University of Idaho students. And repeating our top story, the House panel has subpoenaed Epstein accomplice Ghislaine Maxwell. A deposition will take place August 11th. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Appreciate it. That's Carol Massar. I'm Tim Stenovec. And let's talk real estate, because earlier this month, our Bloomberg News team reported that Manhattan home sales in the second quarter were stronger than they've been in almost 2 years, boosted by cash buyers who've been undeterred by the economic uncertainty created by President Trump's trade war. We got some numbers here. A little more than 3,000 co-op and condo purchases closed during the quarter. That's a 17% jump from a year earlier. That's according to Miller Samuel and the brokerage Doug Elliman. The median price of those transactions, $1.2 million. That's up 1.6%.
I love this, cash buyers. All right, so we're wondering what Louise Phillips Forbes is seeing. She's a real estate broker with Brown Harris Stevens. She's been in the industry for more than 3 decades. We love kind of picking her brain about what's going on. She's got close to $6 billion in sales during her tenure. She's back with us here in our Bloomberg Interactive Broker studio. Hello, hello.
Hi, good to see you guys.
Good to see you. So where are we? Give us a snapshot of the market right now.
You know, you just did that little snapshot of the quarter. I did a little snapshot from May and June for 2024 compared to 2025, and there was a 72% volume and price sales. So it went from 1.4 billion in sales to 2.4 billion.
So
of
almost
contract
a doubling.
signs. Almost. And then you also had a 25% on the number of transactions. This is all 4 million and above. And on an average of those 2 months in 2024, they were 8.2 million. This year, they're 11 million. So, you know, chaos is opportunity for many. And cash on those deals is 90%. That's a lot. So it's kind of interesting. I mean, I talk to my bankers all the time, and they are busy. They are busy, but on the lower end, and people are closing with cash, and then they're pulling out, you know, cash back.
Okay.
We spoke to Peter Ackerblum, Chief Revenue Officer at Sentient Jet, just earlier this week. That was Monday? Yeah, that was Monday.
It's been a long week already.
A lifetime ago.
Yeah, it was also the day that FlexJet announced this, another private jet firm that owned by the same parent company, announced this investment. And they basically said, we're seeing wealthy people from tech and crypto, younger people from tech and crypto, want private jets. We're seeing our demographic go younger, and we're seeing crypto and tech people.
That doesn't surprise me.
Is that happening to you?
I think that the assets, first of all, let's just kind of bring it down for 1 second and remember that the first-time buyer today, on an average, is pushing 40 years old. That's different from that millennial run that we had in the construction boom. But on
even in New York, right?
Even in New York.
Yeah.
Particularly in New York, to be honest. And I'm seeing more and more first-time buyers that are purchasing that are having family members, multi-generational family members, like grandmothers, like instead of inheriting this, I'm giving it to you, or I'll co-purchase with you with the right to survive. So listen, creativity is, we're in Mecca, so people are going to be creative to buy a piece of the rock. And I do think the, new money, and I've seen it, watched the tech commitment from the first announcement of Google in 2005 with like 48 employees morphed to 500 to 2,500. And you see that we are now becoming a hub for tech. And as you run up against the housing issues that are in California, we're attractive. We can get insurance for our apartments.
Do we stay attractive even if Zohran Mamdani wins the mayoral race
You mean
next
our
year?
Robin Hood? I mean, the Robin Hood rhetoric? I mean, listen, I know this person cares about New Yorkers. I believe that. I believe wholeheartedly that his intentions are stellar. But, the ideology around real estate is not a conversation. It's action, it's infrastructure, it's collaboration, public-private. And, we just crawled out of 5 years of COVID. We now have 64 million last year in tourism. The crime is down. You have people back in the office. So freezing rent is doing nothing. And it's also suggesting that landlords are all on their yachts doing nothing and that they should be paying for the opportunity for somebody else to be able to pay rent. But there's so many landlords that are just skinning by because they were postponed from allowing people who weren't paying rent.
So, Louise, Tim and I talk about this a lot, and I feel like when we have real estate discussions and the idea of providing affordable homes in kind of major cities where a lot of people work so that you don't have individuals who are maybe not making that much money having to travel an hour or two in order to work. So what's because I've been talking about this like my whole career.
Yeah.
How this industry, how do we do this so that there is affordable homes in the places where people are working?
I mean, when I came into the business, they had something called 421As. They were certificates that when you improve a land, there's an unimproved land. And remember, Bloomberg, thank you, 12 years of, rezoning, probably 40% of our land mass, which has helped that situation. And when you build in the middle of, they used to have these tax certificates that when developers would improve land, they would get a 421A tax abatement. It's a 10-year abatement on your taxes. And then for that certificate, they would then go and sell it for somebody to do affordable housing somewhere else. That has gone away. Now,
was that affordable house though still in New York City?
Yes.
Oh,
yes.
Okay.
And by the way, people would say we don't want to just be in the Bronx and in, far parts of Brooklyn or Queens, but honestly,
and nothing wrong with those parts, but you want a mixture. Yeah,
and
you want a mixture.
And I just think that it has to be thoughtful and it has to be collaborative, and it can't be just somebody who isn't practically experiencing these things making rules up like, the city councilman that has good intentions around broker fees. Well, rentals as of June 11th are up 15% because they've just passed it all off to the consumer. And so unintentional consequences when lawmakers don't want to collaborate with the industry individuals as well as just regular people, if it's only politicians making these decisions and not working with their people.
I think there's always a concern, though, that the people who are renting don't have the voice and don't have a seat at the table.
Agree, but
you know what I mean?
Remember that New York City is 68%. It's a city of renters.
Yeah.
We're speaking with Louise Phillips Forbes. She's real estate broker with Brown Harris Stevens, close to $6 billion in sales over the last 30 plus years. She's back with us in the Bloomberg Interactive Brokers studio. I want to get to know your clients a little bit and how they're different than they were, let's say, a year ago. The people who are selling real estate with you right now, why are they selling and where are they moving?
Wow. I mean, a lot of it is life change, but I have people that have been contemplating selling since 2020 that are now selling because there's a lack of inventory. What their apartments were not worth in 2023 are worth what they would like, and they'll accept it. So, look, a lot of people are downsizing and staying in the city. There are people that are leaving, but that's a life decision that is, you know, a cycle of life. I mean, I have a lot of people coming back into the city because their grandkids and their kids are here. So who are my sellers? My sellers range from like a 1-bedroom for $650,000 to, and that's somebody who bought, who now is leaving the city and loved owning her home, and she's ready for a new chapter in Colorado. And then you have a $16 million penthouse, which is from one of my developers that will be coming on the market in September on the Upper West Side. And I just think there's just not enough inventory. Inventory is 21% down. And that is the first time we've experienced that since COVID as well.
It's amazing because sometimes it feels like there's a ton of building and stuff going on. Hey, before you go, we've got a minute and a half left. Tell us about what you're seeing in terms of international purchases.
They're coming. They're coming, and it's doubled since 2024, particularly the Chinese market. I mean, look, when you are dealing with strife in your government and, you know, the housing market in Beijing is kind of upside down. I'm not familiar with that market particularly, but in all of the appointments that I've had in all the various condominiums, they are buying. Some of them are buying with the anticipation of their children in the future to be going to school here.
Where are they buying?
All over, but new developments particularly. And that has always been in Manhattan, Brooklyn, Long Island City. We were talking earlier about there are some developers that are leaning into the Asian market by accepting deposits that are in the Chinese
Yuan.
The yuan.
Yeah.
And that is because they are being nimble. We have to be nimble.
But that's new.
That's relatively new. There are 2 projects in particular. One is in Long Island City, and this was news for me, you know, a couple months ago.
Russian buyers gone?
Yeah, no, quiet.
Coming back?
Quietly trying to acquire or displace, you know, place assets, but not as big as what we experienced when you had the 88 million 15 Central Park West transaction.
It's not like that anymore. Middle Eastern?
Not quite.
Middle Eastern buyers?
Yep. And you have also, I think I have had 3 different Korean transactions this year. I think they're quiet. French. I mean, I think people are trying to come here. There's you know, jargon around the Canadians not being happy. And
if President Trump does away with the capital gains tax on house sales, which he kind of talked about this week from the Oval Office, what would that mean? And just got 25
Just
seconds.
to remind everybody, when Bush was in the House in 2012, and he reduced the capital gains to fuel, our market went on fire in 12 and 13. Just for that, that was like the people that lived on Park Avenue and Fifth Avenue for 4 decades finally sold.
I can only imagine. Louise Phillips Forbes, always fun to check in with you. Be well, be well. Real estate broker Brown Harris Stevens joining us in our Bloomberg Interactive Broker Studio. This is Bloomberg.
Well, I could have got out of this trade twice. I could have got out of this twice. My initial trade was short. A-snooze. I'm fucking myself. I'm gonna hold it all the way to the end. Yeah, it's red. Like a mofo. I could have been out of this twice. I was in the green and I didn't get out. Being greedy. Being greedy. Well, I've got 4 more chances. I got 4 more chances. I'm not gonna lose the account. It's just I was really close to passing it, and now I'm fucked. But I think we're gonna rotate up for MOC, so I'm just gonna hold. I think we're gonna rotate up and I'll get out of this. But my mistake is I was out of the fucking trade twice, man. And I didn't pull in behind it. And just get out. I was doing a B, and then the B turned into the A, and now I gotta wait for the full rotation and get out. It's my fault. It's totally my fault for being greedy. It wasn't the chart or the system. It was me. So if we can just get a couple little good candles here, I'll get out okay. God damn it. I'm so stupid. "11 minutes till MOC. I just need that little run up and I'll be okay. Copium, yeah, I'm coping. I know how to do that. You don't think we revisit my entry? Thanks for the route, Ladioff. Yeah. It's true, man. I'm calling it out. I'm calling it what it is. What it is what it is. What it is what it is. Now, I can't get out now. These are evals, guys. It's not real money. It's just I had fucking traded so good. Yeah, diamond hands. That's right. This is stupid right now.
That's right. U.S. stocks with a bid today, helped by reports that the U.S. and the EU are closing in on a trade deal. The Dow is currently up 469 points. S&Ps are higher by 43, and the Nasdaq is higher by 0.5%. The U.S. 10-year yield is at 4.39. Gold is in the red, oil is in the green, and Bitcoin, that's down by 1.2%. Among the main 11 S&P sectors, leaders were healthcare and the industrials, consumer staples, and utilities led to the downside. Leaders to the
That's what you get for holding too long. That's what you get.
And led to the downside. After earnings, GE Vernova rose 14%.
My original trade was a short, and I had got out of it, and then went long because I thought we were reversing, and we didn't. My original trade was correct if I'd have held it.
Live from the first breaking news desk, I'm Bill Maloney. Charlie.
And we thank you very much, Bill Maloney.
9 minutes till
Word
MOC.
from Florida, judge there has declined to release grand jury records in Jeffrey Epstein's long ago Florida case.
If I get above the 50, I'll pull up the stop.
Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey,
There we go. Come on now.
Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we are 18 minutes away from the closing bell on Wall Street on this Wednesday, July 23rd. Man, July is just flying by. Having said that, we've got some big earnings coming your way after the closing bell. You know who they are. We're talking about Alphabet. We're talking about Tesla. We've got IBM. We've got Chipotle. What am I missing? Las Vegas Sands, CSX,
I think you got them all.
ServiceNow.
That's it.
Tick, 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 tick,
Well,
tick.
I don't know if that's it. Those are the ones that we're
Those are
talking about.
some of the big ones.
Yeah, Chipotle.
Chipotle.
Yeah. Burrito time.
But somebody, I don't know if he has any thoughts on Chipotle, but he definitely has some thoughts when it comes to some of the big tech names. Let's get to it with Angelo Zeno. He's senior equity analyst at CFRA Research. What?
I obviously want to talk about Alphabet that's happening later, but I want to start with Texas Instruments.
Let's go there.
It is taking a hit today.
Oh, if the ES can hold the
Angela,
50,
what's
I'll
going
be
on
okay.
with Texas
ES is on the 50 right
The
now.
Stock is having its worst decline in 17 years due to this
So I'm
tariff-fueled
hoping we
sales surge
rotate
that are
up
short-lived.
here.
What's going on?
Or else
Well, I think investors are just
back to the
frustrated
drawing
with
board
the story
tomorrow
right
on,
now.
on
You
another
kinda
one.
had Texas Instruments stock really kind of bid up here going into the print, and just like a lot of these other kind of cyclical auto.
I can still add contracts, but I'm not gonna yet.
More than anybody last quarter, really kind of pounded the table, saying, "Hey, listen, there is no impact here being felt from tariffs.
There
This
we
is
go.
kind
Come
of
on,
the
push.
start of an upturn that we think will continue to gain momentum into the
No.
second half of the year." And then all of a sudden they had their call last night, and you listen to the call, and it's essentially management kind of taking 2 steps back in terms of some of that commentary that they did provide, essentially talking about how there were some tariff impacts here from
6
Q2,
minutes till
some kind of
MOC.
built up orders from China on their industrials market, which is by far their biggest end market, and then kind of just pointed towards some lower visibility going into the second half, potentially kind of maybe going back towards more seasonal trends as we go into Q4 and Q1 next year. Whereas the street assumptions were, hoping for more of, let's call it a hockey stick reaction. So I think it's all about kind of the magnitude of the recovery here. And it looks like on the automotive side, for at least Texas Instruments, it's happening slower than anticipated. You're not
This
going to
sucks,
get it until
man.
next year. And on the industrial side, some of that pronounced upswing. that we
Trade
saw
so
here
good, then get a little greedy over what, 400 or 500 bucks. I was already, I was up a grand.
Really kind of, weighing on the stock.
Angelo, before we get to Alphabet, I mean, how is it that Texas Instruments didn't know that this was going to have an impact? I understand that the specifics around maybe tariffs and so on and
That's
so
the value
forth,
of the
but
break
they know
even.
their business. They know how tariffs might impact them. Are you a little disappointed that they weren't better in terms of guidance earlier on?
Yeah, I mean, and to be honest, and listen, they met the numbers, right? I mean, I think
5
actually
minutes
beat
till
their-
MOC.
They beat the numbers, and I think you could almost maybe point to the fact that, hey, listen, things were better than they even anticipated in Q2. That it's also potentially kind of causing a greater than expected sequential softness in Q3.
I
But
got
that being
lucky.
said,
How'd I get lucky?
overall,
I'm fucking pounded by
they
20
said
points
they
right
were
now.
gonna meet. And I think it's also part of the reaction here in the stock is the melt up in the stock. Let's
I
not
think it's
forget,
gonna
when you
pop.
look at where the
I didn't get
valuation of the
lucky.
stock is on a 2026 and even 2027 level.
I just was
it's
one
just
rotation too early getting into the trade.
levels, and as a result, I think you kind of needed some pullback here just based on the uncertainty.
I got
that we're
lucky it
gonna
didn't
see
go
here over the
50
next couple
points down before
Okay,
the
well, let's talk
rotation.
Alphabet.
So let's
Speaking
see.
of the next couple of
Let's see if
quarters,
it
the
pops.
company reporting numbers after the bell. I know people will be interested in search. Definitely interested in
4
what
minutes.
happens with Google's cloud offering. What are you watching for? What's the number one thing
Yeah.
we need to watch for?
Yeah, I mean, I think for me, what I'm most interested in is the
Come
cloud
on.
side, and I'd love to see some acceleration.
My
on that
entry
side of things.
was my
I'd love
entry
to see
correct?
something
Yeah,
that,
my like
or
I
something
entered
at the
I
high
entered
end,
it
high
correct
20s
for the
range,
trade.
potentially even 30%. That I think that would kind of be a very good.
Yeah,
start there for
it was
investors,
fine.
especially where the expectations
The trade was fine. I could have got out green, but I didn't. I missed my stop by like a few ticks. It's totally my fault. This shouldn't be happening. I should be sitting at 1,000 or 1,100 profit for the day.
Overall across their ecosystem. But overall, I think there's potential upside.
Yeah,
here on
it's
the
just,
side because
it's totally my,
of the
it's
platform
totally
that
my
we're
old,
seeing and these more
the old
companies
things that I,
themselves
the
really
things that I keep talking about.
that cloud demand.
I did it
And
to
then on
myself
their
again.
more ad-based businesses, we're talking YouTube and search. We're looking high single-digit
Come on, you can
growth.
do it.
They probably fall in line somewhere along those levels.
3
but,
minutes
I think
till MOC.
more importantly is going to be the commentary that they provide. Again, monetization as far
Just
as
need one
Gemini
more
is
of those
concerned.
and I'll
I
be
thought their
okay.
developers conference back in May was probably the best developers conference I've heard all year. And as a result, I think you're going to see some really good momentum from Gemini here over the next couple of quarters.
Wait. Why was it the best investor conference you've heard all year? Are you talking about sentiment, enthusiasm, or something in terms of the specifics of what they said?
No, I think actually just overall, when I look at the actual Gemini offering, and not only the actual Gemini app itself, but
3 minutes.
when you think about Gemini here, right? I mean, their advantage is the fact that they are leveraged and embedded
Almost
across
got it.
Google's entire ecosystem. We're talking about 15 different platforms with over 500 million users. Where they've got access to that data all across the board. You've got Android,
Bust
which is
through that
3
20
billion
and I
plus,
think we'll be
users
okay.
on that side. You look at their infrastructure, right? I mean, they've been doing these TPUs longer than anybody else on the custom silicon side of things, and I think their infrastructure,
2 minutes.
especially from a cost perspective, I think is better than anybody else's out there. But when you look at some of the offerings and announcements that they made at the actual developers conference, whether it be in terms of video imaging capabilities, whether it be how they're improving search.
Stochastics are going the right way.
Couple of quarters in terms of some of those improvements. I just
On both
felt like,
ES
especially
and
when you
NQ,
compare it to some of the
I got
others
enough
out there,
room.
whether it be, of course, Apple, which was a disappointment, and then the Microsofts of the world. I just felt like it was better than anything else that I had heard out there.
Well, it's kind of what Mandeep Singh of our Bloomberg Intelligence team, he talked about the token customization, 480 trillion, I guess, individual
Yeah, I took his word.
actions.
Yeah, I took his word for
growth
it.
of 5 times, like month over
That
month.
was how the AI sausage is made.
Yeah,
which I
right.
had never heard before.
And I'm assuming that's what you're talking. I mean, they just have this incredible ecosystem that they see so much. So in the training of those
1 minute.
LLMs,
There we go. Come on.
they have a
Make
lot
the run.
to play with. Maybe more so
Run
than
to
a
the
lot of other
border.
firms.
Yeah, and when you look at the actual usage rate,
Yo quiero Taco Bell.
on a year-over-year basis, back
Want some
at
Taco
their
Bell.
developers conference, they highlighted a north of a 45x increase on a year-over-year basis. So,
Just want some Taco
again,
Bell.
these complex reasoning models out there are stimulating a ton of demand.
As soon as it pops, I'm getting right in behind it and just taking whatever it gives me.
Just greater knowledge, I think, across that Gemini platform. And
Got 1 minute.
that platform gets a lot smarter.
I'm just hoping it pops up first to 23.3,
Again, I
and then I'll be out on my stops.
Underestimated the potential here of Gemini and Alphabet's
There you
overall
go. Come on.
ecosystem, and
Go.
we'll see what they can kind of do here over the next.
Wasn't
couple of
enough.
quarters
Come on,
and
Will.
years, but
Maybe
I
he's
think,
still got
that,
some in the tank.
kind of the
He's still got a little in the tank.
room here, as far as Apple is concerned, is the unknown tied to the legal side of things, and that's something we should hopefully get some clarity on, at least to some extent, here over the next couple of weeks.
Got to run. Hey, Angelo, thank you so much. Great setup as we get ready for Alphabet earnings. Angelo Zeno, Senior Equity Analyst at CFR Research.
A little
at
more.
CFRA.
You can do
This is
it.
Bloomberg.
You can do it. You can do it. Come on. You can do it. Get 7 more points in you. That was it. Didn't make it. I don't want to get wicked out, so I got my stop loss way the fuck down there so I wouldn't get wicked out just in case it went down first. There we go. Come on. You got 1 more in you. Come on, you got a couple more pumps in you, buddy. I have faith. There we go. It's only a 600 loser. Oh, come on. You got this one. You got it. One more of those, I got it. Keep going, you got it. One more of those. You fuckers close out. People are buying up the long positions that are closing out.
Target filled.
Got it. Ah.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody. Just about
All right,
7
I'm
minutes
out.
to go until we wrap up the trade on this Wednesday. Also breaking down
I got out.
Alphabet earnings as well as Tesla earnings. So we're going to have all of them. IBM,
I chickened out.
Chipotle also reporting. So we're going to head over to our TV colleagues in just a
all right, I
minute,
got out.
and we'll break it all down. In the meantime, we've got a rally underway, and we're seeing some buying into the close, certainly on the S&P. So we're moving.
I only
up towards
lost
our best
$100
levels
on
and
that
for
trade.
Maybe another record here. I mean, not maybe. I think it's like a
Hey,
given.
you never know what can happen in 6 minutes, Carol.
Fuck.
A lot can happen. In the meantime,
Well, I was
let's talk
right.
about what is now the most read story on the Bloomberg terminal in the past 60 minutes.
Well, that
It's from the
see
Wall
that's
Street
why
Journal.
Ladiop has a big cash
Is the
account because
headline
he can
is
hold.
Justice Department told
You know,
Trump
that's why I'm
Monday
working
his
these
name is
bigger
among many
prop firm
in the Epstein
accounts
files.
because you could never hold that on a
So again,
50K
from the Wall
account,
Street Journal,
where I
so
could hold
it
that
says when Justice
and
Department
come out
officials
okay
revealed
on
Attorney General Pam
250K
Bondi called
because I got
quote,
6,500. I can let
documents
it
related to
move.
Jeffrey Epstein earlier this year.
So
They discovered that Donald Trump's name appeared multiple times, and this is according
so
to
it was a good day trade. It's like I'd have been better off. I wouldn't have had to go through all that if I would have just let my if I would have just moved my stop up behind it when it was first green. You know.
President at a meeting in the White House that his name was in the Epstein files, the officials said. Many other high-profile
Well, I was
figures were
right.
also named, Trump was told. Being
Yeah, I
mentioned
think
in
it's
the
going down
documents is
now.
not
I
a
do,
sign
but we'll
of
see.
wrongdoing.
We're done. We got 5 minutes to the close. Let's see what it does.
routine briefing that covered a number of topics.
Hey, Ladioff, thanks for rooting for me, man. I appreciate it.
They told the president at the meeting that the files contained what officials felt was unverified hearsay about many people.
Yeah, go short now. Now's the short. I'm done. Well, you can do it. You got a cash account.
Some of the officials, again, in this Wall Street Journal report.
I can't trade anymore. If I trade past 4, they get a little. You can't hold trades
Journal
after the
also
open.
quoting White House Communications Director
Well, on the
Stephen
eval,
Chung,
they're a
who
little
told
like you can
the
go to
Journal,
like
quote,
4,
"This is
4:30,
another
but
fake news story,
once you get the
just like
paid
the
account,
previous
you got to
story
be
by
out
the Wall Street Journal."
by like quarter to
It's kind of
4,
interesting.
or they're gonna
Typically, the FBI doesn't disclose
they're gonna give you a
materials
hard
that are
time.
related to a charged offense.
It's right in the
As you
rules.
said, what White House Communications Director Stephen Chung said. So yeah, it's just interesting. I mean, we'll see where any of this goes,
All right.
if it goes anywhere. We should point out that we also mentioned earlier today that a House panel has subpoenaed Epstein accomplice Ghislaine Maxwell, and so she is expected to appear and answer questions. So it just continues to churn, this story.
The Trump administration
Got a lead.
earlier had
Oh, shit,
also
I got a
asked the
call
federal
in
court to
4
unseal
minutes.
grand jury transcripts related to the case of the late disgraced financier Jeffrey Epstein following claims that government officials were hiding documents and information related
People
to
complaining on
the
Reddit
sex
about it.
trafficking case. The latest headline, though, or among the latest.
Well, yeah,
And,
because the
most
rule
recently,
is you
Bloomberg
can't
Terminal
trade
Dallas
after.
Oversight Panel
You got to
issues
be
a subpoena
closed
for
before
Ghislaine Maxwell,
MOC.
according to a release from the panel.
You can't do what I just did on a performance account, or they'll close your account if you've been fucking around too much. They have the right to. So that was an eval move. On a paid account, you can't be doing that. You gotta follow the forecast, and when the box shuts off, you're done. But to be fair, I was in that trade before the box shut off. But I had a chance to get out of the trade. I could have been out of the trade by like 3:30, 3:35, and been done for the day and been compliant, and I would have about $400 than I have now.
Up 84
So-
points, up almost 0.4%. We will see what we get from Tesla and Alphabet in particular. That could certainly impact the tech trade.
So you
And really
can't be
overall
gambling on
after the
MOC.
close.
Tesla
If you
down
get
this
caught,
year,
you
although
gotta
it's up today 0.2
learn how to
Tesla
cut it
17.6%.
on a prop
Alphabet
firm.
today down half a percentage
Well, it's
point.
not hindsight. I've done it so many times. I recognize I'm doing it when I go in. It's just so stupid.
Yeah,
It's like a habit I gotta break. Snooze watches me do it once a fucking week.
And there's a lot that are just not doing much.
He makes fun of me too while I'm doing it,
What's doing well?
NVIDIA.
which he has the right to because it's just
Let me
stupid.
just pull it up here. I mean, this is a stock
You know, when
that's
you
up
got $400 or $500 on the table and the trade is kind of iffy, you're in between the B and A trade, because the B and A trade can go either way at any time. And when you got green, you got to be right behind it. That's just the way it is on the when you're about to go A, but it could be a B to continue. And you're playing the B move, you got to get out when you got profit. But my move was right. I was just one rotation too early, and I should have just got it. It was just so stupid.
Bloomberg's comprehensive cross-platform coverage.
Ladioff trades the European Nasdaq. He trades. What was it you trade, Ladioff?
Take you through the closing bell. We've got a global simulcast.
Not the DAX.
Carl Massar and Tim Stenovic in the radio studio. So we are bringing together.
I forget
the
what
best
the
of Bloomberg
European
television,
version of the
radio, and
futures
our YouTube
are.
audiences worldwide as we check out what's happening here in the final minutes of the trade.
Nasdaq
And Carol,
500.
This is very much
Yeah,
a
he trades the
market that is
Nasdaq
gaining
500.
steam. The rally
That's a
picks
different.
up here as we head to the closing bell.
Kind of fascinating to see, right?
It's
Some
a different
buying into the
instrument than
close
this one.
and, you know, another record, not perhaps. We're going to probably see another record here on the S&P 500. In the meantime,
But it
the
runs the
Alphabet
same. You know,
is
it's
a
it's the
little bit
same
lower
market.
ahead of its
It's just a
earnings
different
release. Tesla a little
instrument.
bit
You know,
higher
it's just
ahead of its
it's a little
earnings release.
different.
The big question I have with Tesla, and we probably won't learn this in the
It's not the
release, is
NQ.
anything related to Elon Musk's commitment or lack thereof to politics. We got that story yesterday about a disclosure and some SpaceX documentation that raised concerns from investors that.
All right,
hey, wait,
I
maybe he's not
gotta
doing
make a
politics.
call. I got a deal I'm writing, so I'll be back in like 10, 15, guys.
Tim, and if you remember, he used to say things like, well, what I've lost in sales on the left, I've gained on the right, but that's not necessarily the case anymore. And also, if he wants more expansion in Europe, how's Europe going to feel about his politics?
Yeah, that's a big open question. Remember when Tesla was a meme stock?
There's other meme stocks to talk about
Exactly,
today.
and those are clearly getting a lot of attention, although we're not necessarily seeing it with Open Door and Kohl's, but the rotation continues to some other names, and it really speaks to the level of excitement or confidence that people have in more trade deals being announced and this momentum continuing to the upside.
Yeah, and let's not forget we've got some other earnings. IBM, Chipotle, also reporting after the closing bell. Also Las Vegas Sands and CSX, guys.
All right, and of course we'll break those all down for you when they cross. In the meantime, there's the closing bells, and you can see here that the S&P 500 closing right around its session highs, gaining 0.8%, still ticking higher here as we look at a finish of 63.59. The Dow Industrials adding more than 1.1%. The Nasdaq a bit of the laggard here, gaining just 0.6%, and the clear outperformer on the day. The Russell 2000 up 1.5%.
All right, S&P 500, Scarlett, fairly broad-based in terms of some of the buying that we saw today. Fani, 343 names to the upside in the S&P, and you've got 160 to the downside.
If you look at the map of the S&P 500, you would think it was just all green today. It's not. You can see there's a couple of sectors that are in the red, but it's mostly, you know, the likes of healthcare, on earnings. Industrials also doing extraordinarily well, and energy having a better day, having had a tough beginning to the week.
All right, guys, as we await for those earnings to cross, Lamb Weston, one of the outperformers in today's session, up about 16%. You know what they do? They make French fries, and investors certainly eating up shares today. It is one of the top gainers. It's actually the top gainer in the S&P 500, surging the most in more than 4 years after it said it would cut 4% of its global workforce, part of a new cost-saving program. And so this company's been going through a few different changes and so on and so forth. So we are seeing certainly investors liking this name. And we got some earnings.
We do. I'm going to just bring up CSX right here as we await the big one, which is Alphabet. This is the railroad company coming in with second quarter revenue that meets analyst estimates, $3.57 billion, just slightly below the anticipated $3.58 billion. As for the earnings per share, 44 cents, which is lower than the 49 cents last year. Operating income for the quarter, $1.28 billion. Analysts were looking for $1.22 billion. And you can see there the shares a little changed at the moment, kind of bouncing around. Was a bit higher. We'll see how it all shakes out. Tim?
Shares of T-Mobile shot higher for a second, then went lower. Now they're higher again, up 2.3% in the after hours. The company sees 2025 postpaid net adds of 6.1 million to 6.4 million. That beats estimates of 5.94 million. The company also sees fiscal year core adjusted EBITDA of $33.3 billion to $33.7 billion. Estimates were for $33.5 billion. So right there. And now we're seeing Alphabet earnings crossing.
We are. And let's start you off with the second quarter revenue of $96.43 billion, I should say, better than expected. $93.97 billion was what analysts were looking for. When you back out the traffic acquisition cost, that is revenue handed over to partners, $81.72 billion, again, higher than the anticipated $79.6 billion. As for the individual business, cloud, revenue there, $13.62 billion, higher than the anticipated $13.14 billion. YouTube ads revenue, $9.8 billion, again, better than the anticipated $9.56 billion as well. Ad revenue, which is, of course, the biggest part of the business, $71.34 billion. Analysts were looking for $69.71 billion as well. As for search and other revenue, $54.19 billion. Analysts were anticipating just under $53 million. You're looking at shares little change to slightly higher in the after hours. CapEx is another big one, $22.45 billion. Analysts were looking for $18.24 billion. And Alphabet is increasing its investment in CapEx for this full year, Carol and Tim, to about $85 billion. And again, you wonder how much this sets the tone, sets the bar for how much the other Mag 7 names increase their CapEx.
Yeah, exactly. And continue to watch the stock bounce around. Now up about 0.9%. Again, some of the big headlines. And Scarlett, you really, draw our attention to them. Company in terms of CapEx spending, especially amid the AI build out, sees fiscal year CapEx about $85 billion. It's $10 billion than its previous estimate when it had seen about 75. The estimate on the street was a little bit over 73 billion. And again, second quarter Google search and other revenue, that too is a beat, almost 54.2 billion, and the street was looking for 52.8. But right now we are seeing the stock down about almost 1 percentage point here.
Yeah, essentially Alphabet saying that AI is positively impacting every part of its business. And earlier I was speaking with the Goldman Sachs analyst, and he made the point that everything looks rosy for many parts of its business, from YouTube to the cloud revenue, and that's what we're seeing effectively play out in these results, with almost every part of the business beating estimates. That CapEx, though, potentially weighing on the stock.
Alphabet CEO Sundar Pichai calling this a standout quarter, robust growth across the company. Search delivered double-digit revenue growth. He said our new features like AI overviews and AI mode are performing well. We continue to see strong performance in YouTube as well as our subscriptions offering. And cloud had strong growth in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. Sundar Pichai continuing saying, with this strong and growing demand for our cloud products and services, we are increasing our investment in CapEx in 2025 to approximately $85 billion and excited about the opportunity ahead.
All right, we're going to keep keeping an eye on shares of Alphabet, down about 2% here in the after hours. Quick check on Mattel, also crossing the Bloomberg terminal, and you're looking at this company resuming its 2025 guidance, sees fiscal year adjusted EPS of $1.54 to $1.66 a share. seeing fiscal year adjusted gross margin of 50%. The street was looking for 50.3, so almost in line there. And the company, in terms of the second quarter, adjusted EPS of 19 cents a share, 3 pennies better than what the street was expecting. Their adjusted gross margin coming in better, 51.2%. The estimate was 49.2%. And then second quarter net sales, too, that's coming in light, 1.02 billion. Street was looking for 1.06 billion. Street doesn't like it. Investors setting that stock down about 5.6%.
Also, we should note a correction to one of the headlines, Alphabet's cloud annual revenue run rate over $50 billion. Vani, I know you got your eye on some other numbers that are crossing
Las
the
Vegas
terminal right
Sands
now.
beating as well on all metrics, really, Tim. And it's interesting to see that net revenue coming in at $3.18 billion when the estimate was for $2.83 billion. That stock soaring 6% now. The adjusted earnings per share in the second quarter, 79 cents versus the estimate of 53 cents. And net revenue for Macau was 1.8 billion. The estimate there was 1.77 billion. So really, kerching for Las Vegas Sands on whole metrics.
Yeah, Macau really a star performer there for that company. I just want to go back to Alphabet for a second here because heading into this earnings report, the stock was on a 10-day winning streak up until today. It had been a laggard compared with the other Mag 7 names, over concern about how Gen AI would eat into its search business, its bread and butter business. But then people are saying, actually the economy is doing fine, so the ad
He's
business
got to
will
email
take
me
a
in
fine,
5 minutes.
And Alphabet has its
And then
work
I'll
cut out
call
for it
again.
in terms of reassuring
Shit, I was right about the pop, wasn't I?
business over the advertising business. Right now, you are seeing the stock move decidedly lower, at least until the earnings call.
I was right about the pop. The trade was right. The trade was right as a fucker, man.
The CapEx spend is higher
If
than
I had a
anticipated
cash
for the
account, I
customer
could have held that
Yeah,
fucker
I'm gonna
longer.
look for
Look at
some
all the
color
points
and
I
see
would have
what they
made.
have to say
I
about
got
this,
out.
because
Where'd
one
I
of the
get
things that we
out?
talked about earlier with our Mandeep Singh of Bloomberg
95,
Intelligence
and
is a
we're
couple
at.
of things. I mean,
I
this
missed
is
40
a
points.
company that has such a massive
I
platform,
could have got
and
it.
that is giving them so much data and information in terms
No,
of building out
but-
their large
no,
language
but
models.
it
And
sounds
feature
good when I'm
customization,
talking
which is
here.
something we talk about
I'm just.
increasingly. I'm also interested in
You
what
know
this
I
is
wasn't
doing
going to
to
hold that
potentially
fucker. I was getting out as soon as I could.
futures in the aftermarket.
But the trade
up
was
about
right.
0.5%.
If I,
So it's
if
not
I
like
went
it's
mentally
going
ill
down.
one more time and decided to hold it longer, I would have been right.
Ads revenue, $9.8 billion.
But that would have been
It's a
crazy.
13%
And you can't do that anyway because that wouldn't have been a real trade because once you get to the performance account, you cannot do that.
I mean, this is like
You can't gamble on MOC and the end of the day close, and you can't really gamble on the open either.
Google down, Alphabet down about
Because they're not going to want to pay you. You know what I mean?
Throw that out for you. Second quarter
They're not
revenue,
gonna want to like fund you.
estimate on the street is
You know, who's gonna want to let you use their money
looking at second quarter
if you're going to be gambling at the end of the day to get yourself out of a trade? You know what I mean?
$77 billion.
Nobody's going to want to do that.
Do we have the stock trade? Let's just pull it up here.
So you're right, Snooze. I wouldn't have done that.
Here, Scarlett.
Yeah, the second quarter
Yeah, poker
software
players.
revenue, missing
Yeah.
analyst estimates
There's
was
a lot of
around
poker
7.4
players that hit a big
billion.
tournament and then go
and
trade.
As well, the consulting revenue of 5.31 billion, slightly higher than anticipated. But the headline here that IBM is really trying to push is that the
There's a
revenue
guy over
of
on
the
Top
business
Step.
stands at
That's a
over $7.5
professional
billion.
poker player.
Yet another
that
example of a
he's on the
legacy
show
tech
every
company
once in a
trying
while.
to prove that it is making the transition.
I watched
to
it for a
this
little
AI
bit when I was
generation.
trying to
Aggressively, right? Trying to
see if
pull
I
that out. All right,
like
guys,
them or not.
that's a wrap. Our cross-platform coverage. Still Tesla to come. We should get that in about 10 minutes' time. That is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Vani and Scarlett, of course, continue.
I don't like being in spots like that.
Bloomberg Business Week Daily. We'll see
Think
you again,
I'd
same
learn.
time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily. with
What were you
Carol
asking?
Massar and
What
Tim
were you
Stenovec,
asking
live on
Ladioff
Bloomberg
Hazard
Radio,
Matt? The
television,
difference of
YouTube,
what
and Bloomberg Originals.
between what he's trading and the
Bloomberg Business
NQ?
Week
Is that
Daily.
what you
That is
wanted to
Carol
know?
Massar. I'm Tim Stenovec. Alphabet reported revenue excluding traffic acquisition costs for the second quarter that beat the average analyst estimate. Shares down about 2.3% as we speak. Overall revenue coming in 14% above what it did over the same time last
Hey,
year.
Ladioff, what is the
$96.43
difference
billion.
between
Estimates were for
the
$93.97
NASDAQ NSDA 500 and the NQ that we trade? What's the difference?
Here at Bloomberg Intelligence, Google Alphabet is out, down 2.2%.
Yeah.
Good or bad?
Yeah, he's got the translator. It's easier when you type it, I think.
You had a top line beat, and search actually did better than
Because Snooze, you should be able to use what he's using. I don't.
They sort of missed on the operating income line. And the reason they missed that is you see that $3.4 billion charge.
You got 2,000 of your 8 back. That's good. I just saw that.
It's a footnote, so they attributed it to hedging and
Yeah, I know. Yeah, nobody has that NASDAQ 500 in the CME group. You pretty much got to trade out of the CME group with the prop firm. You know what I mean?
It was expected. I don't think the stock would have been down on that, but to me, that is the only thing that's sort of negative in the print.
He must have got up from the keyboard.
The company brought in $96.43 billion in a single quarter.
It's always big numbers.
And it's going to spend $85 billion.
Look at this.
In this
Was my trade right or was my trade right?
Almost the entire quarter's revenue on CapEx for the year.
It's a raise. So the
Oh, was there an ad?
was around $75 billion. So it is a $10 billion increase in CapEx expectations for the second half. So
what are they spending on? Just remind us. Is it all AI?
Infrastructure.
Yeah.
I mean, you need the data centers. You need
Playing
the
Tarkov?
power,
What's
you
that?
need
Oh,
the
you're
chips,
playing a video game? Is that a video game?
The fact that cloud did better than expected. I mean, the consensus was 28%.
You're
they
right.
posted
Oh, it is.
32%. That
Oh, it's a
tells
gun.
you
Okay,
that
it's a
the
third-person
sequential
shooter.
acceleration
Yeah.
points to robust cloud demand,
That's
and
cool.
they are probably supply constrained. That's the reason why they are raising that capex. And so, if they had more chips and more AI infrastructure to offer, they would have posted a higher revenue on that cloud line.
Hang on for a second, Mandeep. We got to do Tesla.
Yeah, second quarter revenue coming in just below estimates at $22.5 billion. Estimates are for $22.64 billion.
My
Second
goal
quarter
tomorrow
adjusted
is to
earnings
get
per
through
share
tomorrow without
coming in
any
just shy
drama.
of estimates by 2 cents at 40 cents.
I'm just going to cut my trades when I got
Gross
green.
margin coming in at 17.2%.
No drama.
That is
I only
above
need
estimates at
1,500 more.
16.5%.
Look.
Stock bouncing around a little.
Look, Snooze.
In the
I only
after-hours
need.
trade, but Carol,
This one's
up
at
about
20.
0.3%.
I think what's interesting too, and I
To
think we got this from, I think it was,
63.
Steve
I only
Mann,
need to
this
get
whole
this to
idea of
65. I only need
vehicle launch in
1,500 more.
2025 remain on track, and he said in terms of hitting that.
Yeah, I have a stop loss. I just moved the shit out of
That
it.
in order for them to do it, they've got to have.
I have a
Nissan,
mobile
in
stop loss.
particular,
You know that.
A less expensive model. So we'll look for some more clarity behind what those new vehicles
It is
are.
because if you get the big pop down, it takes you out.
Right now, up about 2/3%. Well, more analysis
Oh,
on
fuck.
Tesla in just a moment. Want to go back to Alphabet. So what's top of mind?
So stupid.
You know, in terms of the
I,
call.
I didn't move it
mentioned,
until
you talked with
until
us
it came
about
back on me.
the
I
Turbo
had green
subscription
right
across
away. I
all
had
their
green.
platforms that
I had
generate
green
7 million
twice.
folks. That's
It went
important.
against me. I had
Type of
green. Went against me. Had green. Then it fucking shit the bed. Yeah. Yeah, it's mobile. It's a mobile stop. I can move it up and I can move it down. But I only need 1,500 more and this account will be qualified. This one needs 12,000 and this one needs 14.5.
So they'll be asked on the call.
I am certain they will be asked.
So I'm just trying to nudge this one over tomorrow without getting drama. I don't care if it takes 2 more days. And then these, I'll be looser on these once this one's qualified. I'll loosen up and I'll put more contracts on.
Would I get the same answer by asking?
But I don't want to fuck this one up because I'm so
Google and
close.
Getting that AI overview.
Not necessarily.
Well, if I need it, yeah.
Again, it goes back to,
It's okay, Snooze. It's yours only moves up. You don't have to be sad about that.
Is a condensed form of the answer that you would get on Gemini, and that's where
Yeah.
AI overview is more tailored to the traditional search.
So if it takes me 3 days, I'm doing minimum contracts and I'm just gonna take my fucking green. But I thought I could get it all because I thought that move was gonna be bigger. I really thought that, and the move was bigger. I was a rotation early.
So that's where the gross margin impact will show up. And the fact that they missed on operating income, I don't think it is because of
I started to
this time around.
stay with the trend
Also,
up. I'll stay long and move stop loss.
LLM search will
Yeah,
be
that's
a
what I
big
do is
part
once
of
I
their
get green,
search query mix.
well, my ATM will move my stop loss to
justify-
break
I wanna go back to
even
capital
once it gets
expenditures,
high
okay?
enough,
You know, the stock's
and then I don't
bouncing
have to
here in
touch
the
it.
aftermarket, so it's hard
But
to
if
get
it
kind of
really
a clear
spikes,
direction.
I'll
But do you
drop
think
it
they
right
need
behind it.
to-
You know
is
what
there
I
a lot of
mean?
pressure
And
on them
just
to
just
justify
take that
spending?
off.
As Tim said, it's like a quarter of their, it's one quarter
You know
of
what
revenues.
what
Do you
I've
think they're gonna
done
have to
is
justify, or
trust
they
in
can
my
easily show
call.
the payment or the give
And
back
then
that they're
have
getting as a result of all of these?
Yeah, well that's the
investments?
smart. That's because you're being rational about it.
Quarter for search
That's
business,
because you don't have like psychological problems. I do.
despite all the competitive pressures from ChatGPT. So
Yeah.
and look, 1/3 of their business is cloud and YouTube,
I,
and that's still growing north of 25%.
That's the right way to do it. I think my NQ stop loss is about 375.
More AI infrastructure capacity, the cloud business would be growing even faster.
Yeah.
So the proof is there.
Yeah, that's right. Well, that's the universe doesn't want us to have that much money because it'd be hookers and cocaine 7 days a week.
Mandeep, is it fair to say that they're
So the
not
universe
losing
is
on
that's
CapEx if
just,
they're not
we
getting,
we can't let
right? They're not
we
gonna
can't
do
let too many people do that
Is there
at
so
one
much
time.
pressure in this race that they would keep spending?
I think Larry Page made this comment a couple of quarters back, if I remember correctly.
Oh shit! I gotta call my guy. He just emailed me. I'll be right back. Yeah, I gotta rotate the wealth and the hookers and the jet and the cocaine. It's a package.
I want to update everyone on Tesla shares.
I'll be right back.
1% in the after hours. The trailing 12-month energy storage deployments achieved their 12th consecutive quarterly record. The company does plan for new vehicles launch in 2025. That remains on track. Second quarter free cash flow, really, really low compared to estimates. 146 million. Estimates were for $760 million. In the first quarter of 2025, free cash flow was $664 million. The Cybercab is scheduled for volume production starting in 2026. Once again, shares of Tesla up by about 1%.
All right, folks, you are listening and watching Bloomberg Business Week Daily. Carol Master along with Tim Stanovic. Mandeep Singh is with us, Global Head of Technology Research at Bloomberg Intelligence. He's going to stay with us in studio. We do want to bring in to the conversation Brent Thill. He's Senior Technology Research Analyst at Jefferies. He's got a buy rating on Alphabet. He's got a hold rating on IBM, which also is out with their results. And we are seeing that stock, let me just bring it up real quickly on the Bloomberg, shares of IBM are down about 4.4%. So we're both seeing some movement there. And right now, Alphabet down 1.2%. Hey, Brent, good to have you here into the conversation with Tim, Mandeep, and myself. Your take on what we got from Alphabet.
Yeah, I mean, it was pretty in line. I don't think there was any big fireworks. You had a bigger CapEx number, was about $4.5 billion higher, which is a sign of investing in AI. They raised CapEx by $10 billion, which again, everyone knows it's going to AI. And so I think everyone likes that they're spending to keep pace, but obviously it's having a drag on the margin. So the margin last quarter was about 40%. They're at 38.3%. So a little bit of a drag on the margin on the downside. And then, just magnitude of upside, just, not a lot. And they don't give you a lot of color of what they're doing. So I think, look, this has been the worst sentiment of any name I cover in internet. Our investors are not bought in. Everyone's starting their search with ChatGPT and Perplexity first, but you still end up in Google. And so the big question is ultimately, where are they going to end up in this AI race? And many of the advertisers are talking about a transition with AI overview and what they're going through, that it's more expensive and they're getting a better impact from it, but it's still early. So, overall cloud, did well. YouTube was 13% growth. It was 10 last quarter, so accelerated a bit off an easy comp. And so, yeah, I think it's just basic kind of quarter, nothing really exciting. The challenge right now is investors just don't believe. Any investor I talk to is like, I need to be underweight Google because I just don't believe they're going to make this transition.
Well, make the case for us. Make the case for us that you think they will make the transition.
Well, the case for the transition is that you need three things for AI. You need data, users, and capital. And they have more data and more users than anyone in the world. So if you, like, I've always said this, like, I think this is like pulling up to a stoplight and you look right and it's like a tiny little car and you might be in a car that you think is faster and then the car on the right just takes off and you're like, wow, I didn't realize that was underneath the hood. Or where did the muscle come from there? They have a lot more AI muscle under the hood than they're showing. They're terrible communicators. They're not good with investors. They don't give you guidance. They don't go on the road. They don't spend time with investors like NVIDIA, like Microsoft, like the rest. And so investors are just like, look, they give me the earnings call 4 times a year and that's about it. And then the filing and that there's nothing in it. And then I'm left to guess. So every investor has to do their own work and we're all doing our own work. Your day starts in ChatGPT and Perplexity. It's not, and it was starting in Google maybe a year ago. There's alternatives. So I think this is the same thing we're seeing with Adobe, with Salesforce, other names we cover in tech. Is a new crop of AI stories going to effectively not necessarily replace, but become the central spot where you start your search? And I don't think that that boogeyman's going to go away for a while. So, again, I think, stocks underperformed, it's done nothing. You look at the IGV, the software index, it's up 12%. Google's flat. You look at the other index, the SMH, the internet index, you're up 18% year to date. Google's flat. I mean, there's literally been way better ways to make money, whether it's DoorDash, when you look at what's going on in Meta. And we hear this from advertisers. Advertisers are obsessed with what Meta is doing in AI. And so, again, I'm not super bearish on Google, but I think what we're seeing are the facts of the facts, which is it's really hard to change the narrative. And they're going to have to make a change in their own behavior and the numbers and then the adoption rate. And so that, again, we're never going to rule them out. I think the stock's super cheap, so that's why I still have a buy in it. But I would say of all the large cap internet names, they have the most work to do.
All right. So Mandeep, come on back in. Our own Mandeep Singh, Global Head of Technology Research at our in-house Bloomberg Intelligence team. I mean, do you think that they could do better in terms of messaging? I'm curious about your thinking.
I agree with Brent on that they are the ones who give you the least when it comes to the product pipeline and how it's going to change their business, especially given they are getting disrupted. So they could do more. But at the same time, like I said, a search business that is their cash cow growing double digit is a very impressive performance. And to my mind, given all the competitive threat that we talk about, they're still able to execute. And unless the search business really starts to decelerate sharply, I don't see anything in the fundamentals that has changed for Google.
Is Meta a threat to Alphabet?
No, because they're struggling with their own large language model. That's why they're making all the acqui-hires. So they don't have the talent. It's really Google and OpenAI that are going neck and neck when it comes to the consumer side. And then you have got Anthropic on the enterprise side. But these three dominate the large language model race right now.
Let me add that the advertisers are not saying that. Our advertisers are saying they're shifting dollars to Meta away from Google. So I think when you look at actually advertising dollars, they are shifting, and that's coming from our checks. So I think that there is a shift that's been happening. I don't think Google goes to zero, but I do think there's a shift in advertiser spend.
Why did Google search then grow double digits this quarter?
It's starting to fade, and we think that ultimately Meta's results are much stronger.
Okay, I mean, that's where we have to wait for Meta. Maybe it grows high teens or over 20%, and then probably
Meta stock's up 22% year to date for a reason, because the advertiser checks that we all do are saying that secondarily, the framework of what they can do with AI is so much more powerful from what we're seeing in the experiences. So I'm not a Google hater. I just think that we're starting to see a sudden
But they are behind when it comes
shift.
to LLMs. So it's not because of their LLM lead that their ad revenue is shifting. So it's just better ad surface and how Meta is monetizing. It's not because of LLMs, right?
I don't believe it's because of LLMs, no.
Yeah.
So Brent, if indeed there is this shift happening, and I certainly see it in my behavior, and I do end up going back to Google, but there are other options out there now, whereas there used to not be other options. If that happens, how does Google end up leveraging its AI product for actual ad revenue? What does that look like?
Well, I think the challenge is when you go back to Gemini that if you've gone into Perplexity into the app or ChatGPT, where we all started and Gemini was late, how do you transition out of those apps when they're already front and center? And so they've got to get people to kind of get out of that. And then secondarily, like I go back to like I planned a family vacation in Europe on ChatGPT. And to your point, I had to go back to Google to find the boat rental, the restaurants, all the things we want to do as a family. So I do think that you ultimately end up back. I think that the challenge right now is it's unclear exactly how they're going to navigate through this, and are they going to end up in a better or worse position? And right now, Wall Street's betting a worse position, right? Stock's down on this print, which wasn't that bad. Why is it down? Why is the sentiment so bad? There's just better alternatives that people see, and you hear these advertisers, these big advertisers are spending billions of dollars a year on behalf of their clients, and they're saying, well, this is what I'm doing with my ad budget. So I think they need to do a better job of you've got to get AI overview in the market and get usage. You have to effectively show a better ROI. You have to get Gemini usage up. I think, from a Wall Street, a lot of this is just actually management too, which is giving conviction. We covered Microsoft when Ballmer was there and stock did nothing and people just didn't have a conviction. They had conviction when Nadella came in, the stock went from 30 to now it's 500. And so a lot of this too is optical. You got to optically hold hands and help people because investors get the help from a lot of the other companies. They don't get the help from Google. So if you can drive a car, you're probably more likely to buy it. But if you can't drive it, then like maybe I'll just go buy another car I know I can drive. So they need to do a better job on that side.
And to Brent's point about Gemini usage, I think on the call, if they share the token count, so last quarter they mentioned 480 trillion was the token count, and it grew almost 5x month over month.
Right.
Microsoft shared a similar metric, and to my mind, in the case of Alphabet, you'd not only have the cloud lift, so cloud consumption is driving token count, but also the surface area they have with their family of apps. So they have 6 apps with over 2 billion monthly active users. All the AI, Gemini AI that they are deploying on those apps, including search, that will show up in the token count. And that's why Google is almost 10 times that of Microsoft. So Microsoft processed 50 trillion tokens.
Right.
Google processed 480 trillion tokens. That's because of the surface area they have to show Gemini and deploy that. And that, for me, is a key metric on the earnings call.
So that's what you're going to be looking for. All right. We're going to let you go because you, I know, have lots to do. Mandeep Singh, you are such a gem, Bloomberg Intelligence. Hey, Brent, before you go, just a quick thought on IBM, because they also report and they're down almost 5% in the aftermarket. What do we need to know just quickly?
Yeah, software did better. Consulting's kind of like blah. And I think the CEO had mentioned they'd like to do better in consulting, but that's seems to be the biggest concern across consulting overall. So, tale of two cities, software business growing high single digit, consulting not massive grower and flat on a constant currency basis. And so, they're shifting to become a software company. Arvind has done a great job, the CEO. The stock's up almost 30% year to date. The multiple's almost at Microsoft. Like, I'd much rather own Microsoft. I'd much rather own Google. There's other names I'd rather personally own. I can't own any of these names, but we're advising our clients to own over IBM. We just see the stock pretty full at the multiple it's at.
All right. Just real quickly, what would be your top number one question on Alphabet on the call here? And the stock's down still 1.6% lower. Just quickly.
The continued adoption of AI overview and what's happening with Gemini.
All right. Going to leave it there. This was fun. Brent, thank you so much. Brent Thill, he's Senior Technology Research Analyst over at Jefferies, joining us on Zoom on this Wednesday.
Hey, just a reminder that Tesla reported results as well. We're going to get details on those in just a minute. Shares down now about 1%. Second quarter free cash flow came in at $146 million. The company also saying that the Cybercab is scheduled for volume production starting in 2026. Let's go to Charlie Pellet for an update on everything happening after hours, because there is a lot. Hey, Charlie.
Indeed, we got you covered right here at Bloomberg. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Alphabet reporting moments ago. It did report better than expected revenue, but said 2025 capital expenditures will be higher than previously forecast, intensifying pressure on the company to justify the investments it is making to keep up in the AI race. After hours right now, we got Alphabet down by 1.4%. Tesla, as you just heard, says it is moving forward with its robotaxi and affordable vehicle plans while reporting second quarter earnings that fell short of Wall Street estimates. Tesla right now down by 0.5%. IBM reporting weaker than expected sales in its software segment. IBM down 5%, and T-Mobile also reporting earnings after the close. It reported more new subscribers than analysts were expecting, with 830,000 new monthly phone subscribers. After hours, we got T-Mobile up by 4.5%. A record on Wall Street today for the S&P 500 index, closing at 6358, up 0.8%. The Dow surged 507, up 1.1%. Nasdaq up 0.6%, with the 10-year 4.37%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Tesla said it's moving forward with its robotaxi and affordable vehicle plans while reporting second quarter earnings that fell short of Wall Street's estimates. Adjusted earnings, 40 cents per share. That was just below the average analyst estimate. Revenue fell 12% to $22.5 billion. That was also lower than expectations and the sharpest decline in at least a decade. Gross margin, which is a measure of profitability, was higher than anticipated. Right now, shares down about 0.6%. Tesla did say many of its key initiatives remain on track, quote, despite a sustained uncertain macroeconomic environment resulting from shifting tariffs, unclear impacts and changes to fiscal policy and political sentiment. Let's bring in Bloomberg Intelligence Global Autos and Industrials Research Manager Steve Mann, joining us once again from New Jersey. You gave us a great preview earlier in the afternoon. Now we have the numbers. Anything surprise you?
Yeah, I think if you look at the stocks down after hours a bit, I think the most important thing there is they haven't given us enough visibility into the future, what their outlook is going to be. I mean, the numbers, they miss consensus, but if you kind of dig into it a little bit more and look under the cover, it's actually not bad. If you look at, automotive gross margin, excluding credits, is actually 15%, better than last quarter of 12.5 and better than consensus estimates. And then if you look at free cash flow, the reason why it's down versus the first quarter is because they spent an extra $900 million on CapEx, which is not a bad thing given that they're launching the cheaper model and the Cybercab. So if you exclude that $900 million of additional CapEx, their free cash flow is actually over $1 billion, more than $660 million in the first quarter.
So that's good?
That's good. I mean, spending CapEx, given, what their product launches are, is not a bad thing. They're investing into the future.
Right.
And look, they're also expanding internationally, right? They have, we've seen over the quarter improvement, higher sales in South Korea. They announced entry into India, and then they're launching the extended version of the Model Y in China. So it's a good thing. But look, we do want to hear what Elon Musk has to say in terms of not just the robotaxi, but how are they going to face the headwind, the challenges we're seeing in the U.S. market, which is critical. It's one of the largest market in their portfolio. So we'll have to hear more on the call.
How do you think Tesla's robotaxi stands up to the other autonomous vehicle solutions that are out there right now, namely Waymo?
Well, I think the market can be very big, especially in the U.S. If we're not talking internationally, there's definitely room for multiple players. My perspective is that, Tesla's using an all-camera system. that actually gives them a greater flexibility and greater scalability with that system. Waymo and others use a combination of radars, lidars, and camera system. Cameras are just cheaper, right, to build, and so it's a lot easier to scale, cheaper to scale, for Tesla. So, but then again, I think the market's big enough. I think there's going to be users that want an all-camera system. I think there's going to be users that don't feel comfortable with that and want the redundancy of lidars. So, for example, Uber is partnering with Waymo.
So I got to go back to wait. All right. So I'm looking at the FA function on the Bloomberg, and we just talked about free cash flow. And so it's $146 million versus $664 million in the first quarter of 2025, as our live blog says, dropping 89%. And I know what you're saying about it's good that they're spending for the future, right? Because you said to us earlier that the best way to get to that 1.56 million unit delivery for the year, right? That's a consensus estimate, is that they've got to launch that cheaper vehicle, right? So they've got to bring stuff out. Do we have to be worried, though, about that low number, or they're going to be fine?
Well, it's it's technical, right? I said if free cash flow is over $1 billion, obviously the more the better. It is down.
Yeah.
Compared to a year ago, 2 years ago. But look, like if you look at the Model Y, if you look at the gross margin, excluding credits, it is up, right? That actually tells you that the new vehicle is likely, new Model Y is likely they're able to build it at a lower cost. The issue is, like I said in the preview, is they just don't have enough volume.
Yeah.
So if they can expand volume with the existing Model Y, not just in the U.S. but in the international markets, and as well as introduce the cheaper model, which is supposed to be built within the existing capacity, there could be a lot of upside, right? In terms of margin, in terms of free cash flow. So it's really execution at the moment, and that's what we want to hear from Elon Musk. Where is the cheaper model? They said the production has started, initial production has started in June, but it could take some time, right, before they launch. They have to get all the kinks out. But you want to hear about India. India is a huge market, right? And where are they taking India? Definitely robotaxi is important, and then the Cybercab. We need a little bit more details.
All right, details is certainly
near-term details. Near-term details.
Near-term details. All right, great setup. Right. Steve Mann, thank you so much. We're going to look forward to reading your research in the after hours and certainly into tomorrow's trade. Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Manager, joining us from BI headquarters in Princeton, New Jersey.
I want to go right now and bring in Ross Gerber. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. As of the end of last year, had about $3.4 billion in assets under management. Longtime outspoken Tesla bull, more recently expressing concerns about the company, as he did 3 months ago after the last quarter earnings report. According to the Bloomberg Terminal, Gerber Kawasaki still owns about $78 million worth of Tesla stock. Ross, good to have you with us this afternoon. What have you been doing to your Tesla position over the last quarter? Just before we get your take on the numbers.
We've been selling for years, and I continue to sell. We have so much stock, and we have a lot of clients that really believe in the Tesla story, and we've kept some stock, obviously, in our portfolios. But in my ETF, I'm out of Tesla completely, out of my GK ETF, and it's mostly because the business is declining, and these earnings results continue to show that the business continues to decline, and in some kind of troubling ways. So, as much as the previous guest is bullish on many of these things that Elon talks about, nobody wants to talk about the truth that nobody wants to buy Elon's products. Like, until that gets addressed, there's a huge elephant in the room that nobody seems to want to point at because it's Elon. And so he's the innovator behind all of the things that are great about Tesla, but he's also the sort of villain that's created so much animosity around him that nobody wants to buy his products.
We've got a great cover story by the team of Max Chafkin and Ed Ludlow in Bloomberg Business Week, the new issue coming out, the August issue. It'll soon be on newsstands. It's already on the Bloomberg. But, the whole idea, Ross, as you know, since you understand this guy, this company so well, you never kind of count Elon out. And so I do wonder, if he does get it right, if he maybe, I don't know, we'll see what happens in terms of his involvement in politics, because it does seem like he still wants to stay, according to the SpaceX filing. But I mean, there is always that caveat when it comes to Elon, right? That he sometimes pulls it out, or he often pulls it out.
Yeah, and I think that's been true in the past, and I'm very grateful that he pulled it out 5 years ago when it really mattered, and Tesla was almost on the verge of bankruptcy, and it has become a very successful company. But it doesn't mean he's going to do it again. And this idea that, these kind of entrepreneur, rock star people don't fall is actually is not true. In fact, it's very common.
All right, I'm
What we
back.
call the rise and fall story. That's all the stories you see on Netflix and the documentaries. So, this.
All right, guys, I'm gonna sign off for the day. I'll let the chart run till 5 o'clock.
And I always remind
I appreciate you guys hanging out with me all day. We got away with a win today. I almost jammed it up at the end of the day. But we'll come back tomorrow, trying to have more discipline, and we're gonna take green, and we're gonna try not to do things like move our stop.
Elon can fix
And
the company. It's solely broken because of him. He can
really, that's the only mistake I made today is I moved my stop. I should have just left this. No, well, we got to move to break even and take green when we have
He
it.
just doesn't seem to care.
Not get greedy, so we got to not get greedy, then not move our stop, and we'll be okay. All right. All right, Snooze, take it easy, brother. I'll talk to you guys tomorrow. I'll leave the chart up for about another half hour.
I think the reason I hold
Good night.
personally still some Tesla stock is for the same hope that we all have, that they are definitely focused on a future, and especially for me, a climate activist. It's a green future that I'm pushing, and Tesla still is the leader in green, transportation and energy, and I think it's an incredibly important company to succeed. Hence why I'm out here banging on Elon all the time. It's not, for any other reason than wanting to see Tesla succeed, because it's crucially important to climate change. But this robo-taxi business is not crucially important to anybody. So, I think Tesla's main business is selling EVs and energy storage, and they should be focused on repairing that main business. And I think their other future endeavors are interesting, and that's why it's a reason to hold the stock. But it also trades at 150 times earnings that are going down.
Okay.
And so, you have to weigh that too.
In the past, you've talked about how nice it is to drive a Rivian, for example. Are you willing to now invest in any other EV company that you've turned on Tesla?
No, I've lost a lot of money in EV businesses over the last 5 years that I've hoped would succeed, including Rivian and many others. And unfortunately, many of the EV operators are now having all the incentives taken away from them, as well as traditional car companies, along with tariffs and everything else. It's just really a horrible setup to be a car company. The car company we own is Ferrari, actually, which has no problem selling their cars at 40% margins that make Tesla look like chump change. So, truthfully, it's just a tough to be in a global auto business on a great day, let alone with Trump as president. So it's a very tough time for the businesses, and I'm just not recommending that right now, versus a stock like Trane Technology that makes, clean energy air conditioning units, where the demand for air conditioning is off the charts. And that's been a wonderful green energy investment, along with GE Vernova, which we also own. That's been a wonderful green energy investment, but it's not EVs.
Hey, listen, I do want to go back to, we've got the Tesla Live blog going on, and just tracking everything that's coming out of the earnings. Ardana Hull, who covers Tesla and Elon, says page 12 of the shareholder deck shows the Tesla ecosystem, which includes Optimus, we know the robot, pushing a baby stroller. Ross, when it comes to Tesla and the world of Elon, there are so many different moving parts. There's, the shining beacon of SpaceX, right? That's a really great business. There's all the AI stuff that's going on. There's so many different moving pieces. What else do you want to know, maybe on the call today, about from the Elon universe?
Well, I think the most important thing in my mind that has the biggest opportunity to help Tesla is this low-cost vehicle they keep talking about. They have so much excess capacity in their factories now because they're not selling more cars that they need a new vehicle. And also for addressing other markets, whether it be India, China, and Europe, you need a small vehicle that's inexpensive to compete against the other EV players and regular traditional car companies. And they need to do this now. And the sooner they do this, the better. And that's the most important thing. I know we like to talk about the day a robot is pushing my kid around in a stroller, but that day is long in the tooth from coming, nor does anybody in the world would trust some big robot made by Elon Musk.
Yeah,
so I think we need to get out of that fantasy,
Well, I was just going to say, when I'm on my deathbed, I know I'm not going to say, I wish I spent less time pushing my kid's stroller and had robots do it instead. It's the dishes I want done, not less time with my kids.
The laundry done.
Yeah, the dishes.
But I don't have
my
12
wife
kids,
actually
so
likes
I don't
doing the
know.
dishes, so I don't know.
Tell her, ask her what her secret is. I would love to know. Hey, Ross.
I don't know. She likes it. I don't know.
Ross Gerber, always appreciate you finding time for us. We got to run. Right now, shares of Tesla just down about 0.6%.
All right, I'm watching what's happening with shares of Alphabet. They're up about 1.5%. The call has started. YouTube Shorts creators got new AI tools today, according to the company. Also, the company says that Gemini app growth has over 450 million monthly active users.
Wait. And the one for you and me, hopes to expand Waymo to all cities in the near future. Bring it on.
I wonder if they're going to do that in Denver anytime soon. That's where we find Bloomberg News senior technology reporter Kurt Wagner right now. Kurt, we want to talk to you about Gemini and YouTube. What have you learned about the way that Alphabet is continuing to monetize YouTube and the growth trajectory for Gemini in the most recent quarter?
I would say that YouTube just continues to be the dominant player when it comes to creators, as you were just talking about them rolling out new AI features for creators. Think of how many other apps we've seen try to kind of get into that business over the years, Instagram, TikTok, et cetera. And folks have had, slices of that pie, but I just think YouTube continues its dominance as the main place that if you are a video creator in 2025, you have to have a presence there and does not seem to be slowing down. In terms of Gemini, I mean, I look at this oftentimes through the lens of Meta. As you both know, I cover Meta very closely. What they've said about their Meta AI chatbot reaching 1 billion people. I think 450 million people just with this Gemini app is really impressive because they don't have the distribution in the same way that Meta does. Like they don't have a Facebook, Instagram, WhatsApp to put this bot into, to put Gemini into in the same way. So, 450 million people, that's quite, it seems like a pretty impressive number.
Yeah. And I mean, forgive me if you said this, but the Alphabet CEO saying the search feature AI overviews has over 2 billion users. And, this is something our man Deep Singh, keeps pointing out that across all of Alphabet's platforms, the amount of, velocity in terms of folks using it, the amount of data that is churned through there. I mean, you want to train an LLM, this is what you want, right? They have so much information.
So much information. And, I was at Cannes Lions in June, and it was the idea of AI search and how AI is upending the idea of traditional search was the talk of the entire week. And so it is so important for Google, as you both know, to continue to lean into that, right? And not shy away from it, which I think they are obviously doing. And so, they have that advantage of all the data that you just mentioned. But I think this search thing and the impact that AI is going to have on it is just going to be, continue to be a major storyline for them for quarters to come, for sure.
Check this out. I'm kind of into this. Virtual clothing try-on, popular with Gen Z, sees healthy growth in visual AI shopping features. So how great. Like, I don't even need to try it on. Just like pop it in. We're just kind of, Kurt just got about 40 seconds here. It's just a reminder that we're kind of learning as we go, like all the things that potentially AI, how it might impact our world. And those that are, really established in it, they're going to win.
I'm going to say there's some use cases that we don't even know about yet, that we haven't even thought about yet, that are going to crop up in the next, 2, 3, 4, 5 years that are going to be billion-dollar businesses. And the idea of using it for search and trying on your clothes and shopping from your couch, that's just one small example. this thing is going to, I'm not telling you anything you don't already know, but there will be consumer use cases of this AI that haven't even been developed yet. And I think when these companies invest heavily, we saw their CapEx number go up significantly this quarter. That is what they're thinking. They're thinking, what haven't we even unearthed yet?
All right, right now shares of Google actually in the green, up about 1.3% here in the aftermarket. So investors may be enjoying what they're hearing when it comes to Alphabet on that call with investors and analysts. All right, Kurt Wagner, thank you so much, of course, of Bloomberg, joining us from Denver. You are listening and watching Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right. Yes, indeed. You are listening and watching Bloomberg Business Week Daily. Carol Massar along with Tim Stenovec. And we are seeing NASDAQ 100 E-mini futures up about 0.8% here in the aftermarket. And that has to do with maybe, I don't know what it has to do, because we have Alphabet bouncing around in the aftermarket. Same story as Tesla, which just reported after the closing bell.
Let's take a look at some stocks on the move today. I'm Tim Stenovec along with Carol Massar, and we're joined by Bloomberg News equities reporter Carmen Reinecke. We got to start with the most traded stocks.
We do, and it is the meme stocks. They're all the rage this week, and I mean, there's a lot to talk about. So I wanted to start off with Kohl's and Opendoor, which were the big, gainers yesterday. Today, Kohl's down 14%, Opendoor down 20%.
Quick trade.
So it's interesting to see that, these stocks have these big run-ups and then they can just as easily fall a lot the next day. So big moves there from, Kohl's and Open. But, another day has sort of minted another round of these meme stock players. So we saw GoPro It gained, well, intraday it was up as much as 73%, which was a record. And then it paired really heavily and ended the day up about 12%, which I thought also really interesting to see this big of a swing. And then there were a bunch of other stocks, kind of small, high short interest stocks that had double-digit gains. Wolfspeed, Iovance, Hims and Hers, just stocks that we don't usually see, jumping this much.
Why? What's going on here?
I really think that we're just seeing sort of this flight, like a FOMO flight to speculative corners of the market. People are, excited. They're euphoric that the S&P is near record highs, and they're saying, okay, are there other places I can go? The high short interest is important here. It's sort of where we've seen retail traders sort of flock in the past. It's sort of a thing that can make a meme stock. So we're watching a lot of those names and seeing a lot of movement this week.
All right, so you mentioned Kohl's, ticker is KSS. That one was down about 14%. You mentioned Open Door Technologies, ticker is open. It was down 20%. You mentioned GoPro, GPRO is the ticker, and that one was actually up about 13% here on this Wednesday.
You did mention donuts?
I didn't, but we should
DNUT?
talk about it.
This was a weird
one. Big one today.
Krispy Kreme.
Yeah, Krispy Kreme, ticker DNUT. This was a weird one because it moved a lot, but then at the end of the day, it didn't.
So similar to GoPro, had this huge run up as much as 38%, and then closed less than 5% up. This one we actually also saw had really high options volume. So interesting to see. It sort of looks like there could be sort of a gamma squeeze play there, where people are looking for stocks that have the high short interest and also have this ability to
Any fundamental trades we should know about?
Yes, just a few. So one that we are also looking at today, Thermo Fisher, TMO. This is a company that makes scientific equipment. It reported earnings that were pretty solid, and the stock jumped 9%, which doesn't, after the numbers we just said, it seems like, 9%, whatever. But this was the best day since March 2020. So I think important to flag there. Basically, the thing here is that it raised its full year sales target. And we're really getting into the earnings is always about the outlook, right? But we're really getting into the part of the year where it's the full year forecast guide is what investors are looking
crazy?
at.
Nuts.
Halfway through, more than halfway through. All right, so that one was definitely on a move to the upside.
Yeah, and then, just because we are after hours today and we had another slate of earnings, I wanted to talk about Chipotle, ticker CMG, and this one was really moving after earnings. It was down almost 10%. It's down now almost 11%, I'm seeing, in after hours trading. Basically what happened is they cut their sales outlook for the second time this year. And so this is for comparable store sales. And basically what it's showing is that they haven't been able to overcome a traffic slump. And this was even in a quarter where they were giving out, free burritos, and had, a new honey chicken. I'm a vegetarian, so I don't eat chicken. I don't know if this was buzzy or not, but I'm reading in the story we have on the terminal that honey chicken should have brought people in, and I guess it didn't as much as they thought.
Do you go to Chipotle and get any of the vegetarian stuff?
I do. It is actually a great place for vegetarians.
Yeah.
I'm just not having the honey chicken.
But it said ongoing 50 basis point hit from tariffs, and says, quote, consumer environment driving its cut in guidance. Wow.
That's going to be a big story tomorrow.
Totally.
Yeah.
Right? I want to kind of dig into it a little bit more. It was up almost 32% in 2024. It was up 65% in 2023. So it has been on such a tear.
And
go ahead, Carmen.
What's interesting too is, so I always look at this because the former CEO went to Starbucks, and we'll get their earnings next week. So it's always interesting to see, how these stocks are, reacting to their leadership.
And listen, he was really the one who many say turned it around after all of its difficulties. He, kind of came in just before the pandemic. And so it's interesting. We've talked to him a ton of times.
Not at Starbucks. We talked to him quarterly when he was at Chipotle. Yeah.
So it's interesting to see how times have changed. Carmen, great group of stocks. Thank you. And of course, ticker on Chipotle is CMG. So looking at a stock that was down about 12% year to date prior to its earnings. So we'll be watching that one tomorrow.
That's Bloomberg News equities reporter Carmen Reinecke. And for more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
All right, that's going to do it for us on a day where we got, some very looked forward to earnings. Tesla, is this right? Wait a minute. Where is it? Man, you bounce things around here. No, it's little change. It's up about 0.2%.
I think you had Chipotle up on your screen.
I had Chipotle. I was like, what? Yeah, Tesla is just up about 0.25% here in the aftermarket, and Alphabet now up about 1.6%. That call ongoing. All right, folks, that's going to do it for Tim and me. Have a good and safe evening. Do not go anywhere. Balance of Power coming your way. I'm assuming we're going to hear from President Trump at that AI event in D.C. This is Bloomberg.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Tyler Kendall, I'm Joe Matthew. We're watching live images of the Mellon Auditorium here in downtown Washington, just a couple blocks from where we are seated right now as we await the President of the United States, expected to deliver the keynote address at what they're calling the Winning the AI Race Summit to begin any moment now.
The White House bills the speech as a showcase for how artificial intelligence is reshaping the American and global economy. We expect the president will sign executive orders, the next steps in the administration's, quote, AI action plan. The White House is expected to push for looser regulations and wider energy access in today's unveiling. We've got it all covered for you tonight, including new earnings reports from Alphabet, Tesla, and more just out, and the administration's progress on a trade deal with the European Union, all happening under the cloud of the Jeffrey Epstein case, as several developments on that front dog the White House tonight.
Bloomberg's Ed Ludlow is live from that AI summit right now. Caroline Hyde from global headquarters in New York watching earnings. Jennifer DeLuey from the White House, along with our panelists and elected officials all on hand for us tonight.
But let's start with Ed Ludlow. He's the host of Bloomberg Tech and joins us live from the president's AI event here in Washington. Ed, the president is expected to speak any moment now. What are we expecting to hear from him when he takes the stage tonight?
Speak, but also the lineup of executive orders, right? Because as you said, this is a plan, an AI action plan, and speaking to a lot of government officials here, as well as the CEO of AMD, Lisa Su, she kind of felt that this action plan list was actionable. You're right that its basis is deregulation, cutting red tape, but the anxiety is largely to do with the energy sector and being able to move fast enough where America's ability to produce energy matches that of its willingness and speed in building AI infrastructure. You know, a lot of this has been a preamble throughout the day of both government officials and the private sector saying to the president, we really back this. We think it's a really great idea. The area where there's still some tension is the plan includes the export of American technology around the world, including to economic adversaries like China. And both the Vice President and Commerce Secretary Howard Lutnick framed it as we're completely willing to sell technology into China, but there has to be some reciprocity to this. We have to have them buy other goods, and there has to be an understanding of who's controlling the AI stack at the same time. So that's where the focus will be. But as you guys know, like we've covered this in the context of the president's visit to the Gulf and the Middle East, so far, when the president has said he will do something, the technology sector has followed very quickly and done it. And that's evidenced by the deals that NVIDIA and AMD were able